you got a cold in your throat. Oh no, just call your boss. Take a crust from out your eyes. So tasty, not a coffee.
Good morning,
Indiana, we're all for you. We will fight for the cream and crimson to the glory of IU. IU.
Good morning, you knuckleheads.
I'm so happy. I've already cried this
I
morning.
can't stand that fight song, by the way.
It's a good fight song. Never daunted. We will not falter.
I can't stand the red and white stripes.
Get into it.
But congratulations. Great victory. Great victory by you and your team.
It is.
Did you watch?
I didn't because I didn't
Good,
watch.
I know.
all
That's
season.
what I was asking. Yeah.
I was locked in.
Yeah.
I was just watching YouTube
It was a
videos.
tougher
checking
game
on
than-
Twitter. It was like I was having anxiety. I set
cover.
off my Apple Watch. Yeah, Nikki. The first thing he said to me, he's like, "Congratulations, you didn't cover."
At least the Bears covered. Yeah, you didn't cover.
But we, as a football program, and thank you to people who are congratulating me on Twitter. I really brought it together in the second half. No, this never happened.
I don't know how
I don't know
you could
what to
not
do with
watch
myself.
the game.
I don't know. How you
Because I'm so superstitious, and it worked. So
and you're knowledgeable about the game. I mean, you're knowledgeable about football.
Do you watch it after?
yeah, I watched the clips. I mean, Mendoza going for it 4th and 5, like that kid, like he literally was bloody. They got to him so much, and it was the toughest fight. But those kids mentally pulled it together after that blocked punt. Like we as a program have won more bowl games in the last 19 days than we did in 125 years. We were literally the losingest program ever. And in 2 years, Coach Kurt turned things around. It's like, write the movie, get Nicolas Cage, who the F ever, to play Kurt. Like, I don't even know.
That would be actually good.
Right? Yeah.
Nick Cage?
Yeah.
Yeah, you get Zac Efron to play Mendoza.
Shirtless all time.
I can't stand that kid's smile.
Why, you hate everything. He's
Yeah,
just
you just
such a
have a
good
hater.
kid.
I can't.
Like, to his core. Like, you can't.
I like
and
his
his
smile.
dad doesn't stand
Smug
up.
smile.
His dad doesn't stand up because his mom has MS.
Oh no! That I love.
Oh my God.
That I love. I give you.
But it was great. I'm excited. I really did think about getting into my car, and I was like, I could be at the Waffle House in Bloomington by 5 a.m.
That would probably be a scene.
You could have done the show from there. That would have been good. That would have been
like a
all
man
for that.
on
You could
the
see a
streets
booth in the
type thing.
corner there.
But there's so many IU alumni here in the office, the largest alumni network.
There's going to be one dead alumni coming home today. My son.
What happened?
My son-in-law went to the game, left his wife, my daughter, with a 1-month-old and a 2-year-old. But he left on Sunday to go play golf first with his dad, and then went to the game on Monday and got home on Tuesday.
Yeah, that's a choice.
Yeah, that's a choice. That's a life choice. Yeah.
But the thing, it's so stupid, but I've never before been able to like buy championship merch. So I was like online, and I was like, I'm going to get a
Even
sweatshirt.
you, Winfred, you opened up that. I mean, you got Benjamins with like sunglasses on them for crying out loud. They've been in
because like when the Chiefs won, I was like, I'm a fan because of Taylor. Like, but it didn't feel authentic.
Like proxy almost.
Right,
Yeah. This hits home.
But this is like, I was like, I'm going to buy all the merch. And I, it was just like fun. And to see the videos of the kids on Kirkwood, like they'd lined up 24 hours before to get into the upstairs bar and to get into Nick's and to get into Kill, like all the places. And to see him on Kirkwood celebrating, maybe setting a car on fire. Don't do that, kids.
I like the defensive player of the game or year or whatever he was when he came on there. He was cool. He puts his arm around the announcer. Did you see that at the end of the game? At the end of the game,
I didn't see
it. Was
that
so
part.
good. It was so good. He started talking. Yeah, just that pound him a little bit.
But
it was good.
I've never seen Coach smile that much.
Yeah, he almost broke down too when he was talking. It was pretty cool.
Because it's it's just a good story. They're
Yeah,
good
bell to
kids.
bell, 16-0, right? Wasn't it?
And we hold the record. So our men's basketball team, the 74 team under Coach Bob Knight, last undefeated men's basketball team.
Are you allowed
And
to
now-
talk about Bobby Knight in a good light now? Because I remember
now-
back in the day, you couldn't.
And now
Hmm.
the football team is undefeated. So we're in the closest.
Sure.
So 50 years.
I love Bobby
All right,
Knight because
so-
he's the closest thing to an angry man like myself. So I loved him.
Oh man. But yeah.
So
Just
you had a great weekend. Well, it ended at
I know. Why do I have to work today?
late night for you.
I think the Indiana schools do get a late start today. I hope
Oh, do
I hope
they?
they do. I think so. Yeah.
Yeah, very
That would,
very
that
cool.
would make sense.
Also, the kid, which I didn't know, I didn't follow him obviously, but he said he was turned down to walk on.
Yeah, at Miami.
At Miami.
Yeah.
He's
pretty,
from Miami. Like,
Yeah, he's
Yeah,
from
that
Miami.
high
I knew
school
that.
there.
I didn't know he.
That high school there, I
wanted to
guess, is
walk on
pretty
there.
much a power plant of producing, D1
Very cool.
talent.
Very cool.
But
Very cool.
yeah.
Yeah. Now he gets to go to the Vegas Raiders and wallow in pain for the next 4 or 5 years.
Yeah, you're right. You're right. They'll probably take him. Yeah.
Is Signetti gonna stay?
Yeah. He signed the contract. He was like the key thing in a press conference. He was like, the best thing for me to do right now would be to retire. He's like, but I need the money.
I love his honesty.
So, but yeah, come
let's
on.
give a shout out to the Bears too. I mean, I know
That was heartbreaking
Yeah, that was a
too.
great
I did
game.
not watch, but that luck did not
covered.
hold. They did.
He did cover.
It went to overtime, but that's how you want to see it. Like you want to see it go down to like the
No, you
last.
wanted to see that catch be called the same way it was called, or
I got that underwrite, didn't I?
you want some continuity in the officiating. I don't
The
blame
officiating last night was terrible, by the way. Just as
Yeah,
an
I don't
aside.
blame the officiate, but you got to get.
That's a $14,000 fine for you.
Yes.
Can't talk bad about.
Can't talk bad about that.
I do what I want.
Yeah.
Do what I want. But yeah, the poor Bears. But I'm excited for them. Like they'll be back
Good season.
next year. I mean, we beat the Packers twice. Like
Pretty
Yeah,
awesome.
yeah.
That's all. I
Without
think
really
that's
having
ever
a
happened.
defense.
that's all that I can hope for. Like
Yeah.
just.
Mm-hmm.
But how was your guys' long weekend? Brutally cold here in
Brutally
Chicago.
cold.
Did
Wait,
you go
up to a cold
Florida?
market. What's that?
Did you go to Florida?
No. But my neighbor sent me a picture of an owl.
Oh, because I saw all the tweets come in on social, and I was like, "What did you do?"
Yeah, no, it's a burrowing owl. They're not only. I mean, I'm sure there are other places, but they're really a lot prominent in South Florida. And
Okay,
they're endangered. Like you can't touch
yeah.
them. So if they,
good.
well, it's good unless like you own like an empty lot or something like that, and they burrow and make a nest in your lot. You can't move them, or you have to like.
I still don't see
professionally-
any problems with any of this.
But they are the cutest little birds in the entire world. So I have one
Aw.
on my property. So my neighbor took a picture of it for me. We haven't named it yet, but we might have some naming rights. We'll see if we can.
Aw.
I'm sure Chris already has like a list of.
Yeah, she's an animal lover. She'll be
I'm surprised she's not flying out there to like feed it and take care of it and
make sure it doesn't have babies yet.
Yeah,
Oh,
give it
make
some
like
sort
a
of like
heated-
house or something.
Yeah.
Yeah, that's
a
next
good
level.
water sauce.
Yeah, yeah.
So wait, what did you end up doing? Did you take the kids to go skiing or?
No, it was kind of Vinny is all about. So he has his car. He can't drive it.
Right.
He passed his test. He's not 16 yet. In 7 days, he'll be 16.
Sure.
He doesn't get his license for like another week and a half after that because we dragged our feet getting him his permit. About
Bad
a week and a
parents.
half. What's that?
Bad parents.
Bad parents. So he's mods, which is just like
The mods.
the
Yeah.
mods. Yeah,
Yeah.
So he's all about that right now. So he hasn't traveled anywhere. He sat in his room and was on the internet just looking at things to purchase.
What that cost you? 10 grand?
No, he's asking for gift cards now for his birthday, which is the rudest thing you can do. But that's what he's doing, so he can buy all this stuff. Almost like like a registry for when you get married.
Yeah.
Yeah, he's doing something like that.
But the gift cards only cost for like a portion of it because the rest is just charged.
That's correct.
So
That's
like
correct.
you give him like a $200 gift card and it's really like $500 or $600.
It's a down payment.
It's just
It's like,
performative.
yeah, it's just like performative. It just gives him the idea that he can go to that store.
This
Right.
weekend, he went to Apt with his friends
Oh.
to price out radar detectors, installed, of course.
Yeah. Oh, yes, of course.
Do those
You need
even
to-
work? I don't like.
Not.
I think the best thing,
There's so many K bands now. I think
like
that's what
real
they run
talk.
on.
I think the best
There you go.
option is free, like to just
Not
use,
speed.
No,
Yeah,
well,
not
yes,
speed.
but just
Use
to use Waze.
Yeah,
Yeah,
Yeah, Waze is great. Tell
but
you
it's
where the
free.
police are.
Like just
Yep.
use
It has that
Waze. You
downloaded,
don't
yeah.
even need a radar.
But that's not as cool. You don't have.
No,
to,
no,
You know,
it's
dash.
all about- yeah,
It's all
right.
about the cool. It's all about the look.
Right.
Yeah.
He's hit the nail. He knows.
Yeah.
Did you go to a fancy restaurant?
Did I go to a fancy restaurant? How do you know?
Because you tweeted about it, and the
Oh.
inbox was full of people trying to
For
guess.
Vinny's birthday, we
Yeah, the
went to
pinstripe suit gets brought out
Yeah.
like once every couple of years. It's a big occurrence.
Next. We went to Next,
Wow.
which is a wonderful restaurant.
What was the theme? Because it always has like
Space. It's the
Space.
last week for space.
What does space taste like?
Like the future. Not as much foam as I was anticipating, which is a good thing.
I think
for me.
space is more like freeze dried. That's what.
Yeah, they had a lot of. So we happened to have the kitchen table now,
Ooh.
which was
Oh,
I'm scared of you.
Lord.
which was wonderful because he wants to be a chef allegedly at this point in his life. I mean, he wanted to be a fireman at 1.2, and he probably wanted to be president at 1.2, but now he just wants to be a chef.
Mm-hmm.
So he was able to watch all the people in there.
Has he ever cooked the family a meal?
He's warmed up some things. Yeah,
Microwave in 2 minutes.
he's made a ratatouille or something like that. Yeah,
Okay,
sure.
okay.
No, he's not. No, he'll cook if we let him, kind of
Okay.
thing. Kitchen's not the best space for my wife to excel in, but she lets him sometimes cook. Yeah. So we went to Next. It was great. It was a lot of fun. It's truffle season again. Last time we went for his birthday, it's truffle season, so they hit you up, if you want the truffle thing.
Oh, so the extra $200 charge.
You must get the truffle.
Get the extra truffles. Say when.
Yeah, the $150 pasta with the truffles on it. That was a little excessive, but other than that, it was a good meal. It was fun.
That's bonkers.
Yeah.
Wow.
It's his only birthday, 16th birthday too. I told him it's all downhill.
Yeah, but you said that last year, like when you went to like.
Listen, I'm going to give you a quote by a very famous individual. And I worked really hard when I was young so that I could do this when I'm older. So, so that's why I'm doing it.
Well, happy birthday, Vinny.
Thank you.
That's great.
Yeah, well, not yet. We got another week before.
Oh
it's
my
his
God.
birthday. I know,
Okay.
I know.
How about you, Nikki? What'd you get up to? Did you make some soup? Did you play
No,
some
it's
golf?
football.
Did you make some soup
Yeah, like I'm
No,
like,
and a
It's-
chicken
he's-
bones
Yeah.
after you ate
No,
the
'cause he
chicken
was like-
were you able to
With a-
eat this
with-
weekend?
with a soft carrot?
While your
that
dad
you
was
chopped
at
up
Next,
and
did you
limp celery?
You guys, because you were talking about
Raw
buying
onion.
a ladle, like you were getting into making soup.
Yeah, I'm still in the soup zone, but this
Okay.
weekend was just full on football. That's what it was.
Yeah. How did the teams that you?
I'm
thought
getting some flack in the chat for me calling the Broncos frauds. I mean, it was a pretty close game.
What happened to Bo Nick? Like, because people are chiming in. They're like, I'm an orthopedic this, I'm a doctor of this, and like,
I don't know. I mean, he continued playing on it for like the last couple plays.
like, is it his foot or is it his ankle? Like, but he
something,
re-injured something. Like,
But he's out. He's done.
I know.
Sad.
Philip Rivers.
So they bring back Brady or
Philip Rivers.
I think Peyton. I think he
Peyton Manning would be a good one.
You bring back Peyton Manning.
You
yeah.
gotta still have his contract, right? I mean, he can't go play anywhere else.
I don't know.
You're right.
That is heartbreaking though.
Really
Yeah.
sad. Really sad.
But I just couldn't figure out like what had happened even like because he just
He played
kneeled
afterwards.
down
Yeah, he played
like
a couple of.
yeah.
Played a down or two afterwards.
I don't know.
Yeah, tough kid.
Yeah. And then it was Bears, and today is our very own Mikey Butler's birthday. So
Oh wow, you got to do a shout out to your work wife there.
Happy
100%.
birthday, Mikey.
wish Mikey a happy birthday.
Happy birthday, Mikey.
Yes.
Happy birthday.
He's 30 again.
Yes. Yes. Aging so gracefully.
It's good times. So wait, did you win your league?
Oh
Yes,
yeah.
I've been. It's been quite the year.
Yeah.
Been a fantastic time. Yes. Had a lot of bets this weekend. It was nice. It was good. Yes.
Okay.
Yeah.
Very nice.
Do it. I don't really know what to do with myself. I'm kind of just still like, is this real life?
Yeah.
Although I do think it's funny that people are now also hoping that maybe Indiana's magical victory closes whatever portal that the 2016 Cubs opened. I hope that this somehow magically all something, I don't know.
It'd be nice.
But good times all around. Well, we have a great show for you today, a championship show, if you will, on the schedule for today. Why is this font so small? Okay, at the top of the 8 o'clock hour. Oh, wait, why is this for? Oh, it is Tuesday.
Yes.
I don't know.
It
what
is
day
Tuesday. It is.
We have options trades today. No, wait, that's it. What is this schedule? Sorry.
Oh, new hands here.
No, I know, but it starts at 10 a.m., the schedule. So I was like, where's the rest of the schedule? But do you know what the research segments are for today?
Yes, so we have 2 implied volatility-based research segments,
Okay.
which is amazing timing because this is probably our first pop and vol that we've had in quite some time. The VIX futures trading at 1950 right now. Obviously, the market
Yeah.
kind of a rough
Yes.
morning here. So we're going to look at the relationship between assets and their IVs. So we're going to talk kind of about volatility skew. We're going to talk about when you have down moves, how much does vol typically go up, and kind of just that relationship. That'll be our option jive. And then for the market measure, that'll be at the market measure. For the option jive, we're going to talk about all the volatilities that you see within the platform. So we'll talk about IVX, like the 30-day implied volatility. Okay. We're going to talk about monthly implied volatility, like on the option chain. We're going to talk about IVR, IVP. We're going to talk about
IVP?
Yes, all of that. IV percentile.
Oh, wow. Okay.
Yes. We're going to talk about all the IVs that are available and shown in the platform and what you're looking at there.
And also at 8:40 today, thank you. I do have the schedule now, so sorry. Chris Vecchio coming in the house. It's a great day for him to come in.
He's got to explain a lot to him.
Yeah, he's got to explain.
And if you missed it, Vecchio was like a little chihuahua, a rabid chihuahua last night online. He was just like poking the bears. He got in a little tiff with Anthony Pompliano, which was a nice one. Vecchio has been
Why is he? What is just like the battle of the Italians? Like what is going on?
Kind of, yeah.
Vecchio versus Pompliano.
Yeah, that would work. That would be.
Yeah. What is going on, Mamma Mia? What is
the 2 families?
Okay,
gotta be careful.
Sometimes you got to go to mattresses.
That is bonkers. Yeah. Also today, we have at around 9:20 live from the trade desk. We got Quentin in the house and Glenn G Money. Quentin counting down all the top trending tickers over at Tasty Trade, and Glenn on the FX side of things. And because it is Tuesday, I still do not know what day it is. We have Liz and Jenny live from the floor of the SIBO. It's always electric when the ladies are live. It's a great day for them to be on the floor. Like there's lots happening in the markets.
Yes,
it's
going to be loud down there for
right.
sure.
So please don't tag us on social.
Sleep on that.
Yeah, if the audio is bad, we're doing the best that we can, but it's going to get rough and rowdy down there at the floor. So watch the ladies at 10 a.m. But in the meantime, in between time, y'all want your daily dose?
Sure.
Natty edition?
Yeah.
It's my theme music. Let's
Winner
go.
edition.
Our leading story. Breaking news.
Across the wire.
Our leading story. Top story. Just in.
Today's headlines.
This just in.
Breaking news.
All right, everybody. Today is a terrific Tuesday, January the 20th. This is the part of the show we like to call the Daily Dose, where we talk about today's financial news and headlines. I'm Vanetta Logan, Bachelor of Journalism, Indiana University class of redacted.
You'll never know.
Redacted. But I am proud alumna of Indiana University.
Donor as well.
And donor,
Before
yeah.
time.
Yeah. No, it's just funny. But it doesn't feel real. But this is the part of the show we like to call the Daily Dose. Are you ready for the news?
Ready for the news.
Earnings?
Netflix.
Yeah, I've heard of them.
You're going to probably go there.
Yeah.
UAL is another one. Triple M. There are a couple of fringe banks if you're in there. USB Key, but you're probably going to be on Netflix. That's where you're going to be. Unfortunately, with Netflix, the IV rank is 45. Stock's been going. 45 is okay for earnings. I imagine with today's market, which I know we'll get to after you're done, and I know you'll
Stock's actually
today.
up $1.
What's that?
Actually up $1 per
It's a bucker.
It is a bucker at 89. If it catches a little bit of a bid here, I think volatility is actually going to rise even more. So we'll see what goes on.
Well, Europe is weighing using a trade bazooka against the U.S. as a Greenland crisis deepens. European countries are reportedly considering their own retaliatory tariffs and wider economic countermeasures against the U.S. after President Trump threatened regional economies with fresh export levies if they don't let him buy Greenland. Trump said 8 European allies would face increasing tariffs starting at 10% February 1st and rising to 25% June 1st. He says it's all because he did not win the Nobel Prize, to which the French president Emmanuel Macron said, "What the hell?"
Did he send him a text too? That
No president, I will say this about President Trump, no president has done more to bring Europe closer together. But it again sent the markets into a tailspin. What's going on?
You know what? I don't know. But if you look on Twitter, you find 18,000 experts on all of this. Okay, whatever side you want to be on.
I do
it's
love
amazing.
on the day that we win the national championship, like World War III is also trending.
It is wild.
Yeah.
It is wild. I don't know.
Bonds, volatility, go.
So let's talk about what the market
Yes.
is interpreting this. Volatility obviously up over 6% right now, trading at 1950, traded over 20 for a quick second when even the S&Ps were down almost 130 handles. They're down 90 right now, so they rallied 40 off of their lows already. They were down 65 for most of the night. Big thing, I think, bonds down almost a full
Huge
point.
move.
What's that?
Huge move.
Huge move in bonds. I mean, it is a 6% move in bonds, equal to the move that you're getting well, that's a 1% move in volatility, but a big move in rates is what I meant. 6% move in volatility. I think the interesting thing about all of this so far is how orderly the markets have been overnight. Like the metals opened significantly higher. That gas is the biggest mover, significantly higher. I mean, almost 25% higher. I think the strangest thing is Bitcoin not moving.
We're going to cover
It's
it.
not. It's at 90K. It's moved like 6-7
To the downside. It's no longer kind of like, bonds go lower and market goes lower. We run into Bitcoin. It's
What
really
are
a move with the
currencies
market.
doing? Let's start there, and then I'll get into the other stuff.
Say again?
Currencies?
I mean, they're all over the place. It's been
Euro's higher. Yen's
Euro's
lower,
higher.
or unchanged.
Yeah.
The Nikkei was down about 2%.
Yeah, the dollar index is lower. Dollar is down.
Dollar's down.
Something else interesting is the World Economic Forum is happening in Davos, Switzerland right now, as 3,000 high-level participants from business, government, and beyond, plus untold numbers of activists and journalists are converging. President Trump is set to speak, but there could be some stuff that happens or things that are said or not said or punches thrown. I don't know, but shit could get crazy in Davos this week. So I think that could also add to the volatility. What are your thoughts?
I think it's all bullshit. I don't think.
I mean, but he's going to be there and he's going to
Davos,
speak. Like he could
happens ever there.
He could just say. I'm just saying he could say something else like crazy.
You've got Trump. He's going to say something crazy.
Right,
I mean,
right.
Today's Taco Tuesday too, so we got that
maybe
too.
we'll get to taco today.
So
I
you
think
got to be
that's-
careful there too.
I think to your point, like this has been a very orderly down move. Like it doesn't seem like the market's spooked all that much.
I mean, it's a 1.5% move off an all-time high.
Yeah.
Exaggerated, big, but it's not the 4%, 5% move that you might have thought you would see on kind of like a capitulation day like this. So maybe that means we have more to go.
But we'll see on the open. I mean, volatility has remained.
Yeah, key on volatility. I mean, I would love us to go back and test the lows. 68.50, which was that number that we were talking about.
We sat at all of December.
Right.
Pretty much all of December. So it tells you we really haven't gone
anywhere. Right.
Anywhere.
Right.
Anyway. Gold and silver surged to fresh highs as investors digest
That's gone someplace.
Trump's push for Greenland and flock to safer assets. U.S. gold futures rose around 1.7%. The numbers that I had, spot gold was 1.6% higher. Silver also higher. I told you to buy those dips on Friday in silver.
We did.
Yeah.
We did.
Yeah, we closed out short.
We closed out as shorts. We covered them nicely, made some profits, and but we got long nat gas, which was
we got long nat gas, got long some volatility.
Got some long volatility.
We have some short
nice.
delta on today, so it'll be a nice.
I think the interesting thing about all of this, and you're right, silver at.
But we're also back. The gravitational pull has taken me back.
Yeah. Oh, yeah.
Silver. I'm back in-
short silver on Sunday.
Yeah,
night or
like
something.
93.2.
It's trading
something like that.
95.
It wants to get to 100 so bad.
Yeah.
It does. It does. It's really interesting that, like, when the markets rally or bonds rally, everybody always talks about an unwind, when Europe is going to sell American bonds that they bought or Japan is going to sell it. Nobody's talking about an unwind in gold and silver, which is really scary to me. Like, nobody's talking about when this monumental move to the upside takes a breather. Nobody's talking about it.
Yeah.
Which is a little bit weird to me.
Oil, though, seeming steady as Iranian supply fears ease and Greenland moves into the spotlight. Poor Greenland. Brent crude was up around 0.02%, again, remaining steady, but natural gas has entered the chat. Let's talk oil, natty gas.
Nat gas entered the chat in a big way. See, now that 25% move, that's a humongous move.
You're looking at an Arctic air mass that's going to hit Texas.
Oh, come on. Nobody was talking about that. It was at all-time lows 48 hours ago. I mean, this is that's volatility.
Yeah.
That gets I'm almost, like we traded it in UNG. I know
Small, too. Like it didn't.
Yeah. I know we missed a big move on the futures side of it. But nat gas is a very hard product to trade. Not liquid at all. So, it's liquid, but it's such a big product, the futures of it. So.
If you live in the South, I would winterize your RVs.
Yes.
If they're parked outside. Yeah, if you haven't already, go ahead and do that. IMF does see a steady global growth in 2026 as the AI boom offsets trade headwinds. Finally, some good news. IMF forecasts 2026 global GDP growth at 3.3%, even with a stronger 2025 performance. AI investment, tax breaks, and lower tariffs will fuel U.S. growth, but IMF does see downside risks from trade flare-ups and an AI-driven market correction. Whatever that's worth.
There's a little bit all over the place.
I know. All right.
I'll take it.
Meanwhile, every firm that came out with their year-end for 2027 predictions are all to the upside. Nobody took the downside, at least that I saw.
Yeah.
It's never that way. It's always It's always
up and
way
to the right.
to the upside. Yes.
Yep.
The unfortunately named ICE, the Intercontinental Exchange, bad time to, anyway. The Intercontinental Exchange said that they developed a platform for trading and on-chain settlement of tokenized securities in a move to capitalize the global demand for U.S. equities. Basically, they're seeking regulatory approvals to enable 24/7 trading, baby. Do we need this?
This brings back nightmares for me as a floor trader. The ICE was when they were the young kid on the block trying to steal everybody's business, and the SIBO had the largest amount of trades. And this was an electronic exchange, and we were still basically open outcry. There was still a little bit of electronic trading, but it was really all open outcry. The ICE came and streamlined everything, and within months took a significant chunk of the float in the business from us as open outcry traders on the floor. And we always had to adjust our markets to meet or beat the ICE markets that they were making. I think they're going to play the rest of the exchanges are going to be better at it this time and not play the catch up that they did the first time. I think they'll learn from their
I
lessons.
think New York Stock Exchange
Yes.
is doing what has this coming as well, and SIBO will be right behind.
Yes,
if
100%.
not tomorrow.
Yeah, and NASDAQ is trying to do 23.5.
Yeah.
Yes. It's definitely
I think the more interesting story to this is gonna. And Coinbase is down $10 on whether you call it this news or just the market news, but this is an interesting
at new lows for Coinbase.
The interesting point here is that they're not using any existing crypto
product.
They're not using it, or maybe it's on Ethereum. I don't know how they're tokenizing it, but
we might have to ask Ryan.
Yeah, they're tokenizing it. It seems like on their own. So that's kind of an interesting point. Maybe that's a little bit of why crypto has been so weak / down today.
Well, leading into that, Bitcoin steadied at around 93,000 as the market braces for a bumpy week in trade war rhetoric from Davos. Bitcoin's price did seem to stabilize, but it did get down around 90,000, 91.
Yeah, it's 91,000 right now if you round up by a couple of $100. Got up to around 95 and change. You remember just, I don't know, 3-4 days ago, looked like it was flirting with 100, got up to about 98 or so. So he was hanging out between 95 and 90,000 going back to the beginning of January until now. Broke out from 95. Was looking between 95 and 100. Now it's back down to 90,000 near its lows from January or so. So we'll see if it holds this 90,000. I know they were hoping it would hold 95,000, but it went through that like a hot knife through butter.
And as you just mentioned, Coinbase down pretty big this morning. Not sure what IBIT's doing.
It'll be down
$51, down around $3 or so.
Okay.
Two in the orders.
Coinbase has gotten killed. Robinhood is back to like around 100, 104 here. It's down another $4 or $5. So definitely seeing some of the wind taken out of the
Yeah, Hood in January, or well, I guess maybe December was 140.
Oh, wow.
Yeah, in January it was around, I don't know, like 120. Now it's 104.
Yeah, that's a shame.
Listen, a year ago it was $50, so
Sure.
take everything with a grain of salt.
The U.S. Federal Trade Commission is scrutinizing big tech firms that hire employees of a startup instead of buying the company outright. The so-called acqui-hire trend is now facing more scrutiny from the FTC. Big tech firms pay for a startup's technology and talent without having to technically buy the company, and they are doing that as a way to sidestep antitrust review, to which now the FTC says, no.
Yeah,
An interesting angle.
interesting angle.
Yeah.
They're like a loophole.
Yeah, that is. I mean,
Yeah, it's not legal.
Yeah.
Not illegal.
Yeah, the experts have not weighed in on this yet, so I'm.
Oh, you haven't seen this?
I have
on
to
your-
wait for that.
on your
Yes,
fake
yes.
news?
It's like I have on Greenland. Yes.
Yes.
I don't know. This is.
So last month, NVIDIA agreed to license chip technology from a startup called Grok and to hire away its CEO, who is a veteran of Alphabet's Google. In similar recent deals, Microsoft's top AI executive came through a $650 million deal that was billed as a licensing fee.
Yeah.
And Meta spent $15 billion to hire Scale AI CEO without acquiring the firm.
Yeah. It's an big number.
I mean, is it anything? Is it any different than an incentive package that they might throw at somebody? I mean, I don't know.
But that's like they're buying the technology and all of this talent, and they're not going through like an antitrust review to be like the end.
I see the point.
Like,
Yep. Yeah, I don't know.
I would just, I'm not against the deals, but maybe I don't know.
Yeah.
Do something. But hey, the UK is now consulting advisors on whether they should initiate a social media ban for users under 16, following in the path of Australia. The government will consult on whether the platform should be banned. It comes after more than 60 Labour MPs wrote the Prime Minister about the issue. Of course, this affects companies like Meta, but it also affects Google's YouTube, TikTok.
Or in America, we're showing porn stars on national TV, so don't worry about it. We're okay. I don't know what.
How would you know that?
My son-in-law told me.
Wait, who? What?
Don't worry about it.
What happened?
In your game,
Yes.
they zoomed in on conveniently. How many people were there?
A lot.
A lot.
A lot of people were there.
Does she have like dark hair? Because I kept seeing her in the feed. I didn't know who she was. I thought she was like
She's just a lucky lady. She was
yeah.
Pam Anderson on Discovered kind of thing.
I didn't know. I
Yeah.
mean,
I don't know how they can. I don't know. This will be hard to. How's it going in Australia? I guess is what I should
it's going great. They removed 4.3 million teen accounts from.
Right, I know, but how many other teens have gone around it for some way? I don't know.
Yeah, I feel like there's always going to be a way
mean,
around this.
I don't.
I don't know either.
I don't know.
Yeah.
Hey, in other news, Power Chip shares jump after Micron moves to buy a Taiwan fabricator for $1.8 billion. The shares rose shares of Taiwan's power chip semiconductor rose nearly 10% yesterday after Micron said they would buy a fabrication plant from the company. Chip, memory, everything's
You gonna buy the dip here in Micron?
The 2-point dip, is that what you
You gotta get in.
I was going to say the stock, I mean, it doesn't.
Made all-time highs,
It never goes
closing
down.
at 62 in the orders.
Does not go down.
On Friday. It's down $2. I would say that is of all the moves lower, that's the least move.
Yeah.
The least move.
Pretty incredible.
Yeah, the smallest.
Yeah.
Anything else in like
All those, I mean, SanDisk is another one that's been, it had one down day last week, I think, and then, back to all-time highs. Western Digital is another one, too, that's kind of in that space, but they're all
bless you.
Venti.
going nuts to the upside.
Yes.
Yeah.
What about the chip stocks?
Oracle's down again.
Okay.
That's one that never has an uptick.
SMH was at 400 on Friday. It's down about $10 here.
Oh,
Nvidia
wow.
I saw was a little weak.
Down like $8.
$5 or $6 to the downside of Nvidia. I mean, the
market's weak.
The market's weak. So,
Yeah.
it's pretty much everything but Micron is down today.
OpenAI's CFO says the company's annualized revenue has crossed $20 billion in 2025. She announced it in a blog post. That's up from the $6 billion in annualized revenue the company brought in 2024. The company's computing capacity rose to 1.9 gigawatts in 2025. But weirdly, as competition heats up, OpenAI says they're going to introduce ads into ChatGPT. But
It's only a matter of time.
you literally made $20 billion, girl. Like,
Yeah,
I don't want to see an
more.
ad, but I'm just more concerned about like how you're going to be searching for something and it's going to be like, well, it could really help.
Yeah, exactly.
No, get out of here.
Instead of that diet, try some of these Oreos.
Right.
Double stuff.
Yeah, I don't know. You can't trade OpenAI, but you can trade Microsoft. What's Microsoft doing?
Soft been a dog.
Mr. Softy,
$4.50. It's down $9.
$9. Yeah, big move lower. I mean, here, if you're looking at some stocks that have underperformed on the way up, Microsoft is one of them. So if you're looking to buy on value, Microsoft seems better than some of the others.
Okay.
Volatility is going to be high too. We'll see what's going on with there.
Elon Musk is seeking $134 billion from OpenAI and Microsoft, saying he deserves the wrongful gains they received from his early support. I'm reading right now this book. It's called Empire of AI by Karen Howe. It's really good. It's a true story, but I like it's like narrative nonfiction. She's a really good writer. I mean, it's dense, but it puts me to sleep. But it's really good. But real funny. So when OpenAI started, Elon Musk was like there. He was like right beside Sam Altman, and he pledged $1 billion, right, to get OpenAI funded. But in the book she reports, she was like, he only gave like $100 million. Like he didn't give the full amount that he committed. So I don't know why he's entitled to $134 billion, but pop off.
I mean, I don't know. I mean, that's one person's book, right? I mean, who knows what they really did be? I guess you find out in the court of law someday.
Yeah, it's going to trial.
Yeah, right. That's
Yeah,
what I'm saying.
so-
You'll find
Like
out.
all
what
that
everybody
money is,
did.
it might not be all like a lump sum. It might be based on.
Sure, or a
time,
commitment. or
Sure.
whatever, as long as he met the commitment.
Yeah.
I mean, who knows? I mean, I don't know.
Right.
Is all I'm saying. I mean, one person's word. And the
It's
other
an
person hasn't said anything
it's an
yet.
interesting book because everything is terrible.
I thought you were baiting me to get my wife's page count from her.
I was
Kindle.
not.
No, it's still at 4.
We got one? Oh,
still at 4 pages.
I thought we got an extra page.
I was not.
4 pages.
Not sure what Tesla is doing this
Tesla's
morning.
lower. You would expect down about $11 or so. 426 on Tesla. This is about back to November numbers.
Okay.
In Tesla, so we've given up a month or two in a lot of these stocks.
Yeah.
Alibaba backed startup called Moonshot. They're an AI company, and their valuation is now $500 million after its rivals IPO in Hong Kong. That's pretty good. What are you doing in the Chinese tech stocks, Baba?
Avoiding them.
We have
Bob,
a little short delta there, which
162
today.
down about $3 to,
Yeah.
from 165 is where it closed.
Okay.
Yeah, Baidu's been the one that's been. I mean, it opened up like $25 that one day and has kind of been staying there at highs around 150-ish.
Pretty good.
Yeah, a little bit of short delta there.
Yeah,
Meta-
like you said, it looks unchanged this
Yeah.
morning. Maybe even up a skosh. Might be a bucker.
Meta is under fire from Britain's Gambling Commission because they say that Meta's platforms, the owner of Facebook and Instagram, is turning a blind eye to illegal online casinos, advertising on its sites, indicating it was happy to continue taking money from criminals. Some studies show like is upwards of 30 to 45% of all ads on Facebook and Instagram are for fraudulent services, companies, whatever.
Wasn't there like 20 billion that they got from?
Oh yeah, they made so much money. Yeah, billions of dollars. Yeah. I got scammed finally for the first time. I bought my mom a sweater that I saw on Instagram, like it was a Christmas sweater,
And it came in those
really
doll
cute.
size or something?
Yeah, it was just like the most Temu thing ever. It took like 12 weeks to get. Like I ordered it in October, like for Christmas, and I just got it like last week, and it's a scam.
Yeah.
Yeah.
I got scammed.
Damn.
I know.
You feel dirty after.
I know. I'm
Don't
just
you?
like,
I know.
I will find you, China. I don't know. What are you doing in Meta?
Down $12 or so, maybe even 13. 607 on the bid. It closed at 620 and change.
Yeah, we've got short puts. We've got some long delta there.
Okay.
That one won't be nice.
GM, the stock may be hot, but they're in some hot water with the NHTSA as they open a probe into 600,000 GM vehicles over engine failure issues. The recall affects GM vehicles equipped with the L87 6.2 liter V8 gas engine. If that's you,
Stock don't care.
if that's you, get out of your car immediately. No, I don't.
Stock don't care is right. Down maybe $1 this morning.
Yeah.
I mean, it made highs around $85. It's trading just under 80, 79 and change. But yeah,
It's doubled
stock
in the
don't
last
care.
year.
Yep.
That's bonkers. But 600,000 cars, like that's a lot of cars.
A lot of cars.
That's
A lot of cars. How many cars do they sell a year? Let me see.
I don't know, but
Let's see. How many
that seems obsessive or
does.
excessive.
GM sell a year? Let's see. Oh, never mind. They sell
They
Drop
rate
it.
6 billion globally. That's why it doesn't
Drop in the
matter.
bucket. Who cares?
Doesn't matter.
6 billion global. Wait,
Global.
there's only 8 billion people in the world.
2.7 to 2.8 vehicles annually in the U.S. and roughly 6 million, globally. 6 million. I apologize.
Because there's like that's.
All right, so it's one.
That's what I'm sorry.
I got you.
Yeah,
That's fine.
Not even, yeah.
They recalled 721,000 vehicles worldwide in April of last year.
That's almost like ICE numbers. Yeah, that's no
It's
problem.
bonkers. Here's something interesting. Costco has entered RV sales through a partnership with Camping World. Costco kind of had an RV portal through their auto portal, but now it is a more, unified partnership with Camping World.
They're gonna get them again.
Rolled out a new way to sell RVs. That way you don't have to haggle for the price, no drawdown negotiations, and the price is set before the conversation even starts. So Costco.
They're going to the Carvana model, right? I mean, or what's the other one that Buffett owns?
CarMax.
CarMax, the
Oh,
CarMax,
yeah.
the CarMax model, yeah. Costco $9.58 or so, down about
Huge move over the last 2 weeks. Costco.
Oh my
Costco
God, it
went from death to.
Well,
Back-
it went from 1,000 split to 850.
'Cause you never
Nobody's
know.
buying in bulk
Yeah.
anymore because of this economy. Back to 960.
Because they
and now
introduced those cheesecake croissants. Then,
Yeah.
Oh my God.
And they were selling bars of gold and silver.
That's
at
true.
that spot.
That's true.
right.
And Costco shoppers aren't buying entry-level RVs. Camping World says early results say the program skews towards higher price rigs.
No comment. Enjoy the RVs.
Sad news to report, fashion icon
Yeah.
Valentino has died at the age of 93.
Long life.
One of Italy's leading fashion designers. He died at his Roman residence. His foundation announced. But you could only hope to look this good in your 90s.
Yeah, no, I hear you. Yeah. Oh, no, I had somebody tell me I didn't look, I had to give my age. I said I'm 63, and they said, oh, come on. So I got my moment there.
Were they trying to sell you something?
Yes.
Yeah. Uh-huh.
I was buying something.
Yeah.
yes,
Okay.
you're right.
That's well. Anyway.
Well played, Vanetta. You suck.
You're welcome. Hey, and congratulations. This was great. I didn't catch it, but I did see it on social.
Oh
Jonathan
my God, he had a
Hayes,
3-minute standing ovation.
5 minutes
Yeah.
standing ovation
All
at
right,
the
there, I'll
United
give 5
Center,
minutes.
and it was cheers for everyone. One of the best to wear the Blackhawks sweater. I think he played for the Hawks for like 15 seasons
Yeah.
or something. 3 Stanley Cup victories. A lot of respect there.
Yes,
So
most
congratulations
definitely. Best fans
to
in the world.
Captain. It was. I thought that was nice. Also, there was a goalie fight, which was funny. I like it when
That was
the
awesome.
goalies fight. Like, look, I'm
it's kind of a weak one though.
Yeah.
but
then everybody else on the ice like stops and they're all kind
Yeah.
of just into it. It's like,
everybody else
Yeah,
was
they're
throwing
like-
punches. Then the goalies came out and then they all just watched.
yeah, they're all like, it's all kind of over. And once the goal
like I, like every other woman I know, has been just engulfed in the gay hockey show. I read the book. I am obsessed because I read the
My
book
wife
years
watched
ago.
it, too,
I read the
yeah.
book. It's Heated Rivalry. I read the book
Full
years
disclosure, I
ago.
watched 2 or 3 episodes too.
It's a very romantic. Like it's such an endearing
That's what she said to
story.
me.
Like it's just like
It's
so
soft
good,
porn, is what it is. I mean, call it what it is.
but fine.
Yeah, it's a well written. I wish all porn was that well written. To be honest with you, it's well
Because it's written by a woman.
Yeah,
It's written by a woman. That's right. But now hockey clips are going, like there's just people coming to hockey games because they're like, is this what happens? Because everyone goes to a hockey game, they're like, when do they kiss?
Oh,
when the goalies are
It's gonna
fighting.
come out. You're
When
gonna
do
see.
they
There's gonna be
kiss?
some retired gay hockey players. It's gonna be.
Yeah,
It'll be
good.
fun.
Good. Also, this doesn't have to do with hockey, but this was funny. I learned over the weekend, next year's Super Bowl falls on Valentine's Day.
Wow.
So just get ready for that.
Wow.
Yeah.
Wow.
Make or break
Make or break's gonna
weekend
be-
for
yeah.
a lot of relationships.
But finally today,
I don't know.
I don't know.
The weakest relationships won't make it past Valentine's Day next year.
For sure. For
the
sure.
Super Bowl.
I
Yeah.
think there's got to be a lot of, you've got to really do like some
Deep soul searching
deep-
before that.
Yes.
yeah.
Yes.
Well, you have a year to,
think about this.
Right, yeah.
I think it's probably smart to start planning that now and just be like,
What about
hey,
what about the engagements on Valentine's Day for the Super Bowl?
Yeah, I don't know.
It's gonna be a tough one.
after
Or like if your team doesn't make it, do you
Oh.
not get proposed to? Like what? It's like a kicker goes wide right and then you end up alone. Like what happened? Like it's too many. I don't know. But finally, today for my viral video of the day, I'd like to just call this: never judge a book by its cover. Go on, Francis, with your bad self. Watch this.
Francis, how do you like your rims?
I love them.
Awesome. You're welcome.
Okay, Francis.
That's awesome.
I have so many questions.
Me too. Me too.
I'm wondering when those get put on Vinny's car.
On Vinny's car.
When are the rims coming?
No, he's going more with the murdered out kind of
Yeah.
look. He's blacking out everything. He wants tinted windows, which I told him he can't have.
They're illegal.
Yeah, to a
Up to a
certain
certain-
degree,
Yeah.
like 3% or below, at least in Illinois. I think it is
Yeah.
something like that. Yeah, he wants that. I told him no, he can't have it. Put my foot down. How about that, Vanessa? My parenting.
No. What's coming up next?
We're gonna take a quick 90-second break and come back. We got more. He just sent me last night at 11 o'clock, which he should have been sleeping. Removable tinted windows.
Oh, yes. Nothing says high class, like some removable.
You got all the bubbles in
Nothing
it.
says you're,
bubble.
nothing says you're
Like-
16.
Yeah,
Yeah.
Like
Yeah.
removable.
Yeah.
nothing says North Shore like some stick-on tinted windows.
We're going to take a quick 90-second break and come back. We got more Tasty Live after this with Confirm and Send, and we're going to talk a lot about the markets. We'll be back in 90 seconds with Tasty Live because we got an old school market coming at you.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Got big goals for 2026? Get the big deal. Earn a 4% cash match on all qualifying deposits, up to $10,000 total. Plus, unlock 30 days of commission-free trading.
Trade with confidence using active trader mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. Earn a 4% cash match when you open and fund a new Tasty Trade account today.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Global markets never sleep. Explore them with Forex on Tasty Trade. Get in on 80+ Forex pairs, 24 hours a day, 5 days a week. FX marks the spot. Trade it on Tasty Trade.
Your crypto needs a wallet. And crypto is better when it's tasty. You can now do more with your digital currencies with the Tasty Crypto app. We're proud to offer a self-custody wallet for Bitcoin, Ethereum, and Polygon. Transfer your digital tokens directly in-app and access thousands of tokens available only on-chain. Your wallet is your key to decentralized finance. Download the Tasty Crypto app and get started today.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. Only at Tasty Trade.
Got big trade ideas? Get the big deal at Tasty Trade. Make moves with confidence using smart tools and dynamic charts. And trade what you want, how you want. Earn a 4% cash match when you open and fund a new Tasty Trade account today.
Nikki, we are back, son. And you know what? It's time for a little bit of confirm and send on Tuesday, January 20th. We go to your viewer emails. But before we do, let's talk about the market. You have to go back on this long 3-day weekend and talk about where the market opened on Sunday after all of this world news event. Even the S&Ps, which are down 109 right now, about 20 handles off of their lows, significantly, obviously, off of their highs. We're down about $65 most of the early session, down about 65 to 85, and they would rally back and forth. Broke through that earlier on Monday and then continuing into today. NASDAQ down 470. It too is just a couple of handles off of its lows. Russell all down around, Russell the weakest, almost down 2%. Everything else down about 1.5 to 1 in the order percent. Dow down 700 and change. All of these are just under a 2% move. And volatility, which I'll get to right now, when even the S&Ps were down around 65 to 85, was only up about 1.5%, under 2% for most of the night, which I thought was not enough on volatility. Like if the show was on, I would have said,
buy that dip.
I'd rather buy volatility than look to buy E-mini S&Ps. They have an inverse relationship to each other.
Oh, you thought it wasn't enough.
I thought it was when even the S&Ps were down 65. And something wasn't right.
Yeah.
Like, in hindsight,
I don't was lying. Vol was either too low or the email.
I didn't tweet it out, so I can't take credit for it or anything else like that. But I got the emails, even the S&Ps were down 65. And I said, what do you think about, buying a little bit of dip here? I'm like, volatility wasn't signaling that move was valid. Like, it almost seemed like with
I was thinking it was a buy the dip. I was texting.
It was like buying the dip.
If we wake up and we're back to 69.50 and we're only down like 30 points, I'm going to be so mad because it didn't feel like it was enough.
Yeah, so you had to buy both. Was my point. Like I didn't think like it was
long vol and long E-mini to kind of play.
Yes, I thought it was more like
almost like a pairs trade. Yeah,
almost like a pairs trade, which I thought was a very hard pairs trade to make, and I wouldn't do it myself.
On a low liquidity Sunday night, or even last night when they opened. Well, nobody's looking at that.
Horrible. Now it's a little bit of a different story. You got volatility up almost 8% with the market down 1.5%. You had even the S&Ps down around 1% and volatility was only up 1.5 to 2%. Now you have things more in line. Now it's place your bets.
Yeah.
Like, you can sell a little bit of vol here if you're slightly bullish. You certainly can look into, selling any market rally in here if you're a little bit bearish. Do it in an intelligent way. I think volatility being high, these calls are going to be bid. If you're wrong, they're not going to go anywhere for the first 20 handles on the even the S&Ps. That's the way I would play it. 20%, 20 handle move to the upside against you. Bonds 111. I'm the world's worst commodity trader. 114.03. Probably rather be long bonds than short them on this move. This is a huge move in bonds.
Bond volatility has been basically nothing, though.
Nothing.
But it's been, for the last month or two, IV rank of 5, 6, 7, 8.
Horrible.
Bond volatility has been nothing. Then you get a huge move like this. So
you have to be directional, I think, still in bonds here. Like, I don't think volatility is going to expand there, but it's such a low monthly implied volatility product. I don't think it matters. Like, I don't think volatility matters that much in there. I think you have to be directional in bonds one way or the other. I'm going to abstain because I'm the world's worst commodity trader. Yeah. Bitcoin. I was actually confused by Bitcoin's move of all the products, and I'll get to that in a moment. Bitcoin trading just under 91,000, 90,008 and change, right near its lows, down 5%. Ethereum doing the same, down a little bit more, 6 in the order percent, down $221. I'll get to this in a moment, but every other commodity is higher. Oil was a non-event, up 20 cents, didn't move that much. But gold up $144, it's a 3% move. Silver just off of its highs, almost an 8% move to the upside. Nat gas up 25%. We got a little bit long nat gas in a very small, tiny way. UNG never went to the futures. I really watched gold, silver. Like, if we were talking, if this was 6 months or a year ago, and I told you that gold and silver was higher, the market was lower, I would have said, maybe you wouldn't, you can answer for yourself, I would have said Bitcoin's higher too. That fear kind of going to all the alternative assets. I think you could now say, and we've done the research on this in years past, we were trying to find, does Bitcoin have an inverse relationship or does it move with the market? And we were kind of talking about how it had an inverse relationship. Well, it seems like that's switched now. When you get a move like
it's the NASDAQ. It moves with the NASDAQ.
It moves with the NASDAQ. It moves with. Sure. What about moving with the dollar? You were mentioning the dollar.
Yeah. Well, with the dollar going down, you'd expect Bitcoin to go up as well. That's another. I just don't think Bitcoin will have its moment in the future. It's just not. It's not
today.
Right.
Yeah, I agree with you. Here's the euro.
To your point about gold and silver, when we've had big moves to the downside, you think like COVID and the tariff tantrums and all that stuff. Gold and silver were also getting whacked.
Yes.
They were
killing all assets.
It was just a liquidity thing. It was like, you got to take, margin off somewhere else to hold other positions. And you're not seeing that today, which is kind of interesting.
So what does that mean? Everybody's underinvested, overinvested? What does it mean at all? I don't think it means anything. I don't know.
Yeah, I don't know.
That's why I always.
In hindsight, we'll have the answer. The Twitter brigade will tell us exactly why.
Tomorrow or the next day.
Yes. The chart will perfectly paint the picture.
So what's the game plan for today for you? You got volatility.
I think
flirting with 20.
Yes.
I think volatility flirting at 20 is an interesting play here. I think any type of 1x2 type of put spread in a market like an SPX, IWM, SPY, Qs, I think you're going to get a good bang for your buck. How far out you go with your long strike and how much credit you receive on that, I would go as wide as possible on those. But I think you're going to get an opportunity to sell a little bit. You'll have an opportunity to put on like a free butterfly, hopefully, if the market catches a bid in the next 48 hours. Like, you know what I mean? Like, it doesn't have to be a day-ish trade. Now, even the S&P is down 110 to 130 or 40 is a lot better to put these on than if even the S&Ps rally back to down 80 only.
Yeah.
So you got to be careful.
I think a lot of people, if you've been caught to the upside, you're going to have an opportunity to close out of positions for a lot less of a loss, if not a scratch or a win.
But a lot of these chip stocks are not in any danger at this moment. Like we just mentioned, MU.
Yes, but I'm talking about across the board. Like if you've, Google.
Yeah.
Google is down $8 or $9 today. That's a pretty big move.
I don't know. Google down $8 or $9 doesn't seem like enough.
Reverse the last month of price action.
Yeah.
If you've got positions where you've been fighting them for a while, it might be time to roll, close, adjust, that sort of thing. But I would like to see vol stay high and a little bit more of a stair step down. I don't want the V bottom. Now you sound like your father. Yeah.
I mean, here we are at basically. I'm going to down tick it and say 68.50. If you look at this since December on,
I think 68.50 is a good spot to be. Like I want to be around there.
Oh, that's the lows.
Yeah, I want to be around there.
Confirm and send Tuesday, January 20th. Let's take a look at what our viewers say now. I shudder to think what these are going to look like with the market movement that we have now. If I usually sell a monthly SPX iron condor, would I be better off selling 4 weekly ones instead when VIX is high? So they usually sell a monthly one, and they want to say, all right, this is a good one for today because you've got volatility higher day. Yeah. Would it be better to spread that out in SPX instead of the 1 monthly to go to 4 weeklies? Better is the key word here.
Yeah, it's apples to oranges, really. I mean, these are going to be way different positions. Your monthly iron condor is going to be way further out of the money. It's going to be less volatile. It's a totally different trade. So I would say if, when you're trading these 0-day stuff or even the weekly stuff, a lot of them are going to be, small wins and bigger losses, right? You're going to have the full loss on some of these positions. They're going to be wider distributions versus the monthly trade where it's not going to move all that much in the short term. So better is a hard one for me to sell here. I think the mechanical thing is just to stick with the monthly. That's the bread and butter, and you can sprinkle in the 0-day or weeklies at a much smaller size. That's what I would say.
Do 2. If you're a 2-lot trader, do 3. Like if you want to do something, ramp it up. Don't look to go to the weeklies. If you have it's an iron condor, so it's a defined risk trade.
Yeah,
it's probably less buying power than you're using on a lot of strangles that you're doing. If you're trading SPX, I got to think you have a margin account. Maybe even a portfolio margin account.
Mm-hmm.
Widen out. Do 2 different ones. Usually do a 20-ish delta, do a 20-ish delta and a 15-ish delta. If you're going to do the 20-ish delta and usually go, $20, $30, $40 wide, go $50, $60, $70 wide on one contract. Do it that way. Like increase your size or your risk by widening out, making it bigger. That's what I would do as opposed to going weekly. That's the way I would do it.
For sure. Well,
next one, please.
Just under 20.
1996. Ooh. We might be here for a couple of days. Go ahead.
Yeah, I would like to see that, or we might just V bottom right back all back to highs.
You're gonna rule but if that not now, out? When? I mean, you gotta be early at some point.
No, I know. I would like to. I don't want to see that. I want to see a little bit of chop here. Keep us with some high volatility. Next one here. Netflix has earnings tonight. When you trade earnings, do you just select strikes based on the delta and stay neutral, or do you look at the chart and use that to determine your strikes?
Well, I mean, I don't use the chart to determine my strikes, but Netflix is an interesting earnings for us tonight. I mean, Netflix, not because it's a delta. We have long delta in Netflix, so this.
But everybody does. If you've been trading this for the last 2 months, it's gone from 120.
You're any type of contrarian.
If you're any type of contrarian, you were contrarian at 100, at 95, at 90, and then here at like 89, 87-ish that we closed on Friday.
Yeah, and with volatility expanding, Ivy ranked to 45. I think it's going to get a lot higher than that today, especially even with the stock higher this morning by $1 at 89. I mean, Netflix, I was going to say, is that typically I would answer this, yes, we lean a little bit neutral to longish if we've been, if we're fair with our past earnings that we've done. Netflix on its butt, going to be that way, if not just longish, right? I mean, because that's the way that we look to trade it. We're looking to be a little bit of a contrarian here. So if Netflix was on its highs, I would say with this type of move, like you might say in a UAL or something like that, that the upside is going to be muted. You might trade it completely different. Netflix, I'm going to trade it from the long side. So it's not a matter of looking at the chart, but yes, we are looking at it for its past history of how it's moved over the last
context.
Yes,
for good context
exactly.
where it's traded.
Exactly.
But generally,
we go by strike.
Yeah, by strike, by delta. I mean that's a little bit subjective, but normally we're always in the 20 to 30-ish delta, 15, 16 to 30 delta. I mean, one standard deviation to the 30 delta is our wheelhouse. Whether you want to, lean a little bit directional here and sell the 30 delta put against the 15 delta call, that's kind of up to you, but that's our wheelhouse for.
Yeah. Totally agree. And nothing else there. Totally agree.
Cool.
Next one, please. Do you think 24/7 trading in equities would be a good thing, or would it be illiquid and lead to bad customer experiences?
I think it's a good thing. I mean, you should have access if it's more access is good. Do I think it'll be illiquid? Yes, for the most part. I think, you're maybe there will be more trading in like an SPY or the Qs or Apple, but I think across the board, relative to normal markets hours, it's going to be, your Apple, which is a penny wide bid ask spread, is probably going to be 10 cents or 15 cents or maybe even more.
I think more.
I just don't see a point. I fancy myself a trader. I don't see myself buying shares or selling shares of Apple, before I go to bed. Like, you can do that with E-mini futures. You could do, there's so many other ways to do it. I just don't think, I think it's more of like a check mark on things that we offer.
Yeah.
Right. I just don't see this as like a core for most people, a core trading feature for most people.
Yeah, I echo exactly what you said. I don't think I even have too much to add to that. I mean, with the E-mini S&Ps and other futures that mirror the market, so liquid, I think that's where everybody will stay and go. And I think you will, not bad customer experience, because they won't take market orders. There's going to be limit orders. It won't be complex orders, with any kind of, if this happens, then execute this trade kind of thing, because the markets will be way too wide. It won't be that kind. It'll just be, you want to put in a bid, you want to put in an offer for single options you can. And
no, not options for stock. I don't know if they're doing
Well, I think 24 trading in equities. I think I was encompassing everything.
Yeah.
We just had the article from Bonetta.
Options would come at some point.
It's got to.
But they have to restrict that to just the front monthly, or maybe just.
And what exchange is going to be like, the lead exchange? Stock might trade 101 on one exchange and trade 102 on the low at another exchange. Your resting order is 102. It's gonna. I don't see it, at least at my advanced age, being anything of consequences for us to trade, but maybe in the distant future, but not right now. Next one, please.
Last one.
When volatility spikes, how long does it usually stay elevated before reverting?
I wish I could tell you this exact answer. The volatility is mean reverting. The problem is that you don't know when. Sometimes it's very, very quick. Sometimes it can stay elevated for weeks, months, days. It totally depends. So, I think volatility, the key to volatility is it presents opportunity, whether you want to be selling that vol or, getting long delta via futures or short delta via futures. That's your prerogative, but it's a gauge of opportunity. And so you got some opportunity here coming your way this morning.
Yeah, I think you do. All I know is it'll mean revert faster than the market itself. So if you're looking for like even the S&Ps, let's just assume that they're 68.50 in 3 or 4 days. Volatility won't be 20. Volatility will be lower.
Yes, 17, 18, something.
Let's take a quick 90-second break and come back. We got more Tasty Live after this. We got an option jive, and then the moment you've all been waiting for, the opening bell immediately following that. We'll be back in 90 seconds. Tasty Live.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Got big goals for 2026? Get the big deal. Earn a 4% cash match on all qualifying deposits, up to $10,000 total. Plus, unlock 30 days of commission-free trading. Trade with confidence using active trader mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. Earn a 4% cash match when you open and fund a new Tasty Trade account today.
Diversify your portfolio with stocks, options, futures, crypto, and more. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Tasty Trade. Download today.
What's up, everybody? Check out my new series, Life Cycle of a Trade, where I show you my real-time trades with insights into strategy selection, adjustment mechanics, all the way to the closing order for all of the tastylive core strategies.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. Only at Tasty Trade.
Your crypto needs a wallet. And crypto is better when it's tasty. You can now do more with your digital currencies with the Tasty Crypto app. We're proud to offer a self-custody wallet for Bitcoin, Ethereum, and Polygon. Transfer your digital tokens directly in-app and access thousands of tokens available only on-chain. Your wallet is your key to decentralized finance. Download the Tasty Crypto app and get started today.
Tasty Trade has crypto, and you can trade with zero commissions, Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
Earn a 4% cash match when you open and fund a new Tasty Trade account today.
It's option. Jive. Nicky, we are back, son, and you know what that means. Time for a little bit more Tasty Live. That's right, with an option jive. Let's take a look at the market if we could before we get there. Even the S&P is down 107. Really haven't moved across the board here. I haven't seen too much movement. Matter of fact, as you look here, you don't see too many numbers changing back and forth. Gold still up 3%. $146. Silver trading just off its highs, up 6.7 at 95 and change. Volatility still flirting with $20. Since we've been on the show since 7 o'clock this morning, last almost hour and 15 minutes, we haven't had too much movement in the market.
No, but volatility is right at highs.
Volatility right at highs.
That's kind of that is the mover.
Yep.
And then it's gold.
That is. Yep.
All right, let's do it. Let's get to this quick so we can get to the
Ready. Let's do it.
This is a good one. So we have various volatility metrics on the platform, and we're going to walk through all of these because there's tons of confusion. We're going to kind of clarify what each of these means. So getting on to the first slide here. So implied volatility, it's a crucial part of options trading, of course, but and gives us an expectation of price movement in the underlying. And we typically look at this on a 30-day time frame. So implied volatility in the platform, you'll see for each expirations as well as the underlying itself. We then quantify it via IV rank and IV percentile. So we're going to kind of go through all of those here. Traders use this metric like those to contextualize volatility for specific assets. So we're going to give you a little bit of a deeper dive into each of the metrics that you see in the platform. So the first one you're going to see is the IV rank. This is one that we highlight that's in the upper left-hand corner of the platform. You can get it for any symbol that you see here. IV rank is a gauge of the current IV relative to itself over the last year. So the implied volatility number itself, if I tell you just this stock has 50% IV, it doesn't tell you much about, it tells you that that's a high number relative to like SPY.
If you know what SPY is, sure. Yeah.
Yes, if you have something to compare it to, but just the number itself doesn't tell you
if it's high relative to itself.
Exactly. And so IV rank does that for us. So we give you a quick little calculation here and you can read through that. But IV rank basically tells you whether the IV that you're seeing in that underlying is high or low relative to itself over the last year. It gives you that context needed to say, okay, 50% implied volatility with an IV rank at 90 tells you that that 50% number is high relative to itself. And so it gives you that context needed to quantify volatility in that underlying.
Good.
On to the next one here. So IVP, which is another metric that you can use here. It's very similar to IV rank, and it looks at pretty much the same thing. So it tells you the percentile of the current volatility over the last year. And again, it's another way to kind of contextualize whether the current implied volatility, which is the actual number, IV rank is derived and IV percentile is derived from the implied volatility number, but it tells you whether it's high or low. So in terms of which one is kind of better, they're pretty much interchangeable. There's not a huge difference between IV rank and IV percentile. IVR and IVP are key metrics often confused by new traders. Let's recap the differences between these two. So IVR and IVP both measure current implied volatility against its historical range, providing context to whether it's high or low. IVR is frequently changing and is range-bound and is a range-bound ranking, while IVP is a smoother weighted calculation. So they're both good. You're not going to see a huge difference between the two. But really what you're trading is the actual implied volatility. And that's what we're going to get to on the next slide, which is our IVX calculation. So you'll see multiple of these throughout the platform. So you'll see implied volatility per expiration, which is what we're highlighting here. That's specific to this expiration. So the standard implied volatility metric displayed for underlyings is our IVX. And it's different depending on each expiration. That will change too. You'll typically see, just like you do in this example here for Apple, volatility in the closest expiration is going to be the highest. And this all is a function of the actual option prices. Prices go into giving us the implied volatility, but it makes complete sense. When you're thinking about price action on a very short time frame, it tends to be much more uncertain, right? When you go further out in time, volatility is lesser because there's less fear, short-term fear in those options. And so you typically see a curve like this, and it gets more extreme when you look at something like a Tesla or some of these high-flying stocks, a Rocket Lab or something like that, where front volatility is very, very high. So IVX on the, let's go back to that one just quickly. IVX on the option chain is calculated using option prices and volatilities for different expiration cycles. And that's each cycle. And so you get that on the platform there. It's important to know about IVX as this metric determines the expected move of the underlying in that expiration. So that number that you see in parentheses is like when we talk about the weekly expected move or the expected move on earnings. This is where we're getting that metric. You take the implied volatility, it spits out a number for you. It's very similar to the at the money straddle. That's another like kind of trader hack to figuring out expected move for whatever expiration you're looking at, or if you're on a platform that isn't as amazing as this one, that gives it for you in a nice parentheses there. Mm-hmm. So when we're talking about volatility, we can look at historical volatility and that difference there. So historical volatility measures past price deviations from the mean using a rolling standard deviation of daily returns to reflect past 30-day volatility. Basically, you're looking at the past volatility versus the current implied volatility. It gives you a little bit of a spread. Ryan mentions this a lot when he comes on talking about this with Bitcoin in terms of the premium relative to the historical volatility, which is really a realized volatility number. The IV minus historical volatility difference is also important. When they align, premiums are fairly valued, but large differences suggest opportunities for traders to exploit. So this kind of looks at historically the volatility of the underlying versus what is priced in now. This is another kind of more technical way to look at IV rank, right? If I told you the IV rank is at 10, you would think that the historical volatility has been much, much higher than what is implied right now because that is what IV rank is doing. So the all of these things are kind of the same. Everybody's like, which one's better? This IVP, IVR,
they all paint
implied
the same
volatility, historical versus implied. They all kind of tell you the same thing. And that's why, there's no better and best. There's no perfect here. They're all kind of in the same realm. But it is interesting if you want to dive into the weeds in implied volatility. There are so many ways to look at volatility, and they're all available for you in the platform.
Yep.
Now, this is
you can go as deep in the weeds as you like, but go ahead.
Oh, yeah, you can get even deeper. But this one, I think, is pretty cool and pretty unique. I think this is probably the most interesting way to look at implied volatility.
And probably the most underutilized, I would think, because I always mention it on my podcast, which happens to be on Tuesdays and Thursdays. Today happens to be Tuesday option trades. Today, the IVX 5-day change. I think it's I think it's another quiver you put, another arrow you put in your quiver to say, hey, this is why I want to make this trade. Volatility's moved in this direction for this reason. But anyway, go ahead.
Yeah, and it's a short-term look, which is what
you kind of want.
Exactly. Like when you're looking for opportunities and you see something where, I'm gravitating towards silver just because it's moving so much. But even when you're looking at a stock like Netflix, which does have earnings, volatility has come in a little bit. I mean, this kind of points you towards whether current volatility is expanding or not. Mm-hmm. Is it contracting or expanding?
Yep.
It's an interesting look. So the 5-day change in IV is crucial for traders that it indicates short-term sentiment shifts. This change impacts option prices. A positive IV change means pricier options. When the number is going down, it obviously means volatility is contracting. But this gets a little bit more granular to the short term, which I think is an interesting way to kind of look at current implied volatility.
Totally agree.
So a quick little snapshot and takeaway for you on all of the IVs we just talked about. So you got IV rank, which shows you the current implied volatility relative to itself over the last year. This tells you kind of the highest level picture of volatility. It says, just very generally, is current IV high or low relative to itself? IVP kind of does this same thing for you. The next step is to look at the implied volatility in that expiration and just generally across the chain. That'll tell you where that range of volatility is. If you're looking at something that's got an IV rank of 100 and the implied volatility in that underlying like in bonds or something like that, where it's a 20 implied volatility, it tells you that underlying doesn't have a wide range of change in volatility. When you're looking at an IV rank of 50 and implied volatility of 50, it tells you that there's a lot of range in that implied volatility. So IVX per expiration is kind of your next look. If you want to dig deep into the weeds, you can get into historical versus implied. It kind of tells you the same thing that you've been looking at if you've made your steps down on these bullet points here. And then you get into kind of the more interesting, granular, short-term implied volatility, which is our 5-day change. This is one where you can see how has this been reacting in the last week? How has volatility been changing in the last week here? I think that's kind of the better way to look as opposed to like historical versus implied.
My preferred way
yes.
is the last one, change in IV. So I have a high implied volatility, and I want that IV X 5-day change to be trending higher also. So double digits when it's up, 10, 11, 12, 15%, that to me is a bell that I need to sell some sort of premium. Let's take a quick 90-second break and come back. We got more Tasty Live after this. What comes up next? The moment we've all been waiting for, the opening bell. Let's Tasty Live.
Turn up. Got big trade ideas? Get the big deal at Tasty Trade. Make moves with confidence using smart tools and dynamic charts. And trade what you want, how you want. Earn a 4% cash match when you open and fund a new Tasty Trade account today. Got big goals for 2026? Get the big deal. Earn a 4% cash match on all qualifying deposits, up to $10,000 total. Plus, unlock 30 days of commission-free trading. Trade with confidence using active trader mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. Earn a 4% cash match when you open and fund a new Tasty Trade account today.
In the world of investing, a beast lurks between the numbers, ready to pounce. Some traders hide from it, some ride it. If that's you, join us on Tasty Trade. Genius loves company.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tasty Trade and tastylive web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
When the market moves, traders need to move faster. Tasty Trade Active Trader Tool offers full depth of market visibility, one-click order entry, and instant position management so traders can react in real time. While others charge for professional tools, Tasty Trade provides them for free. Opportunity can move fast. Seize it with Active Trader. Try it now on Tasty Trade.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. Only at Tasty Trade.
Global markets never sleep. Explore them with Forex, now available on Tasty Trade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on Tasty Trade.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Nikki, we are back, son. You know what that means. Time for a little bit more Tasty Live with, the opening bell, son. Even the S&Ps, where they've been.
They just rallied oil like 80 or 90 cents.
Yeah, over $60 to $60.20 and change. So you just sold oil futures at $60.19.
Yeah, I bought that. Well, those are like the micro crude futures, small little $100 scalp. Because it's 100 multiplier.
You were long them, was my point. You're taking profits. You're not not initiating a new trade as a closing trade. It's a scalp.
Yes.
A good move out of you. Even the S&Ps haven't moved. They're down 105 or so. Volatility hasn't moved either since the last time I quoted it, which, has been around 1995. NASDAQ down 450 and change. Russell down 50. Bonds are down 106 to, they were under 114 for a moment, 114.08. Bitcoin hitting right at 91,000, just under. Oil, the mover this morning, you just mentioned it. Gold still on its highs. Matter of fact, making highs of 3.5%. Silver just off of its highs. It just went down by about 80 cents or so. We're going to get the opening bell here in about 15 minutes. We'll see the rest of the equity markets here. Nat gas up 27%. That
Crazy.
has not had a downtick.
Yeah.
You've got some UNG trades to take off. I mean, what do you do?
I got some long vol too.
You got some long vol trades. I know you did a little
We're
bit.
gonna have a good little morning here.
So far, you're going to have some fires to put out too, as you would
Sure.
imagine in any position. There you go with the opening bell here. We'll see how the market ends up moving here. You can see big move in the overall market. SPY down almost $10. You would imagine with every dollar move on the E-mini S&Ps, they're down around 95 or 96, that you'd have around a $9.20, $9.60 move in SPY. That's just how it all works for those who are unsure about it. On the other side, if you look at SPX, you're going to see a $95 move, right? They all move in tandem with each other.
Those are some IBIT calls. I've been, anytime we have up moves in Bitcoin, I've been selling the upside calls. And so
You've been
I
leaning a
took
little bit long, but you've been trying to enhance by selling any type of uptick, creating almost like a covered call, right?
Yes. And so I've been just scalping out of those when possible.
Sure. When weather permits.
Yes.
Even the S&P is down 95, NASDAQ down 400 and change. We're all down around 1.5. Volatility in by about 30 cents.
And that was a good little UNG trade. I just took that off. I mean, when you're statically long, I closed out the UVXY position, so we took a couple $100 out of that too.
Yes, straight stock play in UVXY, right? So you're basically closing your not expected move, but the move that you got to warrant a close. You played these to the long side. They're up today. UVXY, let's take a look at it. UVXY up $4 and change. Again, just trying to play a little bit of contrarian role.
Silver selling off a little bit.
Silver selling off a little bit. Let's take a look at what would be problem children.
I can't believe the Russell is not the weakest today with the way bonds are moving right now. Russell should be down 3-4%.
Yeah, no, I agree with you.
And it was I saw something where it was up like 8 straight sessions in a row or something like that.
Yeah, look at this. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. I'm just going to go 11 sessions, throw out that one right in the middle there. When you look at the rest of the market, like the E-mini S&Ps, it doesn't look anything like that, right? You look at the NASDAQ, it doesn't look anything like that. Let's see what some of the banks are doing. Like, let's see what Citigroup, down $2.60. UAL has earnings after the market closes today. It's down $3. Netflix has earnings after the market close today. It's up $1.20. Mini S&P is down 102. Volatility 1960.
What else do we have here? Do I take my E-minis off?
What's that? Talk to me, Goose.
I feel dirty taking it off because I feel like we're going to get some more to the downside. But maybe if we get a bounce here.
You're closing some MES, right?
Yeah, I had an MES because we sold that.
That makes you flat, right?
Yeah, I'm flat. I'm flat
Futures
MES.
on there.
But we sold those at 7. That was about as good as you can get.
Yeah, 7,000. They're 68.72 and change where you just closed them right now. Yeah, totally good on you. Volatility has not flirted with 20 again as we move here on the E-mini S&Ps, hanging out down 101.
It's not a bloodbath.
It's
like
not,
you look at
not a bloodbath.
Apple's down $1. You know, like some of these stocks, like Microsoft has been really weak. Meta looks like duty. Nvidia is kind of down, but it's not like you're not seeing huge numbers. It's not the 5 or 6% moves that you're kind of used to in some of these.
Well, let's take a look at some of those buckers. MU up $8. Silver and gold, of course. UNG, of course. Those are products that you would expect might have an inverse relation. But Netflix up $1 and change. XOM, some of the oil. Intel up $1.30. There's only a few that are higher here. I mean, not a ton. I mean, it's a pretty broad-based overall sell-off in the market. Apple 11 down 22, Meta down 15, Goldman Sachs down 12, Tesla down 10, Coin down 10, Microsoft down 9 or 10, IBM down 8, Reddit down and change. But volatility is collapsing here 1940 on volatility. So looks like it's over at the moment.
Is that it? Is that all we get now?
I mean, I think you'll have more movement in the S&Ps. I don't know if you'll get that vol expansion today. So you might see, if I had to guess where the E-mini S&Ps are going to close, somewhere between down 80 and down 60.
So you think it's a buy the dip? You think it's just...
I don't think we have the V bottom change that we've had, but I've been wrong before when it comes to that. But if you get the E-mini S&Ps down 110, 115 again.
Are we getting a taco already?
Well, I mean, I think this is the first kind of
this
bounce.
was a test.
This
was just a
you
test.
see what goes on from there. Yeah, that's my guess. I mean, I don't know. Obviously, everything is a guess here, but volatility expanding pretty nicely here, even though it's 1946 up $1.08, which is almost a 6% move, decent sized move.
I had some put diagonal spreads that I had some leftover puts on that I just closed out of half of them.
Taking some of your profits is really what you're doing here. Not opening any new trades yet.
Yeah. I did that in the Qs too.
Yeah, you've been leaning a little bit shorter term short on some of these kind of flyers, I think you call them. Is that what you call them?
Yeah. Runners.
That's the word I was looking for. Runners. Yeah. That's the runners. Yes. So,
do we do anything in
So you got to clean up on aisle 10 is what you're doing. Mm-hmm.
Now, if you're looking at putting new positions on, do you lean towards February or do you go to March?
February with 31 days, March with 59 days. If I'm in like a product like SPY, I think I'd probably go to the 59 days in March. I'll explain to you why right now. If you look at more, and we'll talk about it with Vecchio too. I think you got tariff talk too still here. If you look at February volatility, it's 17 and change. Look at March volatility, it's 18 and change. I think you can trade in March here. That's my play. What about you?
I think if you're going into like I was thinking NVIDIA, like looking at February puts in individual
I was looking at equities, right? I mean, so
you were looking ETFs. I agree with you. I think ETFs, you go to March, you kind of play for the, I don't know, 20-ish delta options. Yeah. Kind of play for the pop and vol.
Yeah, exactly. Yeah, exactly right.
What do you think about like the 70 strike puts in NVIDIA? It's a pretty big move. 70
strike in NVIDIA. Let's take a look.
Like $4.
That's the 170s, right?
Yeah.
You're looking at February or March?
I was looking at February.
February vol 39, earnings coming February 25th. See, here's one where in NVIDIA I would probably avoid the earnings if I could and probably stay into the February options. I agree with you. He's down 98.
Let's do something in March in the Qs.
Okie dokie.
What do you think around like the 575s? You get 25 delta?
Sure. You could try.
920. You want to do that in SPY too?
Sure. Why not?
What do you think? 60, 640, 645?
Sure.
650?
Pick your poison at that point. It's how much credit you want to receive.
Yeah. And they're not all that different. I mean, you're talking
they're
about,
not.
So the 640.
They're probably dimes.
Well, $1-ish. But I mean, from a delta perspective, you're talking about 26 versus 21.
Yes.
It's you're talking about kind of the same thing here.
Mm-hmm. Volatility 1930.
Yeah, I was hoping for more.
I think we all were at this point. I mean, we're down 1.25% on the market. I mean,
this wasn't the dip I envisioned.
Sad but true. But again, we're still nobody talking about this unwind in the products that have moved to the upside. Gold up 150, big move in gold. Silver up $6, still almost a 7% move. Net gas up almost 80 cents, 25% move. Net gas. I think your close in net gas is proven.
I think I'm going to do another butterfly in GLD.
Didn't we do another downside butterfly somewhere?
I was going to do them on the call side.
Yeah, I think.
Are you scared?
I think the patent pending SPX 1x2 broken wing butterfly.
Wide.
Yeah, I think that'll be my.
here?
I think it'll be my trade for option trades today if the market's here.
Yeah. You want to do it now?
You can. I can't. I mean, I
wanna
do
steal
mine
your
closer to
thunder.
10 o'clock so everybody else can play along. Maybe wait for volatility to expand a little bit since you're waiting on this. I mean, your overall deltas. What are you doing there in gold? You got filled at 304. Watch your pricing in
I
there.
know that was the. Yeah, they're like 30 or 40 cents wide, which
Yeah.
isn't a shock because gold's moving $14 today. I mean, GLD is moving $14, 140 points on gold futures here.
I mean, GLD was $100 and something product forever. It's $435 up.
This is just a weird day.
Yeah, so you did a 1x2 call ratio spread, right? Like you're doing this in February also. Let's put up on the screen. You're buying the 440 call. That's about almost a 45 delta, so it's a pretty tight one.
Yeah, well, because the skew to the upside is just off the charts.
It is off the charts, and you're selling the 450s. Got filled just about mid-price 304 or so. You can see here that you're just at a standard deviation with your break even. You got a $10 wide. You could certainly go wider with this and take in less credit. Well, is a debit, so you can't go that wide. But anywhere that you can go with a credit, here's a small one, 555, or move your inside strike better. I would rather go wider, like you did, than go tighter.
The gravitational pull of silver
to 100
is just
to 95. What's the?
I'm in it. I have the delta, but I think I'm going to put on another one of these butterflies on the put side in SLV.
Mm-hmm.
I mean, this is.
Remember, when volatility is high, butterflies trade cheap.
And so especially with all this skew, the downside. I mean, in $100 stock, you should not be able to. And 100 is.
You wouldn't think you'd be able to. Obviously, you can because it's there.
Yes. Mm-hmm. Good point. You shouldn't be able to do 20-point range on the downside for $2.
It's a cheap shot for 31 days.
Yeah, and it's not going to move. And just for context, the one that I put on where silver was pretty significantly lower. I mean, I did this one. So the one.
So in February, you did the 63, 73, 83, right? I put it up there on the board here. You're encompassing a lot of the expected move to the downside.
So I did this, so I can show the market snapshot on this.
Mm-hmm.
So I did one which was the 80, 70, 60 at 233. I did this on the 14th. So it's been, about a week. The SLV was at 80.
Same trade that you did here, did not get the move that you wanted.
No.
The opposite move that you
It got the opposite move. I mean, you're 3 or 4 points higher. This spread has moved 30 cents.
Right.
And that's
on a 6% move in silver.
Which is huge.
Right.
And so this spread, it's almost like it's a short delta play, but you'll get the benefit of the contraction in vol because vol is expanding on the way up. And these butterflies, instead of losing $1 on that butterfly, which is what you probably should lose, you're losing 30 cents because volatility is reaching new highs.
That's correct. And you're widening your butterfly when you're putting on this with an existing position. Now you're adding more money to it.
I'm all over the place.
$2
So in
change.
SLV, because I had, if you remember, we did the upside ratios too. So I did the call ratio, just 1x2. I was naked, and then we had that one downside move, and I bought in the calls on the 105 calls. So I have butterflies all over.
It's called trading.
Yes,
That's what you're doing. You're trading.
I'm a little all over the place in silver, and then I have the static delta just via SIL, which, that is short delta.
True. Place your bets, everybody. Even the S&P's down 90 and change. Volatility 1930, 70 cents off of its highs, signaling that you might have seen the lows in the S&P's. We're only 15 minutes into the day, but you might have seen the lows at 68.46 and change. Now, if we do go back down to that level and volatility is not in the 20 handle, that would be a little scoopy opportunity, I think, for most of America.
You're saying if we get like a
so if even the
30
S&Ps are 68, 88 and change right now, if even the S&Ps go down, 30-ish, 40-ish handles from here, 25 to 40-ish handles from here, and volatility is 1970 or so, I think it's a buying opportunity of the market. Right now, I think you're in no man's land. You place your bets.
All right.
You good to go?
I'm good to go. Yeah.
All right. Let's take a quick 90-second break. I know we're having a little bit of technical difficulties with my man, Chris.
I closed out the put side of the Iron Condor that we had in CL as well. So we're short delta with Craig
you paid pennies for that, 10 cents?
Yeah, 10 cents for that put spread. So I'm getting short delta via closing the put side.
And the put side gave you a small amount of long delta. Nothing to really talk about over the next, what does silver have? What does oil have, 28 days or something like that?
Yeah.
Small price to pay, $100, 10 cents. Let's take a quick 90-second break and come back. We got more Tasty Live after this. What comes up next?
We got Mr. Vecchio in the house.
Yes, we do. Let me explain. I got a lot of questions for him because he got a lot of explaining to do because I'm not understanding a lot of things. We'll be back in 90 seconds with Tasty Live.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that 1-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
Wolf! The first half of this year's market has been giving the good guys the business.
It's certainly been back and forth for sure, Pete, and I'm getting whiplash over here.
With good mechanics, we can see Team Tasty stay strong in the second half.
Absolutely. Let's check out our starting lineup.
Tony Bat Batista, the John Jay College of Criminal Justice. Number 69, because it's one standard deviation plus one. And I'm the Bat.
John McLaurin, Wisconsin, number 2, because I'm Beth's right-hand man.
Vanetta Logan, the Indiana University, number 3, because that's how many shots of bourbon it takes to make it through the first hour.
I like the looks of that lineup.
Well, be mechanical is always better than just trying to run plays and see what sticks, Pete.
When you got skin in the game, you stay in the game.
That's right. Now get off the couch and get into the game.
Watch Tasty Trade.
Got big goals for 2026? Get the big deal. Earn a 4% cash match on all qualifying deposits, up to $10,000 total. Plus, unlock 30 days of commission-free trading. Trade with confidence using active trader mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. Earn a 4% cash match when you open and fund a new Tasty Trade account today. When you've got a futures contract that's in contango, what does that mean?
Futures, unlike stocks, have multiple prices appropriated to them. That's known as the forward curve. So when a futures forward curve is in contango, that means that the front month is trading cheaper than the corresponding futures back month. So you'd see that forward curve most likely looking like this in terms of prices.
And backwardation, what does that mean for futures contracts?
Backwardation is the opposite of contango. So where contango front month futures contracts are trading cheaper than the back months, backwardation is the opposite. So those front month futures contracts are trading richer than the corresponding back month contracts. Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Earn a 4% cash match when you open and fund a new Tasty Trade account today.
Nikki, we are back, son, and we're joined by my man, Chris. Let me explain. This is your market. Chris, explain it to me.
They tried to get me off the air today. You guys deleted Windows from my computer, but it's an important day, so I'm here.
You are uncancelable.
You are uncancelable. You know that?
You can't.
Can't cancel you.
We might be getting calls from the Pompliano syndicate to cancel this segment, but we're not taking that.
No, I'm not.
We're on your side.
I'm not taking it for sure.
I appreciate you guys. Family sticks together, right?
That's right.
That's right.
You never go against the family.
Never go against the family.
Never.
Can't
Water's
happen,
always
won't
thicker
happen.
than water.
That's
Never,
right.
Never.
That's right. So true.
Well, it's a crazy market today, and Nick, the reference you're making is because of my public outburst about how stupid and breathtakingly dumb this whole Greenland thing is. I understand that it's.
I didn't see what you said. Can you refresh our memory?
Sure. Apparently, the debate over Greenland is about nationalists versus globalists, right?
Yes.
Because the nationalists want to take over Greenland and the globalists don't want Greenland. Apparently, I just find the whole thing very frustrating because in terms of right of access, since the 1950s, the U.S. has had the ability to put whatever we want effectively on Greenland soil. As of a treaty update in 2004, we still need to get approval of the Greenland government, but it is understood that we can open up as many bases basically where we see fit on the island. I know that Trump and co think this is about the rare earth metals that are buried beneath Greenland's ice surface, and there is perhaps an argument to be made there. But then again, if the people of Greenland don't want those resources extracted, then who are we to say that they, should do that? I just don't think this is necessary.
That's why if you own it, you can do what you want. I mean, that's why I don't have a condo. I have a single family home. I don't have to go to I don't have to go to the
HOA.
He can swim naked in the pool and walk right into the sauna because he owns it.
Well,
that's right. And my neighbor could say he has pictures. Then my neighbor could say he has pictures of me naked, which he does say he has.
Well, Nick, in fairness, you could still go swimming naked. There are just different consequences for it if it's not your own home.
Yeah, and you wouldn't want to do that in Greenland either. It wouldn't be flatter.
Oh no! Shrinkage.
Be a little
shrinkage for sure.
Yeah. Polar Bear Club, definitely.
Mm-hmm.
But and then the idea here that we are going to betray people. I don't know. Maybe as a New Yorker whose friends and family were directly impacted by 9/11, Denmark lost more people per capita in Afghanistan and Iraq fighting Al-Qaeda and then thereafter ISIS on our behalf, on NATO's behalf. So they've spilled blood for our homeland. They've spilled blood for causes beyond and abroad. They've been a reliable ally. So I just find the whole thing just disgusting. And more importantly, the U.S. economy is the greatest economy that this planet has ever seen, full stop. And the idea that we're going to destroy the trade relationships, which are part and parcel to why this is such a wealthy country, it's mind-boggling. It just doesn't make any sense. Now, that's not to say that things have worked out perfectly through globalization. I myself think that globalization has worked out well. The growth and benefits have not been evenly distributed. Governments around the world did not do a good job creating the social safety net after we shipped all these jobs overseas for fatter corporate margins to protect workers in America and in the West. So I get the frustration and tension. I just don't know what as people are out there claiming that Greenland is a keystone all of a sudden to our population growth and economic future and yada, yada, yada. And then all the kvetching about what Canada's doing with China, they're doing this because we're pushing them in that direction. Right. So this whole thing is nonsensical to me. In any case,
why do we have to be so polarizing for a minute? Can I be the angry guy
everyone,
who goes,
everyone can own gold, Tony and Nick. Everyone can own gold.
I mean,
there's no polarizing around that.
Do I have to be I'm the angry guy that yells at the cloud, as Vanetta says to me. Can't we go down the middle? Can't we be both? nationalists and globalists? Can't we do what's best for the U.S. and best for the world? Isn't that what we're always trying to do?
I mean,
that's what I would hope.
That's
We're
what I
always trying
thought.
to do is the way I should say. Isn't that what we're always trying to do? I mean, it's just like trading. I want to make money, but for me to make money doesn't mean that everybody else has to lose money out there.
Correct.
Can it be both? Can't we at this juncture when it's the whole world's existence, on the line, can't we go down the middle as reasonable people?
I thought so. I think so. I hope so.
Yeah, that's what I would hope would happen.
Yeah. Well, in any event, I never felt better about gold and silver on a day like today. Is this another April repeat, I suppose, is the question. I see that Scott Bessent's been out there talking to people about how the market was so worked up about the tariffs in April. And look what happened thereafter. What happened thereafter was that Trump took the tariffs off. Everyone remembers what happened on that Tuesday. Was that on April 9th? We were on Futures Power Hour during the old time, 1 to 2 p.m. Eastern. And that's when the announcement was made that he'd be reducing the tariffs. And the NASDAQ ended up closing higher by 12%. It's not because the tariffs worked out. It's because, oh God, I'm going to say it, Trump chickened out. He tacoed.
Taco Tuesday. Today happens to be Tuesday.
So my read through, if Bessent is saying, don't worry, look at what happened in April. The only read through there is that Trump is going to back down from all of this because the whole thing is just prima facie so ridiculous.
I'm sorry to interrupt you. Isn't today supposed to be the possible tariff decision, or do you think they're going to kick this can down into June?
It's possible today. The Supreme Court announces that it's going to have an opinion day. Unless it leaks out, and the Supreme Court really doesn't leak anything, but unless it leaks out what they're going to be discussing, you just don't know until the decision is released. So possible here.
And it should be in the next hour or so. I've seen from the past ones,
Yes.
it's supposed to be
10 Central-ish.
Well, no, 9 Central, 10, or am I an hour behind?
They start showing up at 10 Eastern, 9 Central, 11 a.m. Eastern, 10 Central, sometime in that hour block. But the decisions could be released all day. So.
I feel like Orange Man will not allow that to come out today. Not on a day like this. Not with the market down 1%. No way. No way. You can't have that come out.
I tend to agree.
we get 10, 25% tariffs against the countries that won't give us Greenland, and then the Supreme Court takes off the tariffs. So it's a wash. We go back to where we were. So we're back to 7K.
You could actually look at it as if the Supreme Court is actually tacoing for Trump. Like it's a pseudo taco.
It's a pseudo taco.
Yes,
Would that be a burrito? Or a tostado?
Or like a crunch wrap.
A crunch wrap.
Yeah,
like crunch wrap supreme.
Yeah.
Mm-hmm. I haven't had one of those in a long time. I don't know if there's a Taco Bell near my house. In any event, do we just automatically sell volatility here? Is the VIX high enough to get into the let's just kind of sell blindly and cross our fingers with long enough duration? Because historically that's what works out. Not really. We're not there yet. The technicals in the S&P and the NASDAQ now look like crud, but technical formations that are splintered because of events like this could easily be unwound. This is going to be a two-way market here, I think, for the next few weeks. The Fed meeting at the end of the month, of course, doesn't really matter all that much. The markets are pricing in less than a 5% chance of a cut. Instead, I would pay more attention to what happens tomorrow with the Supreme Court and the Fed, and it's not because of the tariffs. Fed Chair Powell is making his way to 1 First Street in D.C. to speak up or at least show support for Lisa Cook, the Fed governor who's trying to be removed by Trump right now. So the Fed independence fight is in full throttle right now. I just think the funnest game aspect of all this, because, you have to have some humor in some trying times like these. Is Powell going to remain Fed chair past May? A lot of the people that I talk to that have experience on the Hill, that have worked in the Fed and the Treasury, think that Powell is going to stick around past May.
I think even on like betting markets, it's well past that too, I believe. I mean, I think the betting markets have it that way too.
And that's good. You like that. That's a bullish, that's money printer go burr. That's same as it ever was.
Yeah, we're upset about the guy who's overseeing the S&P 500 going from 2,500 to 7,000 during his tenure.
Thank you, Chris. Agree with you.
Yields have been low. right, throughout the entire time. Was inflation a problem? Yes. And I hate to say that inflation was a problem everywhere because it really was, and it was worse in Europe. But like the economy didn't crash. And I think people, I know it's easy to say in hindsight, but Tony, 2008, 2009, 2010, 11, 12, that was a lot worse, and the drag and how long it took for the economy to recover than what happened after COVID. And so I suppose maybe there's a better path forward than either response, where we didn't do enough during the financial crisis. And so then the economy was wrecked for like 3 or 4 years, and we did too much during COVID. And so we got too much inflation. But given our history here, would we rather have excess inflation, or would we rather have people not having jobs? Right. And there being no business growth and stock market returns flat for several years. Right. I hate to say it's a one or the other, but given our history, it seems like those are the two paths in our hindsight. I happen to think that the post-COVID years were less worse for the average person than the post-global financial crisis years, because at least people weren't losing their homes.
Going back to Greenland for a quick second here, I'm going to ask you a question here from my Twitter peeps. Harry Truman was the first one to try to buy Greenland in like 1946. That's not my point. He offered $100 million in gold at that point, which would be worth about $13.5 billion today. Would that have been a good purchase for Greenland, or is Greenland worth less today than $13.5 billion? Considering we paid $25 million for the Virgin Islands, so in 1919, but according to Twitter.
We just gave Argentina $40 billion for a bailout, right? A recovery fund, a support fund of sorts for the government. So probably would have been a good buy back then. But the difference there, of course, was that it was more of a consensual transaction. And it's not like, well, if you don't let us buy this from you, we're going to take it by force. And the other side of this, of course, is the U.S. Virgin Islands exist because those used to be Denmark's. And as part of us recognizing Denmark's territorial claim over Greenland, Denmark said, "You guys get the Virgin Islands."
It's like the 1A horse or something like that. Like you get the one horse and the 1A horse if you bet on the one horse.
But those beaches are really nice.
Those beaches are really nice.
Those are great.
Some place to relax. And I don't want to relax on the Greenland beaches.
Yeah, no.
That'd be a little cold.
Yeah, and Greenland's not that green. It's kind of icy.
Where's all the green?
That's how you know.
Down 105, volatility 1980, actually making a little bit of a bid here.
1980 is still on that like 18 to 21 region where anything can happen. We start to go above 21, 22. You start to feel a little bit better about looking for some signs of a bottom and looking for ways to fade it. But if this is a March, April repeat, I suppose that we have to run up to the line and see what happens until we get pulled back in. Congress does not appear to be inclined to doing anything at this juncture. And we do have another government shutdown fight potentially looming. The government needs to get funded next week. So is Greenland going to be a sticking point? I thought it was going to be about healthcare and the ACA subsidies. Who knows though? So many fun things to talk about.
To contemplate. You're not kidding. Even the S&P is down 105 hanging. Go ahead. I'm sorry to interrupt you.
The metals here still. I know, Tony, when gold was trading below $4,500 an ounce, and I said I was buying $5,000 calls out in April. It seemed like a madman thing to do, and it was. But the worldview that I'm entertaining here is that the influences of 2025 have carried over into 2026. Just because the calendar's changed doesn't mean that what's been driving the market has. Is the Fed going to cut or not? What's going on with fiscal policy? U.S. expansionism, imperialism, adventurism abroad again. Who knows? But gold and silver seem like they are still well suited for it. It's going to continue to be for the next several months a function of how you can scale in, how you can structure your trades in a cost efficient manner, because these markets are moving fast. And the IVRs, as you see in silver, like we're still implying plus or minus 5% daily moves, basically.
Yeah, and you've got a 7% move today in silver.
And the dips have not lasted.
No.
I've expected to see a little bit of a pullback. You kind of chop for a couple days so that vol can come in, and then maybe you start, with the rest of the up move. But it's been just 6%, 7% gap ups. Does it spook you a little bit, just as like overall, like the metals being this like volatile? I mean, it doesn't give you warm and fuzzy feelings, does it?
Well, the volatility isn't what bothers me. I think it's the absolute price level that makes me unnerved. I don't know if gold is insurance, silver is the alarm bell, and silver is just screaming right now. There's also, part of the reason why I remain optimistic on silver in the short term, besides the contemporaneous relationship that volatility and price tend to have together, at least they have for the past several years, we continue to see this Asian and Middle Eastern premium over spot prices here in the United States. Shanghai silver yesterday was trading at like $107 an ounce on the street. And that divergence that we've seen, that premium in spot prices over in the East, that has been an indication that there's still great demand in the market right now. And there's an imbalance where there's just not enough silver supply to meet that demand. I know that we've had the CME margin hikes as well, and we can't rule out another one of those coming down the pipeline, because as prices go up and volatility stays higher or expands, clearinghouses are going to expand margins. And if you track margins historically, when prices come down and vol comes in, that's when the margins start to go out once more, and they increase the use of leverage for their clients and their customers. But the past episodes of margin increases that we've seen in recent months, did they really do anything more than provide a temporary reprieve for silver? No. And the reason is, back in 2011, Tony, as you recall, the leverage on silver when they first doing those margin hikes was 26-1. This time around, when they start doing the margin hikes, it's like 6-1. And so we're not really squeezing as many over-levered hands, as many, hamstrung speculators out of the market this time around. It's easier for people to top off their accounts and maintain their position. So again, another margin hike that comes down the pipeline, silver probably gets knocked around a little bit. It's probably going to be a buy the dip opportunity.
I always find it interesting. I think the margin does change the landscape for a lot of the fringe players. And as you mentioned, the way that span margining works and the way it's leveraged at this point, it's not that big of a deal.
Yeah.
It's not that much. It shouldn't be. Now, those players who are trading too big for their size account are the ones that are going to make the most noise when it happens, and that's what you get. So you get a little bit of that frothiness taken out of the market. But I'm surprised, and I mentioned it early this morning, and I'm surprised a little bit at you too, that you're not talking about any kind of unwind on this move. And I think that's
and you just think if you've been long this, like, you gotta take profits at some point, or maybe you're just holding forever. But I mean, at some point, if you're a big player here and you talked
about 100 on silver, which I thought was an unreasonable number even to talk about. So egg on my face, I got it completely wrong. But I don't have a big silver position and I don't have a big gold position, so I didn't put my money where my mouth is. I'm small hurt in both of them. You asked for 100. You got 90. You got 95, almost 96. I mean, you're half a percentage point off from an amazing call. I say the same thing when you make an amazing call in the market. Reduce your delta in some way. If you had naked long futures, buy call spreads.
Yeah, if you're holding, you still think the asymmetry is to the upside. Yeah. Which I don't know. I don't know how you hold that.
I agree. Yeah.
Uncomfortably. There's, I'm on doxycycline right now. I'm prednisone, Prilosec, Pepcid.
All right.
I respect that too.
I respect that. Truly.
I think there's some Zyn around here. I got some patches over here.
There you go.
Keeping some Tylenol. I keep everything topped off.
Yeah, a little bit of you got to fix there.
Overall market, you think choppy for the next? I mean, here we are, 68.70 on the E-mini S&Ps. 3 weeks ago, 3 weeks ago, 68.50 was that number that we were oscillating around, 68.20 to almost 6,900, 68. Wow. Volatility through the roof, 1985, catching a little bit of a bid here. What do you think about the market? Still staying with that choppiness on the market? E-mini S&Ps? E-mini S&Ps expected move for the day. Let's go to the 0 days for just a quick second. About 37 handles. At this time, most days during the week, it would be under 20, wrapped around 20, 24 at 8:30. I forgot to look at it. 38 and expanding right now.
I don't know if it's official, but I see some people saying no tariff news for today.
Yeah, which I think
the Supreme Court
probably expected.
Yeah.
I mean, wouldn't you agree? I mean, I think that's what they got to kick the can down the road a little bit here.
But as I'm getting those, notes, volatility continues to expand. So that's kind of an interesting.
Yep.
You'd think that would kind of dampen volatility a little bit.
You would. You definitely would. You definitely would. All right. Good job. Go ahead, my man, Chris.
I got to say, what are you guys doing with natural gas here today?
Kicking myself in the backside that I didn't get more long net gas. I mean, net gas is one we caught, but in a very small way. I have to default and say that I was mechanical and not trading net gas futures. It's way too big of a product and way too not friendly for most customers out there. So I'm kind of glad that we stayed in UNG, although I do miss the money I would have made.
Yeah, and I don't think there's anything you can do now. Like you're not looking selling
I'm not
call
looking
spreads here, doing anything like that.
No. Those call spreads are going to trade so cheap with volatility as high as it is in UNG. So I think it's
we may have some serious winter weather coming together here on the East Coast, which is why this moves.
You know, your macro view is in play right now, so I'm letting you speak and talk, but I can't stand your macro view. I mean,
Westwater's the weather is not a macro view.
This isn't macro. This is weather.
This is a known. I mean, come on, it's going to get cold and
this is a PSA. Hey, we're about to have 20 inches of snow, Tony, in DC.
If you live in New York like you do, or Chicago that we do, these are the days. January is the time when you question why you live here. Like, I mean, it's dark, it's cold, it's frigid, it's the way it's going to be. You say it to yourself every January. This is nothing new, in my opinion.
That's true.
What's the old Lewis Black joke? Like, why did people from Northern Europe settle up here? Like, they got off the boats, they wandered around drunk for a little while, and they're like, "Oh, this looks like home." And
I love the ones that show like pictures of like the beaches in Bari and the Amalfi Coast, and they say, "My ancestors looked at this and said, we're leaving. We're going to Buffalo." Those are the ones that get me. Good job out of you, Chris. You're right about that too. Good job, my man. We're going to take, are you done? Parting words?
For now.
Okay.
Baba Booey.
Baba Booey. We're going to take a quick 90-second break and come back. We got more Tasty Live after this. What comes up next? Well, we've got a market measure. We'll look at this market too. Volatility expanding just under 20, just off of highs. Even the S&P is about 20 handles off of lows, down 109. We'll be back in 90 seconds with Tasty Live.
Got big trade ideas? Get the big deal at Tasty Trade. Make moves with confidence using smart tools and dynamic charts. And trade what you want, how you want. Earn a 4% cash match when you open and fund a new Tasty Trade account today. Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade. Got big goals for 2020?
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Wolf! The first half of this year's market has been giving the good guys the business.
It's certainly been back and forth for sure, Pete, and I'm getting whiplash over here.
With good mechanics, we can see Team Tasty stay strong in the second half.
Absolutely. Let's check out our starting lineup.
Nicky Bat, University of Kansas. Number 20 because that's how many underlines are in my portfolio.
Rick Welch, Illinois Institute of Technology. Number 23 because I'm trading 23 hours a day.
Dr. Data, Louisiana State University.
Number, square root of 1 over 365, because that's the square root of time for 1 day, which is multiplied times the stock price, multiplied times the implied volatility, which gets you the projected stock price for 1 day.
I like the looks of that lineup.
Well, be mechanical is always better than just trying to run plays and see what sticks, Pete.
When you got skin in the game, you stay in the game.
That's right. Now get off the couch and get into the game.
Watch Tasty Trade.
Today's episode of Market Measures is brought to you by SIBO. SIBO is partnering with tastylive to provide educational opportunities for traders at all levels. Did you know index options like these can provide opportunities for diversification, lower volatility, liquidity, and other benefits? To continue your education on some of the mechanics learned in today's Market Measures, check out SIBO's Retail Trader Suite at www.sibo.com/minis.
Tasty Trade is now on TradingView. Trade stocks and futures directly on TradingView charts with Tasty Trade's low commissions. Try it out and leave us a review.
Nicky, we are back, son. You know what that means. Time for a little bit more Tasty Live with a market measure. But before we do, let's take a look at the market. Even the S&Ps, orderly, down 105. Does that scare you?
It kind of does. We were talking about it on the break. Like I was like, find me something that's having a big move where we can, there's a little bit of a pop and vol. We could sell strangles or puts or something. Mm-hmm. There's nothing like jumping off the screen at me like, oh, that looks like it's, an opportunity.
Yeah, I agree with you. It's been a very orderly market here. We've been in about a $10 range.
Yeah.
Throughout the high, throughout the low. Since we've been open for the last 45 minutes, we've been down around 105-ish, down to about 95-ish, just about a $10 range. Volatility's seen a little bit of movement here, about a 30-cent move in volatility. Now volatility just about 10 cents, 15 cents off of its highs. Bonds really haven't moved. They've been down about a point, 31 handles, 32 handles would be a point. Russell, I think you sold a little bit of Russell, didn't you?
I added some back. I was shorted into today. I shorted it on Friday, and I'm still shocked that it is the
strongest of the group, right? Down 1.125% as everything else is down about 1.5%. The weakest of the group, I guess, are the other three, even the S&Ps, NASDAQ, and the Dow, all down around 1.5%. Let's just call it that. I'm a little bit surprised by the orderly way the market has moved. Mm-hmm. Even those that are moving a lot, like gold hanging out right here, silver hanging out right here, hasn't moved that much one way or the other either. Existing positions are the culprit, whether you profitable or have a loss. Today it would just be because of existing positions. I don't think any new position you put on one way or the other has
moved at all.
Very much against you or for you. That's correct. All right, my friend, let's get to a market measure. We're talking about relationships here, something I'm not good at, but let's see.
Oh, you're good. You've done two
long-term relationships. I've done better than most.
Yeah, multi-decade.
Yeah, 17 and 22 years.
Yeah, that's
it's better than most. Yeah, thank you.
Wouldn't have expected that.
Thank you.
But that's good.
Yeah, thank you. Appreciate that.
Sponsored by the SIBO.
Sponsored by our friends at the SIBO, yes.
So we're going to talk about the relationship between assets and their IV. Mm-hmm. So implied volatility, and this kind of parlays off of our option jive from earlier this morning, another really good one if you want to check out more on just all the different ways you can measure and see volatility in the platform, on the Tasty Trade platform. So implied volatility reflects how sensitive an option's price is to changes in the underlying asset and capturing the market's expectation for future uncertainty. So you look at the option price, that is what gives you implied volatility. When prices increase, volatility increases. When prices decrease, volatility decreases. This is just a function of the option prices themselves. As price moves, implied volatility can respond asymmetrically or disproportionately, revealing how traders adjust risk perceptions in real time. This is kind of another way to say skew. So a lot of times when you have pops and volatility, the downside skew increases. So those far out of the money puts will increase more than the far out of the money calls. In something like a silver or gold, which have gone nuts over the last couple weeks, these big moves to the upside skew increases to the upside. And that's the asymmetric part of this equation here, is that it's not equal. The volatility change is not going to be equal on both sides of the market, or typically isn't equal on both sides of the market. And so here we're going to talk about how different asset IVs respond to changes in the underlying price. So we're going to kind of look into skew, we're going to talk about volatility, and just kind of how these things change as markets move. So the study that we have here, we recorded the price and implied volatilities of SPY, the Qs, IWM, USO, so we're using that as our oil metric, TLT for our bonds, and GLD for gold, and we looked at this since 2022. We recorded the average percentage change in IV when the price went up or down by 1 and 2%. So 1 and 2% might not sound like a lot, but today we're having about a 1.5% move, and I'm sure there's people going nuts on Twitter about a crash. This is a 1 and 2% moves are pretty big moves on a day-to-day basis. Typically with volatility at an average of around 16 to 20-ish, it represents about a 1% move. So when you're getting to this kind of upper 1 to 2%, that's kind of a outsized one-day move, not a crash, but an outsized move. So we're analyzing the relationship between price of the IV index and percentage change of IV index when there was a big move in the underlying. So if IV is high to begin with, does it move less when there is a big move in the underlying? So we're kind of talking about volatility coming from lows and volatility coming from highs as well here. So
just because we're talking about this right now, volatility starting the year was 1845. It's 1975. I'm going to round up right now. So 1975 versus 1845. The market, believe it or not, even the S&Ps were 6,900. I think they opened at 6,902. They're basically 6,900, 6,880 and change right now. So the market is unchanged for the year between friends, and volatility is up significantly in that point, which I don't think we would have been saying or thought just a day ago, a week ago. Like, you would think that volatility was probably on the down slope, a little bit of a slide, and the market was unchanged or higher. I mean, we were higher by 2%.
Well, the other way you can phrase that is that with this move in volatility, you'd expect the market to be a bit lower than basically unchanged.
That's
right?
correct.
So,
That's correct.
Yeah, I totally agree. As we speak, volatility getting smacked a little bit here, just moved about 30, 40 ticks.
Yep.
And we got a little bit of like 10-point-ish bounce here. So let's take a look at some of our findings here. So with the exception of gold, all assets have at least some inverse relationship with their implied volatility. And what that means is, market goes down, vol goes up, that kind of thing. And you typically see that with equities, specifically with ETFs in general. So SPY, the Qs, IWM, those are all going to have this inverse relationship. It gets a little bit more, a little bit less correlated when you look at individual equities themselves. And that's because there's a kind of binary nature to it. A Tesla has changing skew. Sometimes it'll have upside skew. Sometimes it'll have downside skew. It's much less uncorrelated to the implied volatility. SPY and the Qs, it's pretty much a -1. Volatility goes up when SPY and the Qs go down. Note that SPY had the largest sensitivity to its IV and USO had the lowest. What this tells you is the things like gold, TLT, USO, commodity kind of focus ETFs here, they're going to have a much more random volatility correlation. Markets as a whole, ETFs, markets go down, vol goes up. That's pretty much 1-to-1. In something like a gold or TLT or USO, it's a little bit hard to lean on that relationship. And especially when you're having outsized moves like we've seen in like gold and silver recently, that is going to be, vol is going to continue to expand into those moves.
No doubt. Well said. I don't know. I mean, if you told me market's down 1%, I'm going to tell you volatility is going to be up. If you say the market's up 1%, I can't say that volatility is going to be up on the same proportion as the overall market. There's no doubt about it.
For sure. So next slide here. So gold is the only asset that had a strong positive relationship between price and IV. And what that means is as price goes up, implied volatility goes up. Bond and oil IV did not change when the price went up, and equity IV was inversely related. So, with gold and silver and bonds and oil, it's hard to kind of play the vol correlation. That said, these products also have this kind of the reason this volatility expands to the upside is because there is a perceived price floor. These are physical things. It's very hard to imagine gold being worth zero or oil being worth zero, or so that kind of downside is capped here, and so you typically have scarcity volatility come into play with these assets as well.
They're commodities.
Yes.
They usually have a little something to them, to the downside where they keep their value.
Yes.
Intrinsic value.
So notice that the lower IVs usually had larger sensitivity to price given a 2% move in the underlying. So here we're talking about when the underlying moves 2%, the average IV value that you're going to see here. Gold and SPY had the largest sensitivity and the lowest IV, while crude had the lowest sensitivity to the highest IV. And what this is telling you is the things that are going to have the highest volatility are going to move the most. Crude has had these huge spikes, and it comes with huge spikes in volatility as well. Whereas, SPY will have big moves, but the raw implied volatility is going to be much less, the 21 on average, versus crude where, 43 is the average, which is kind of where we're at right now in crude. And it's moving, 1% to 2% every single day.
Good.
Couple takeaways here. So since 2022, gold was the only asset that had a clear positive relationship with changes in the underlying price. So over the last couple of years, gold goes up, vol goes up. Everything else has a negative correlation. When S&P 500 goes down, vol goes up. We saw lower sensitivity between big price moves and spikes in IV if IV was already high to begin with. So when volatility is high, the change in volatility moving forward has tended to be a little less correlated to the move in the market. So the one-day down move like we have today, and who knows if it is one day, could be more than this.
Sure.
This is usually where you have the biggest move in vol. It doesn't typically continue at that same rate. This makes the case that selling
the first move is usually the biggest move. It's on a percentage basis, right?
Yes.
Yeah, I agree.
And the most correlated. So the next down move, tomorrow, if we have a 50-point down move, vol might not move
6%, 4 to 6%. It might move 2 to 3%.
Yes, exactly. So the magnitude doesn't correlate there. So this makes the case that selling premium in higher IV underlyings could be safer than in low IV underlyings. We've talked about this before. When volatility spikes, we don't know when it's going to mean revert, but you usually get that spike, and that's kind of the spot. For the same percentage price move, selling premium in crude oil will not go against you as much as similar trades in SPY. So selling vol in crude has been a little bit better than selling equity/ETF.
Good job out of you. And my friend just wrote in from Rhinelander, Wisconsin, and said, Chicago doesn't know cold. It's 27 below in Rhinelander.
I think we're probably pretty close to that. This weekend, we had a real.
It was 4 when I got in my car this morning. 4 degrees without the wind chill.
Yeah, with the wind chill, we're down.
Yeah.
We're below zero.
Yeah.
It's cold.
It's cold.
Get a jacket. Multiple.
Even the S&P is down 80. Just rallied 25 handles. Your Russell futures is still the strongest of the group. They're down 19 and change, which is 0.75 of a percentage point. NASDAQ, the weakest of the group, down 330 and change. Dow down 500 and change, was down 700.
You sell this bounce?
Say again?
Do you sell this bounce?
I had longish delta. I might. I sold some putties. I could look to cover some of those. That would be about it.
What do you think, though? Do you think those have moved all that much that we sold in March? Let's see.
March putties?
So we did the Qs and SPY. So
Qs, you sold
they've
them.
moved like 40 or 50 cents on this small little bounce.
Yeah.
Not a ton. I mean, obviously you're out 59 days, so it's not like
Right.
Yeah, but
Yes.
you sell e-minis here? That's my question for you. Just rallied 25
for a trade. If you're looking for 10 handles, I don't know if you're we're looking for anything more than that at this point. Volatility 1960 kind of hanging in there.
Yeah, it's kind of hanging in there. I think we
got
them right where we want them.
Let's take a quick,
especially on the Russell. Only the Russell basically freaking unchanged here.
Not. I mean, it's down 0.75%, but yes,
it's like
everything
nothing.
being equal, yeah.
That was what it was up on Friday.
Let's take a quick 90-second break and come back. We got more Tasty Live after this. What do we got coming up next?
We got the boys.
That's right. We'll be back in 90 seconds. Trade Desk. Let's Tasty Live.
Got big goals for 2026? Get the big deal. Earn a 4% cash match on all qualifying deposits, up to $10,000 total. Plus, unlock 30 days of commission-free trading. Trade with confidence using active trader mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. Earn a 4% cash match when you open and fund a new Tasty Trade account today.
Global markets never sleep. Explore them with Forex, now available on Tasty Trade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on Tasty Trade.
Got trader's block? We've got the cure. Get data-driven trade ideas with Cherry Picks, our weekly newsletter that gives you insights into the market. Sign up at tastylive.com/newsletters.
Just as Bob Fillin sparked a musical revolution, Tasty Trade has sparked a revolution in trading and investing. Isn't that right, Christy Ross? You stay forever young with this great compilation reel. Oops.
Real. It's not every song that can give me goosebumps.
I think I meant my. Damn it.
It's not every song that can give me goosebumps.
Oh, I think I left the stage door open. And what about this classic?
I was gonna push you.
I'm gonna push him too, don't worry, Christy. Bob Fillin's fiery Main Street anti-mainstream. Bob Fillin's fiery anti-mainstream financial media songs. God. Bob Fillin's fiery anti-mainstream financial media songs galvanize a generation to become self. Oh, you mother. And action. I just looked at you.
I know you did. You're not supposed to do that.
Deep breath. Release.
All right, I'm getting it all out.
Bob Fillin's fiery anti-mainstream financial media songs galvanize a generation to become self. Stop making me laugh. Is it me?
Oh, baby.
You're making it worse. Is it me? I did put on deodorant.
Oh, John, that one really takes me back.
Well, don't slip a disc. And there's more. Okay, that was terrifying. This doesn't look natural to me. How does this look?
It looks really good.
Does it? Seriously?
Yeah, John, we'll be the judge. And when you're ready.
Little Diddy is what we first called you when you first interned here. Then we first did something else first.
Where the hills are alive with the sound of music.
What?
My contact just fell. Come on, Christy, hold yourself together. You don't have any important meetings today, do you?
Oh my God.
Yeah, that's actually great.
I'm like crying.
Got the need for speed? No problem! At Tasty Trade, you can turn smart ideas into real trades with just a few clicks. Wow, that's fast. Tasty Trade, make your move.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. Only at Tasty Trade.
Earn a 4% cash match when you open and fund a new Tasty Trade account today.
Nikki, we are back, son, and you know what that means? Well, first, silver, 93 and change, 93.20.
Ooh. You like that, Glenn? Glenn's good for like a.
We're unched, by the way, right? I mean,
on our position,
on our punch,
yeah.
on our position.
But
yes.
this is that's the tasty way. You got to take a little bit of pain.
Of course, because you never hit the top, you never hit the bottom.
Yeah, you can't bang it out right at top.
That's only make-believe in the Twitterverse, or X, or whatever you call it right now. Yeah. And the trade desk is very busy, but we do have a representative. We'll get to him in a minute from the FX world. But first, let's go over the top 20 list. You want to do that real quick?
Yes. Do I get a DD? No, not really.
I don't think so. I don't think so. Not until I put you out of pasture.
Shit on me. Top 20 symbols going through the Tasty Trade system. First 45 minutes of the day. We're going to start at number 20, GDX at an 80. We've got Microsoft at a 41, UNG at an 89. You have Google at a 35, SoFi at a 25, TLT at a 20, MSTR, we've got it at 35, AMD at a 40 here. PLTR, Palantir at a 31, TQQQ at a 28. Getting into the top 10, we've got Amazon at 10, 39, Meta at a 33. You've got Apple at a 23, Netflix at a 46, earnings after the close today. You've got iBit at a 38, Micron never goes down at a 50, NVIDIA at a 12, Tesla at a 7, and then the top 2 are in the metals. GLD at number 2, and SLV at number 1 at an 86. That is a swift change. It's usually been your Tesla, NVIDIA at the top.
Right.
The new market is silver and gold.
Right. And why do we put up that top 20 list? Just to show you where everybody's trading on the Tasty Trade platform.
Yes.
That maybe you want to go in there too. That's where the liquidity seems to be. That's where the players seem to be. That's where the movement seems to be. No other reason than that.
And just to clarify, it's number of transactions. Right. So this is just high volume transactions. That's not size, not direction. It's just transactions. It's stuff that's being traded.
That's correct. That's correct. Good clarification. Even the S&P down 79. Go ahead.
I was going to do a quick PSA. I know we don't have Quentin today, but there is a demo today. If you want to sign up, tastytrade.com/demo, tastytrade.com/webinar. And then if you can't spell, or if you're kind of like me and you spell demos, because there's multiple, you put an S on there, make it plural. You can go there as well.
You'll still reach us.
Yes, you will reach them all. There will be no 404s. If you think of one that we should add, you let me know. You send me an email. I'll have them put that in there as well. But this one will be earnings season essentials. So we're talking about timing, strategy, and risk management. The team will be giving you the lowdown on earnings. So a good one, because earnings season is right around the corner.
Absolutely.
Netflix today, Netflix, UAL, the 2 big ones for today.
Very good. Very good. Yeah. I mean, they seem to take a back seat to the market now that you have some movement here, but we'll see by the end of the day. We'll do something in there. But you know what? Without further ado, let's not keep this man waiting, because you don't keep this type of man waiting. Newly coiffed Glenn. What's up, my man?
Fresh haircut. Looking good.
Thank you.
Yeah,
Doing
very
pretty good.
handsome. Very handsome. Look at you.
How are you guys doing?
Good. How you feeling?
Not too bad.
How was your weekend?
Fantastic. Well, yeah, it was good. Bears game, net positive. Had a little watch party.
Nice.
Some were saying it was the best watch party. Threw up a projector screen
Ooh.
in my apartment.
I didn't get an invite, but that's okay.
Because I already knew you had rented out half a bar. So I didn't get an, I got the, maybe I could squeeze you in.
Yeah.
I got to look out for my own people too.
No,
So I got to put on.
you got the invite. You
Yeah.
got the invite.
And so
Friends.
We're friends.
Well, I mean, I give the invite for you. You don't give the invite for me, but it's okay.
Ooh.
Next time. I want to hang out with the young guys. I want to see, what you guys are up to.
Yeah, no, it was a movie. We had a keg, a little mini keg.
Really?
Sure, yeah.
A mini keg?
Yeah, a pony keg, as I now know it's called. We had a bit
It's
of
like
a debacle.
having a petite fillet. You can't do that. You just got to get a big keg.
Okay.
Go for the extra $20
Sure.
for crying out loud.
Wait, what are you-
seriously?
what are we
What's the
gonna do?
difference between a mini keg versus
A
a
keg
regular
of Bud
keg?
Light is
It's
like $70.
It's
or
80, approximately 84 beers, standard pours, versus 160. 10 dudes doing 160. That's
Who
just not-
cares? Who cares? I mean, you just don't want to. Don't you want to have a, big swinging? I mean, you want to have a little.
Whoa, hey, Omar.
It did the trick.
How much did the little keg cost you? Remember?
Like 120.
120.
Thank you, Laura. Thank you.
How much does?
The prices
How
are
much were
moving up.
they for the pony?
Like 120.
Really?
Yeah.
I thought they were cheap.
Price of going up. See that?
No. Yeah.
Inflation, my God.
Let's see how much. A keg cost anywhere
But it
between
was less
100
about-
for a small 1/6
Yeah.
to 250 for half a barrel.
The YouTube chat's pretty upset that there was.
Yeah, 150 for a standard half a barrel. It was $50. I guess 50% more.
Yeah.
I mean,
I mean,
I don't know, for the $50. I mean, I don't know.
Nobody.
I couldn't do it.
Nobody
I couldn't do it.
commented on the
I say
size of
that-
our keg.
Listen, and I come from a place where if I had $20 in my pocket, that was all the money I had to my name in cash. I gave it to my son. So I'm
That's
not
very kind of
talking
you.
out of my arse here. So if I was throwing a party and I had to go with zero in my pocket or have a big keg, a normal size keg, I would have done a normal size keg because that's the type of guy I am.
Yeah, the chat is also kind of saying you can't do the mini keg. Yeah, like that's.
But it was-
it's
Or
an
I
op-
collect $5 extra from those 10 friends that you have.
Yeah.
$5.
Yeah, and then they're
It's a
calling,
foot long.
What though?
Don't eat the foot long.
Yeah, and then they're calling you out that it was probably some foo-foo, like a cider.
What was it?
something
Please don't
like-
tell me it was like.
Yeah.
Tell me what it was. It wasn't flavored, was it?
No, it was Bud Light.
Bud Light.
It was
Oh.
we compiled this plan.
That's like camel piss.
We're gonna
sugar Bud Light.
Yeah.
We're gonna try to go to a bar right close to mine, but once
You're
the
gonna
number
try to go to a bar, your young legs wouldn't make it there.
Can you just
No,
give
it's
me a
tough.
second?
It's tough to get. You gotta.
This one, there were no reservations, like you can't, so we were just gonna grab a corner, but our number quickly approached 2025, and so we pivoted. Said house party instead.
Oh yeah.
Move up a couch from the basement, projector screen, more TVs, Rinaldi's Pizza. And so the keg was a one-day operation. So on short notice, that's all we could get. They didn't have my favorite cider in a in a sixth. But I quickly learned that a half barrel keg is a full keg and not a half keg. The man on the phone was very misleading. So we almost had a full keg by accident.
I make-believe margins.
Yeah. But it was fun. It was good. Except for the loss.
Yeah. It's okay. Good season.
Yeah.
Good season.
Pretty good. How was the barn?
It was fun. It was good. It was good.
Still gotta
Had
go.
a good gang. Yeah.
Any of the Barstool crew there? They have their own.
No, I did see Big Cat driving around in his Range Rover the other day. Yeah.
Who'd you see?
Big Cat from Barstool.
Yeah.
'Cause they got the Barstool offices like
Yeah.
close to here.
Yeah.
I see those guys every once in a
All right.
Yeah. Did you invite him to the party? You didn't invite us.
Yeah, no, he was definitely invited. He came with like so many people, and he was like, "Yo, mini cakes are in." Nice one."
Oh yeah.
So on a day when the markets are moving 1% or more, and gold and silver is moving 3 and 6% or more.
This is his Super Bowl. You got all the Japanese yen stuff, the rates, all this.
So give it to me, because I was going to mention bonds down 1 point, down 28 ticks, almost 32. That's got to get the tasty FX world excited.
Exactly. Yeah. Woke up this morning to a pretty big move here in the U.S. dollar, not to the U.S. dollar favor. Dollar sliding across the board here. Pretty interesting. FX markets were open all standard hours yesterday, even on the Sunday open, but the move really happening, drifting a little bit higher since Sunday. Eurodollar went from closing on Friday below 116 to now we're trading. This morning we hit 117.5 in the spot market, now coming off a little bit from that, but mainly all the speculation around the political leaders in Davos, Trump firing out as much as humanly possible. And so we're really on this side monitoring the Twitter sphere this morning, trying to play catch up with all the random headlines and the threats on Greenland as that crisis escalates, threats of tariffs. And this is an interesting time to look at FX markets and how they react. And a lot of FX moves you can maybe retroactively tie to fundamental drivers. Even though there are a lot of numbers, it can be pretty clean to read, GDP growth, inflation, interest rates in a pretty succinct manner. Now really not one of those cases, as we see when we have all of these exchange rates that are all on a relative basis and we get a shock to the system that is purely speculative. We see it more just play out in risk and uncertainty. So right now, a flight to quality, but that quality with the risk being very U.S. specific. The U.S. dollar is not treated as one of the
Actually, like it almost seems like the opposite.
Exactly right.
Of what you would expect if you were expecting this, right? What to expect when you're expecting? Not this.
Not this.
Yeah.
But it is interesting to see that the move playing out directly to the counterparty in this tension, the EU, the euro, directly in that market over something like the British pound, seen a much larger move to the euro side. And even if you're checking those cross-currency markets, euro, British pound directly up almost 0.5% today, that bouncing off of its lows.
You steered us towards that one. That was a good one.
There you go.
You're in the good
Who's
graces.
expecting what now?
You are, my man.
Got me a quick.
I mean, you're more than just a pretty face. I mean, that's why we bring you on here. You're
Every once in a while.
wealth of knowledge.
Well, I appreciate that, but very, very interesting because when we have these kind of risk shocks, And where is this playing directly to? It's not only that the euro and the EU is the direct counterparty to this direct escalation, but it's also the biggest other liquidity pocket in the world of FX. So if investors are taking their investments out of US dollar, the next best place would be to that euro market. But we're also seeing the move in the Swiss franc, a very pronounced down a full 100 pips from its Friday close, and the same 100 pips.
But some of that.
All right.
Another long dollar position for me. For my paper trade.
Well, you're getting it at same thing as, if you bought some QQQs today, you're getting some 2025 prices for this US dollar, especially against that pair. And something to monitor as well is if the risk sentiment firms up from the US equity side and we start to see, a little bit more of a risk on move back, that might not particularly translate into the same amount of flows back into US dollar. So I'd look to something like the Australian dollar, US dollar, which, from a geopolitical tension aspect in a very different pocket of the world. So could see less headwinds there for that currency, and continuing to monitor.
It's not good for my positions.
Because you're short that one.
I am short the Aussie dollar.
That also brings up an interesting point for retail FX.
I won't put that on
traders.
you.
Thank you.
I won't put that on you.
Is when you have situations like this, and it's really hard to track exactly what fundamentally is developing, it could favor a lot more flexibility, a lot more short duration trading, and not getting stuck on one specific price point, because in these spot FX markets, you do have to get directional unless you're trading the options on futures. But in the spot market, you do have to get directional. So being very flexible, perhaps favoring momentum strategies, because as much information as retail traders have, especially on the equity side, still a little bit of some gray areas when you consider the global FX market. So I wouldn't say safe to presume that the information is all equitable to retail traders, so might favor, instead of trying to call a contrarian top, riding a little bit more of the momentum as we see it play out. And just
but that's what
try
we
not
do.
to get
We
too
do
greedy.
contrarian tops. We take a little bit of pain. And then when we
You have to.
and then when we get back to a scratch, we pat ourselves on the back.
There you go. But important to stay flexible and know when you're wrong, because as these things can tend to trend, don't want to get stuck in a position you had just because it was new at the time and now things are categorically different. So a lot of opportunities out there. And when you're trading the US dollar against these specific currencies instead of a basket, a lot of opportunities to layer in and get some unique exposure there, and not necessarily be tied to I'm long dollar across the board. So a lot to monitor from the US dollar front in terms of economic data this week. It's kind of UK heavy, and that'll be interesting to see play out because we haven't had as much of a run up to the British pound as we have against the euro in the dollar market. So I'm looking at British pound pairs. That euro pound pair particularly is pretty interesting, as we've got, I think, employment, inflation, GDP, everything this week from them, and certainly some domestic risk still in those.
You like that from the long side?
Yeah, I mean, of course, we'll see if the data comes out and is not favorable for the pound. That we can see that turn around rather quickly, but it's nice to see some volatility back in these pairs so we can get some more unique price points.
Yeah, Euro vol
trade the
Ivy range
ranges.
16.
Not
You'd expect it
crazy.
to.
No,
1% move. You're not like having an explosion in volatility.
And that's the other thing, is it's so
It's in
tough to
single
compete.
digits. Like it's not even moved into double digits.
When you have, traditionally a lot of the flight to safety would play through directly in the currency market, but now we're seeing so much demand in metals and everything else that it's hard to get the same volatility.
Yeah, silver's rallied
been.
75 cents since we, and you laughed at us. You were right.
Yeah.
Laugh at us.
Yeah. You know we're getting goofy because I was seeing all sorts of tweets now measuring S&P versus gold, like the S&P in gold terms, not in dollars anymore.
Sure.
'Cause 'cause
we've
the U.S. dollar is toilet paper now, and now we have to measure everything in gold and silver. And so the S&P is actually down about 40%,
60%,
50%.
All-time
And so, like,
highs. What numbers are you looking at?
Yeah.
Fiat?
Well, if you bought the dollar, I mean, you're down money. I mean,
yeah.
over your time. That's
So I feel like we're getting into that, like that's usually that feels like it could be a top signal.
Almost 10 p.m. Even the S&Ps or SPX expected moves.
10 a.m.
10 a.m. Central. It's $25. It's more than what it usually is at 8:30 in the morning on regular days that we've had all of last week. It's about a $25, $24 expected move at 8:30. So if you're talking about volatility, just on a decent sized move of 6% volatility, you're really talking about an hour and a half worth of time. If you're looking to put on an SPX trade now and you think we've seen the lows, seen the highs, you're actually getting paid about an hour and a half worth of time putting it on now and waiting.
Because volatility hasn't really come in.
Because volatility really hasn't come in. That is correct.
Interesting.
Parting words, my man G?
No, just I'm unfortunately or fortunately going to be reading some Truth Social posts.
Oh, yeah.
Don't do that.
Yeah.
That'll
it's been a wild day today. I'm seeing all sorts of different maps.
Yep.
There's all sorts of different flags in places. We're in silly season.
Maybe an emergency.
We are in silly season is a good way of putting it. Yes, you are right.
Yeah.
But yeah, that conference I think goes on all week, so we'll stay tuned to the French Prime Minister tried to call a emergency meeting. Trump said I will not attend.
Ooh.
So I don't know.
Now you can't have me. I've dated people like that. I really have. I really have. I really have. But all right, it's okay. Whatever. It is what it is.
Yeah.
Good job out of you, my friend.
Thank you all.
All right. You know what? I got to take a quick 90-second break. You want to take one too?
Yeah, sounds great.
Let's take a quick 90-second break. We'll come back. We got more Tasty Live after this. What comes up next?
Got Liz and Jenny live from the trade desk, the trading floor. It's going to be electric when the ladies are live.
You're going to hear a lot of noise. Let's hope so. We'll be back in 90 seconds. Let's Tasty Live.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that 1-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. Only at Tasty Trade.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade. Got big goals for 2026? Get the big deal. Earn a 4% cash match on all qualifying deposits, up to $10,000 total. Plus, unlock 30 days of commission-free trading. Trade with confidence using active trader mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. Earn a 4% cash match when you open and fund a new Tasty Trade account today. Earn a 4% cash match when you open and fund a new Tasty Trade account today.
And welcome to the Liz and Jenny Show. I'm Jenny Andrews. This beautiful blonde is Liz Deerking. We are back after a long holiday weekend.
Live from the SPX pit, these knuckleheads behind us are screaming and yelling as they well should be. Market is down, but not down as much as it was.
It was down 81. I think I saw them down as much as 107.
107, I think.
That was what we saw on the train.
Yeah, around 9 o'clock, which is something that we're going to discuss later. But yes, around 9 o'clock, they were the lowest. They are percolating back here. There is some action on the
time for that. She was waiting. She was waiting to use that. She is counting down the days to the dance floor in Mexico when we can request the time for the percolator and surprise all of our friends. Matthew's laughing. He must have looked it up and listened to it over the weekend.
I'm going to request it, and it's going to be amazing because, yeah, that is true. The two of us are going to be in Mexico, not this week, but the following, to celebrate 14 girls
turning 50.
So, yeah, sorry. This is a show about trading. Market is down.
The SPOOs are down, only 79 right now. There's a little bit of a rally. I don't know what to say. Natural gas, big mover.
Okay, let's let everybody see what we're looking at. Natural gas, natty gas. This was a miracle.
Sunday night, Sunday evening. Thank goodness for
Sunday. Here we go.
Oh gosh, Sunday. Please don't remind. People are still talking about the Bears game. They're still talking about it. I had to listen to my husband all day on Monday. All day Monday, drove me nuts.
Oh.
He didn't get 1 minute of sleep on Sunday night. He couldn't sleep.
I mean, it was a great game. It was a great game.
You know,
it was fun to watch.
It was exciting.
I was in a rowdy bar with a kid.
next year.
Yeah, it was a good game to watch. Okay, so natural gas, Sunday. It at 5:16 p.m. Our trade got butterflied off. What does that mean, Jenny Andrews? What does butterflied off mean?
So we had a broken wing butterfly because in natural gas, it's the big dog. We couldn't afford a naked ratio spread.
There we go.
So trade of choice would be a downside ratio spread where we would buy a put, sell two, taking a credit. We bought a put, sold two, and then bought one and had a broken wing butterfly, put it in order to make that a symmetrical butterfly and take off all risk.
So looking at the side, it looks like we locked. Okay, I'm just gonna just review the tape here for a second. It looks like we locked in. We got 80 cents when we put it on, and we paid 40 cents, which is 0.40. So we should have a $40 credit. We have a $330 credit.
Whoa. It's marking for 001. We sold a 0.03, so that's $320. So we sold that ratio spread for 0.032, $320. And when it opened in the evening, we butterflied that off.
No. So correct. I agree with you.
So $310. It should be like $300.
No. Hold on. I agree with you. It's weird here because these are, I think our trade prices are screwy because if you just look at the side over here, Jenny, it was a broken wing butterfly that we only took in 80 cents for. We wanted to lock in a 40-cent credit, which we did.
Oh, okay. Oh, so I think we only locked in like $40.
That's what I'm saying. There's something we know what it is.
Yeah, because
so I just want people to be very fair in that it's not a $330 winner.
No, you can go to the order chains. It's not. I don't think it's marking word. I think the winning part of that trade,
There you go. It's $50.
the winning part of that, the winning part of that butterfly is gone, and then the new one's on there.
I just want people to realize you have to kind of know what it is if you're butterflying it off, because it looks like it's a $330 win. It is not. It's a $50 win.
It's not. And if that butterfly comes off for zero, we're only making like $40-50. We only took in
you're making
$40 to butterfly that off.
Correct. Okay.
Too bad. I
But
thought it
it's
was
still-
better.
I know. That's
I was
what I
like,
was
geez,
saying.
look at natural gas.
But it is still a win, and it's what we wanted. Natural gas is huge. It's a huge.
We've got this free butterfly. If it heads back down to the 2-handle, although with this polar vortex, are they calling this cold a polar vortex?
I think you just did.
With this polar vortex, I don't know if natural gas is going to come back down anytime soon. It is so cold, and I have no heat on my second floor.
I know, it's insane. I can't believe you have no heat.
I told Liz, stay far away from me because I couldn't shower, I couldn't wash my hair, I couldn't do anything. All I could do was spray on some perfume and head to work because I have no heat on my second floor where all the bathrooms and showers and everything are, and I couldn't, it was too cold to shower.
I know, only because I did finish Landman. It's as hot as a $2. This is a family show, so I can't say it.
Well, it's too cold in my house to shower. Luckily, the furnace man is coming later. If I have to buy another furnace, this will be my second furnace in like the last 10 months.
For that house?
No.
Oh, for the other house too.
Yeah, but second furnace this year.
Yeah.
Or in a short amount of time.
Yeah.
But anyway, it's very, very cold, and it's not warming up. The weekend is going to be single digits again.
Yeah. I don't know if that's why natural gas is up.
I don't know, but it's cold everywhere. Cold everywhere.
Okay, but that being said, let's pop back into
in the platform.
The other things we want to address, we've got Twitter. Put the hashtag LIZJNY, Bob on Fire. We love you. We are going to take a deep dive into what you sent us. But if anybody wants to put that on there, hashtag LIZJNY, please do. But first and foremost, we're going to manage our IBIT. Is that okay?
Oh, sure. Okay. So crypto has taken a hit. Bitcoin is down to 90,000. Last week it was up to 97, 98.
Yeah.
Right? So it's definitely taken a hit, which IBIT tracks Bitcoin, and it's down quite a bit since we put this trade on.
We have two separate trades in here. One, and we're going to address both. One, we have a synthetic jade lizard, which you can see right here, and you can see in this. The call spread, totally worthless. I mean, it's totally out of the money. So I'm just going to get rid of this so it's gone, okay?
Yeah, you can.
Pay debit, 1 cent, call it a day.
Sure.
So it's gone. Now,
I mean,
I'm not paying 2 cents for this.
No, I don't think you need to do anything.
Okay,
with
so
that.
just ignore the call spread. So in this example, we've got this put spread that's got 3 days left, but we've been doing it very short term. So we've got 3 days left in this put spread. So we're going to do something with this. I'm going to close the put spread, and we're going to take it 10 days out.
We've been doing weekly. We don't want to pay a debit. I don't want to pay a debit to move it. So if we're doing weekly, and we see this put, and it's to roll that out as 70-cent debit, I would say, maybe widen it a strike and add on a call.
So I'm going to widen it, and this isn't really a debit if I do this, but I can't add the call on. You can't add them together.
Oh, we can't have so many legs.
We can't have more than any legs. So we know we're paying 31 cents for this, okay? Deal? We know we're paying 31 cents for this. I'm rolling it out in time.
But, okay. I just want to make sure, you're always aware of extrinsic value, because some would say just close the trade and start with a new trade, right?
You could.
And maybe that's the answer. Maybe the answer is close the trade and start with a new trade, because here, if you look at that, we're buying an option for 80-something cents extrinsic value. We're selling one for 44. We have to at least sell a call to cover that extrinsic value.
So I have no problem doing something like this, but I just want to make a quick decision, because that's what option traders do, is quick decisions. You can do, this is $5 wide, I'm paying $160 debit. We just said we don't want to pay a debit. You're still going to pay a debit, but you've got extrinsic value.
Oh yeah,
I doubled it.
Maybe. I like that. I kind of like that, honestly.
That's kind of a lot, though. That's kind of a lot of double. So, or we just close this whole thing, and we know we're down a couple $100, but it's not that bad, and just put on a new one in the 10-day.
We could.
Let's just do that. We're going to close this one and put on a new one in the 10-day. I'm not worried about that call spread, although I will close that call if it comes to it. Because we can make about $1.50 back, and it's 10 days.
Sure, close it. There's 70.
I'll make sure that we're closing that one. But if we're going to put on a new one,
and get a little more aggressive for it. Collect a little more. Where you've got that that 52. I think that's fine. 52.47.
Yeah, there you go. But we're going to also add a call spread. Okay, we filled in the one. But I'm also going to add a call spread. So I'm getting 150 for this. If it goes gaps up wildly, we'll get the 50 cents. I want to make sure I'm getting something for it, though.
Right, I do want to make sure.
I don't remember what it was. 20 cents.
That's
usually what we would be doing.
Yeah, and if it takes us a couple weeks to make back the loss of this move in IBIT, fine. And I don't mind just throwing on that put spread. I really don't.
We're just putting on the put spread.
Yeah.
We closed the one. We've got the other one on. Next up for IBIT is this. We have the synthetic poor man's covered call, where we used a zebra in March, which is fine. This one can stay because it's still in the middle, and we sold calls against it. The
call, isn't it in the same cycle? Or no,
the call's in the 31-day. The call we made 50% on. If you take a look at this down here, you can see the call that we sold. We made 55% on. It's only worth 47 cents.
So normally, if you put on a covered call, we'll say on as a package, off as a package, or you move your call out in time, or whatever. Here, we put that on the last time we were together. Last time we were on the show, we did this zebra and IBIT and that covered call. We added that call. I don't mind taking that call off since we just put that on the last trading day and waiting for a pop in Bitcoin and add a call again.
Right, and so the other thing too is we can stay in that same cycle. I wanted to look at our stock, but we wouldn't even be crossing streams. But I want to wait. I want to hold because I do think Bitcoin's volatile enough where we might get a pop. So we just did both of that. So So we just have the zebra, and we now have just the put spread. I'm going to get rid of this call spread just in case.
I don't mind, really. As I'm pushing these out to the follow page, we closed the one put spread for $2.50. We added a new spread for $1.50. So $1.
And then I just took in 50 cents.
$1 loss there. Whatever. It'll take us a week to make that back.
And we're doing weekly. This when you're doing them so short term, they need to be micromanaged more so than your things that are far out in time.
And you did get rid of that other short call.
Yeah, I just got rid of one short call for.
Okay, so it's kind of quite a bit in IBIT that I'm pushing out on the follow page. A lot of it's closing. The only new trade is just that new put spread in the 10-day.
Yeah, everything else is closed. I left this long because we don't need to.
Yeah, you don't need to worry about that.
Okay, so all that is going out there. It really isn't much else that we need to manage in here upon further review. So I'm going to pop into Twitter. Are you cool? We also have a study, a zero-DTE study from Jacob. We love Jacob, and we're glad that we have it. But I want to pop into Twitter first. Are you okay with that?
Sure. Liz is going to pop into Twitter. We have a super exciting tweet from Bob on Fire.
Well, here's Bob on Fire's earnings, which we do love, but...
we are taking live tweets, include the hashtag LIZJNY. That's what we're looking at. Anything that has the hashtag LIZJNY. And so, I don't know if you want to go top down or start with Bob's trade idea.
The Bob's trade idea. I'm trying to find it.
You've got to go further. Okay,
there
here we go. Here we go. So if you show more.
So here, I'm going to give this first. Eric is the one. Eric and I love it. Blue Wackadoo, thank you very much for bringing this to our attention. It was awesome. And he's saying Bob is the master. It's called the Ratio Super Bowl is the name. Go good forward leverage, no loss of flat with time on your side if things go wrong. So it's great. And that's where we're getting this from.
So for those of you who missed it, Friday we had someone, I think it was Blue Wackadoo, post a trade and said, this is a trade that Bob on Fire has been doing. And so Bob on Fire followed up with the mechanics of the trade. And I'm sure the viewers would be interested in this. I know I was. But he talks about the mechanics of the trade. And these trades are bullish, not necessarily for a small account. Risk is owning at the put level, only trades that you can afford and don't mind owning at that put strike level, which we say that all the time. We only sell naked puts if we wouldn't mind owning that stock at that put strike level.
Correct.
Yeah.
And we did one of these trades. Now we switched it to Liz and Jenny style. We're going to take a deep dive into this and take a look at with Bob's. I love what he writes out the mechanics. This is wonderful.
He has the mechanics written out. And he talks about how he manages these. These typically have a delta of around 45 to 60. He'll go out 120 days or 300 plus days.
Versus a leap, yeah.
I've seen them come off for 20% in an hour. He'll usually take them off for 20 to 30% of max profit. I've traded hundreds or more of these.
He also said he's held them for an extended period of time.
Yeah.
I think the hour is probably a rarity. Right.
I've traded hundreds or more of these and made thousands in Tesla, Nvidia, and many others. And then he linked an example. We're going to look at some examples because this is great. It's another new tool to have in our toolbox, right?
Now,
Another trade idea.
We did one of these the other day in DraftKings.
Yeah.
Now, keep in mind,
We had a DraftKings position, though.
this position,
That's
that put
old.
is where the bulk of our loss is coming from.
So we did the 332-dayer. Maybe we look at a shorter-term 120-dayer.
Yeah.
I like that Bob it's not just these have to be 300 days or 350 days. He'll do some 120 days, and you can compare and see. Your risk is owning the stock at that put strike, so you can compare. If I'm going to put this on with 120 days to go, where's my put strike? Versus if I'm going to put this on in a leap, where's my put strike?
Correct. Now, while we're in here, Jenny, I just want to do this because he's saying 20 to 30%. I'm going to put a GTC in for this for 30%, but I'm going to show people how you figure it out.
I don't think you can.
No, you do 10. It's $10. So you can see your call spread is $10. You're getting a little bit of a credit, but
right,
I'm
you can't put it as percent. You have to put what you want. You can't put it as a percent because we put this on for even. So
I'm going to say close position, and then I'm going to say full, and I want to get it. I want to pay.
So if we put this on for even,
we put it on for a credit.
Well, a very, very, very small credit. But to
It's gotta be off as a
Liz's
credit.
point is it's a 33.43 wide call spread can be worth $1,000. If we took 30%, we'd be taking a $3 credit. $3 credit. If we take 30%.
I was going backwards with it. You're right. So if we take it off, and you got to switch this to credit, see?
Yes.
So I'm taking it off for a $3 credit. Now, granted, it's gone against us. It'll be easier to put the other GTC in, but let's keep this in, okay?
So we know if we put this on for even, and you're trying to get close to even or a little credit.
I'm sure we got a little credit.
And if it's trading for $340 debit right now, we know it's about $300 loser. But if we want 30% out of this, it's a $3 credit.
Yeah, perfect. Okay, so that's in. Now let's go through his example. What would you like to do it in?
I know you mentioned looking at Intel.
I would like to do it in Intel.
We don't have an Intel position,
Okay.
so sure. Intel is one of the few stocks that's up today.
Oh.
But that's okay.
I know, but we'll do it in Intel anyway. Okay, so what's great about this is Intel's got earnings in a couple days, so we don't need to worry about earnings.
Because you're going so far. With these trades, you can't worry about earnings. You're going so far.
Yes. So what would you like to do?
Let's
give me a
compare.
second.
Let's compare like a 120-dayer
So I'm
to
going to
a
go
leap.
115, so that's May, okay?
Okay, and I'm going to read you Bob's mechanics from his tweet. His mechanics are buy an at-the-money call.
Yep.
Sell a call. Do you want to walk through it as we? Okay.
I'm putting it on as you do it.
Okay. Buy an at-the-money call.
Yep.
Sell a call above it for half the premium.
Which is funny because that's his mechanics, but that's where when we pulled this up before the mechanics, I pulled one up and I had the exact same thing. It's almost to the expected move for the cycle. So let's keep this in mind.
And it's almost a 35 delta. So it's like you buy an at-the-money call, you sell a 35 delta. I mean, who knows? But it's kind of like the zebra where we base it on credits, where he's looking for.
And I like basing it on credits. This is different because it goes from 60 to 55. So I had to choose: do I want the 60 where I'm selling a little bit more, or do I want to go the 65 where I'm buying a little bit more? I went selling a little bit more.
Okay, so buy an at-the-money call, sell a call above it for half the premium, then sell 2 puts to cover the cost and take in a small credit. Always a credit.
15-cent credit.
I like to target 10 to 20% of max profit for that credit.
Okay, so let's take a look at this. Now we're taking in a little bit of the credit. We're taking in a little bit of credit.
Wait, it says I like to target. I like to target 10. If he's targeting 10% of max profit for that credit, if your max profit's $1,000 and he's targeting 10% of that for a credit, then he's trying to take in $1. Then he's trying to sell 2 puts and take in $1.
He's trying to take 20 to 30% of max profit.
No, when he's giving you the mechanics of setting up the trade, then sell 2 puts to achieve a credit. I like to target 10 to 20% of max profit for the credit. Meaning, if your profit target's $1,000, he wants $1 credit.
10 to 20% of the profit target for a credit. Oh, okay.
I mean, so if you look where the mechanics are,
No, wait. With the put so far from the money, I typically take them for 20 to 30% of max profit.
No, go up 2 paragraphs. Go to the second paragraph where right there where he's giving you the setup mechanics. Buy an at-the-money call, sell a call just under half the premium, then sell 2 puts below to achieve a credit. I like to target 10 to 20% of max profit for that credit.
Oh, so he needs $1 on that.
Yeah, so he needs he goes for a bigger credit. Instead of just putting on for even, he's going for a credit.
There you go.
Yeah.
There you go. I just brought it up a little bit. That's not bad.
So then the risk is getting long 200 shares of Intel at 39. That's the risk. That's why he's saying this isn't a trade for small accounts, because the risk is getting long 200 shares of the underlying.
It reminds me so much of Tony from Mexico, where it's the credit on a credit. So he's got this here, but when you're out so far, what's $2 in Intel? You're going to the 39 versus that.
If you didn't take in that credit and you did it for even, how much further do you go with your strike?
2 points. I brought it down to here.
Yeah.
My only issue with this, Jenny, is take a look at how wide that market is on the 93.
On the
39, sorry.
So, yeah, the market is wide. The only issue we have with going out to those 120 days is the markets are a little wide. Can we compare this to going to the Jan Leaps? I thought maybe the Jan Leaps might have a slightly tighter markets because they've been active for a while, because they're leaps, they've been around for a long time.
Okay, let's follow the same process. So it's going to be, you are buying something, 50% of that is going to be right around here.
Sell some, yeah.
So you're 10, it's not 50-60, it's 50-70 now.
So here your profit potential there, 50, 60, 70 is $2,000. So then you would want to take in, if you want 10% of that profit potential, you want $2 credit.
It's 37, you're down farther, you're down.
Yeah.
I could take it down one.
You can take it down one.
It's the problem.
Yes, somewhere
strikes.
So there, your short strike's 37 instead of 39. You're taking in a bigger credit, and you've got more profit potential. So going further in time gives you more profit potential, better strike, bigger credit.
Yeah.
You can choose.
Yeah.
What do you think?
I kind of like going a little farther out in time. This isn't bad. January 27, so it's 1 year, almost 1 year to the day from today. And let's follow it. Now I'm going to put this in for a very quick. If you're taking 20% of max profit, we've got $2,300 in max profit. So I'd rather err on the side of 20% instead of 30%.
So, right, 20% of max profit. So if we're taking max profit $2,300, then $520.
Right. So I'd have to put this in for a $500 credit.
No, more than that. We're taking in right? Or if we take in $345 credit, less than that, then we just need to take in a $2 credit. Does that make sense? If we're taking $345 credit now.
This is breaking my brain. I don't know what to put the GTC in for.
Wait, if we take in
I think it's got to be for a $7 credit.
If we take in $345 credit now and we close it for a $2 credit, we have to close it, then we make $545. Let's put it in and try it.
Okay, let's ship it, but I don't think that's right.
So we're going to take a $345 credit. Let this work. Again, markets are a little wide in Jan, so
do you know what's funny about this?
This is a test.
Is if you wanted to take it off for 10%, all you'd have to do is put it in for 0. Markets are a little wide. We can let that percolate as nicely as I use it again.
Because if you put something on for credit and take it off for credit, you add up those credits, and that's your total.
Yeah.
So if we want $500 and we put it on for $3 credit and take it off for $2 credit, it's $500.
Yeah.
Because if we go to close it right now, it's going to say $3 debit. So then taking it in off for $2 credit, $500. Bob?
Well, we can't get filled. So I've taken it down by 50 cents.
Now you're at $3. $3 final offer. Or we switch to the 120-dayer. Don't go too far.
$2.90?
No, I would say $3 final offer, Intel. Take it or
let's leave it on there.
$3 final offer, Intel. If those Intel market makers are listening to us.
We appreciate that, Bob. This is all in there. I'm actually going to retweet this because I love it. Let's put that in. Okay?
Yeah.
So that is in. Going forward in Twitter, we're going to go top, bottom, down.
Liz
now, thank you,
these.
Ashvin. I like anything that is only available for a limited time. That's why I love the McRib. I love the Cadbury Cream Egg. And there's something else. Oh, the Shamrock Shake.
Okay, so if I have to pick my Easter candy of choice, it would be
Cream Egg.
stale Peeps.
Oh.
Old, hard, stale Peeps.
Oh, okay. Florida 7 comes in. CTT, oil exploration and cattle. Do you know what that is, Jenny?
No.
So I do, Florida 7. I do.
Florida 7, I knew she knew because when she said, do you know what that is, Jenny?
And he said, Jenny's going to know. You know, what do you think it's from?
Oh, that's from Trading Places.
No.
I don't know.
It's from Landman. Landman.
Oh, from Landman. Oil exploration, get sell puts, buy calls, or both. No, I didn't know.
I got it.
didn't
And
know.
it stands for Cooper Tommy Thomas, oil exploration, and he had to throw and cattle on there because he didn't come up with the LLC yet, so he had to come up with something so ridiculous.
Liz, look at her.
I watched it yesterday.
Watching Landman.
I literally watched this episode yesterday.
So people at work texted me and said, I just watched this, and then I heard Vanetta talking about it. Everyone is watching that that hockey player show, like Fire, what is it called?
Fire Nights?
Heated Rivalry. Okay, so everyone is watching this Heated Rivalry, and so I thought, I have nothing to watch on the plane. I'll download Heated Rivalry. Not appropriate for a flight where anyone could see you.
Oh my God, I hate when you are on a plane and you have to go like this with your screen.
I just had to stop. it. I was like, this is not plane appropriate. This has got to stop. But Vanetta was talking about it earlier. Our producer has seen it, and when I was sick, that's when I got she recommended
so
it.
So she wanted some smut for you when you were sick?
It's about... It's interesting because we have friends who have hockey players. One who could have, really been quite a professional hockey player.
I wonder where you're going with this.
Well,
with the smut.
There's many hockey players in love with each. Like, there's two hockey players in love with each other, then another hockey player in love with this other guy, and it was sad because it's a real love story. But they have to like keep it under wraps, and they can't like. It's kind of sad, but I had to stop it.
I will not send this to the mother of the hockey player because
I will resume watching this love story when I'm not on an airplane full of children.
There you go.
I don't know.
Coming from Disney.
In Orlando. Plane full of kids.
Okay, Bob on Fire also gives us our earnings. Today we are also on last call, so tune in for that later. We're going to be trading these earnings. Netflix, UL, Johnson & Johnson, Halliburton, and Charles Schwab. I'm very interested in Netflix since it's split. It's a low cost option to trade right now, and they're also in bids for Warner Brothers. I think they changed it to an all cash bid today. So we'll take a look at these on last call. Don't you think?
What?
I got it. I'm picking up what you're putting down. Okay. I've known Jenny for so long that we can just talk to each other.
I don't even know what to say.
I don't either. Okay, Frank Walsh. Frank the Great, we love you, Frank the Great. I was texting with him this weekend. Frank the Great, he comes in from the SIBO. Friday's option volume, the 80 million contracts was 37% above recent levels, with calls leading puts 11-8. Among the 500 most liquid single stocks, 30-day implied volatility was higher for 170 and lower for 281.
Wonderful, Liz. Thank you, Frank. Thank you.
And today we had at 7:45, which is 8:45 our time. It's ICSM weekly retail sales.
Excellent. Well, I will say, so we were waiting this morning to put on our SPX trade. We're on the train waiting just past 9.
But you should wait just past 9. It's so hard for me to sit on my hands.
At 8:50, I opened it up. I said, Liz, I'm going to sell a put spread in SPX. And Liz is like, you better wait till 9. And suppose we were down like 80 something at 8:50, and then by 9 they were down 106. So you're so smart, Liz.
Well, it's not me, it's Jacob, and you'll see why in a minute.
Oh yeah, that's a good segue.
Did you like that segue?
That's a good segue into our study today.
I just wanted to get to a couple more on Twitter because I like the Twitter peeps. Punish Pixels, thank you very much for coming in. We know we love seeing the name in there. Good morning, ladies. Is it time to buy the dip? How about an upside crab in ES?
Ooh. All right, you go to ES and I'll look at this. And so ES is like half the size of SPX. If we wanted to make it smaller, we could go to SPY.
Or you could do MES. Okay, hit me with it.
Okay, buy 169.25 on
cycle?
the January 26th cycle.
January 26th. What do they want?
January 26th by 169.25.
Okay.
And then in the January 23rd cycle.
Okay.
So this is, all we're going to wrap up the end of this week. And January 23rd, sell 2 69.75s. Okay.
Okay.
Sell 2 69.75s and buy 1 70.25. So this would use $16,000 by buying that 1 70.25 we're
Well, you cut
only
it in
using
half.
$820.
Yeah, you cut it in half.
Yeah. So now this is also giving us good margin because we're an ES. So you're getting that margin relief. We're paying a $16 debit. Now let's look at the distance our call spread is. 69.25 to 69 to 70.25. That's $50 wide, but again, ES cut
It's
it in half.
$25.
So
It's
like $2,500. That could be worth $2,500. We're paying $1,600. But we're only paying $800. It's tricky in ES. Cut everything in half.
Cut everything you see, cut it in half.
50% multiplier. 50% multiplier.
Yeah, so I don't mind this. I mean, you're putting $800 in it. It's not bad. I mean, you will make money.
Our risk is the $800. Well, the $800, that $1,650 or $825. That's our risk if the market crashes and nothing comes of this.
So it's interesting because you're crossing the 6 days in the Monday, right? So that's Monday's option. So you have it through the weekend, the long, and they put it up a little higher.
Wait, no, 6 days.
6 days is.
Oh,
yeah,
it is
that's Monday.
It's Monday.
That's Monday.
So if we get like a skyrocket on Monday.
So I don't mind this. Now it's interesting because the crab, and when Nick and Mike, and they're better at this than probably we are because that's their trade. But I've seen Nicky do this with me before, where he takes the one he's buying and pulls it up a little bit. This isn't the at the money's. You're only outlaying $32, which is $1,500 here.
Okay.
So to that perspective,
I don't.
Hold on. If we're paying 16, keep your strikes up for a second, okay?
I just want to make sure.
Keep your strikes up for a second because I got to do something. I'm deleting these legs.
Wait, why?
Because we're paying $16 for this. We're selling something. Okay, it doubles it. Now I'm going to put the strikes back in. What were they? Sell 270.
Okay, in the Jan 26.
Sell 2.
In the Jan 26.
I got the Jan 26 already.
Okay, then in the Jan 23rd, sell 2 69.75s and buy 170.25. And what I want to make sure buy one of those. Yep. Okay, and now let's talk about like
this.
if it I want to do it too. If it blows through, what's the risk? Because if we're paying $800 and then we've got a $25 wide, so $25 wide minus the $800, that could be worth $1,700, $1,800, and then what's the width of the second spread?
You can see it down here.
$69.75, $50 wide, so $25. So if it really blows through it all, there is some risk to the upside.
There is risk to the upside, for sure. So sometimes the crabs are buying them nearer, and you can do this because it's pretty cheap here. Take a look at this. And I'm not trying to punch those pixels. Love it. Love your setup.
Yeah.
But I'm going to narrow this spread.
And then if it like blows it out of the water, but I don't mind the risk to the upside.
I didn't mind it either.
There's a lot of vol in these. We've got
no, but what I'm showing is if you look right here, your common sense slide of saying from 200 to 275 is really not that big of a deal.
So
and
go
taking,
strike by strike
$1,000
and
in risk.
see. We pay $837, or we pay $852. That's not bad. Or we pay $882.
That's what I was saying. Your comments, like when you're looking at these short term, they were all around the same price, and those are cut in half anyway. Do you know what I mean? Right. So I just narrowed it a wee bit.
Yeah.
So here you can pay $912.
And then your second spread is only 35 points wide.
Versus
cut
50
that
points
and how
wide.
you got 1750, but 1750, that's probably, then you don't have the risk on the
I know
upside.
that was confusing, but when I'm looking at this, your risk is where your long is, right? The width of that is where the spread that you have embedded in there is where a little bit of the risk is. So by taking it in and paying a wee bit more, which we did, strike by strike by strike, we're paying $912 instead of $837. You take your risk
I think to make it clearer, like clear this out for a second, and then just to show people, because we can't look at this on the risk analysis page when you're crossing cycles, but just to show people, if you go to the 3-day, if you just go to the 3-day, and I'm going to put it all in on the 3-day. So like buy the 69.25.
Okay, I see what you're saying.
Buy the 69.25, sell 2 69.75s, and buy 1 70.25. So then we're paying $10 here instead of $16. But if you go to the curve view, you can really see what this looks like. And if you go to the upside, where we talked about there's a little bit of risk to the upside if it blew through, and then tack on another, $400, because instead of paying $10, we'd be paying $16. So tack on another $300 in risk. There is some risk to the upside. But if these shorts all expire on Friday and we have just the long on Monday, then that risk is gone on Friday.
Let's put it in. I like it.
We're going to do it. Punish pixels.
Can't stop us. Hold on.
We're doing it.
I'm just going to take these two, and I'm going to go expiration.
They stay in the 3-day.
Though-
Those stay in the.
Oh, yeah, sorry, I gotta
it's
go the
just
other way
the
with it.
long.
The long that has to go to the 6-day. Hold on.
That
so I'm
long.
take this one.
And move it to the 6-day. There we go. There we go.
Shipped. I am going to take it in a little bit, though.
Oh, and pay a little more than $800. Now, if the market stays here, I'm
going to pay just under 9.
Okay.
I'm going to go right there, okay?
Just under 9. And then go one more time to the 6th day, because I want to show. If we stay right here in 3 days, the shorts are going to decay way more than this. You can see this market is 32. So if we don't move and those shorts decay, we're not losing on this one. We're only losing immediately if the market really falls out of bed, right?
If it falls out of bed, correct.
Yeah.
And it's kind of bizarre because it's like you want it to go up, but not too much. It's like
yes. Stay right here or go up and not too much.
Yeah, but it's fun. I'm shipping.
$900.
It's in there. We're not going to chase it. We'll see how that goes.
Yeah, but Punish Pixels, I like it.
I do too. And Jack Tucker, the man, the myth, the legend, comes in right above Punish Pixels. 3 double tranches today. 0
3
DT
double
SPX.
tranches. 20.
Yeah.
Crazy.
Yeah.
Collected $34,800 in premium.
I love it. I love
Did you hear that, boys? We're keeping you in business. Our viewers. We have one viewer, 20.
And she's telling that to Jeff, Frank.
60 lot Iron Condor collecting $34,800 in premium. Jack Tucker, you are the man.
He's the man. He's the man, the myth, the legend.
Yeah.
That's how we brought him in today. And then the beautiful Fauzia comes in. How about selling a Feb 20 Jade Lizard in SLV? We are locked and loaded in SLV.
We're Fauzia, we've got a reverse Jade Lizard in SLV.
Yes.
Yeah. We've got a reverse Jade Lizard in SLV. I mean, the put spread is so far away. Or that call spread is so far away. No,
I see what you're saying.
like
We'll look
that's
at
that SI call spread is so far away. That's like
the SI
a moot point.
So when you take a look at our reverse Jade Lizard, it is still 100
So
level.
we're at the
is our
100
short.
level.
Yeah. So we're Fauzia, we are, I think we're tapped out in SLV.
Can we buy back our put spread?
I don't think so. I think the vol is so high in there. I will
go down to the puts and see how far away they are.
SLV.
SLV.
Put spread, it's 2 cents.
Yeah. Let's just buy that back, right? And then we've got just our short 100 call. I mean, Liz, here you go. Naked short call in silver.
We've always had a naked short call in silver. It's not like today was the day that I got it.
Well, I'm just giving you. I decided today to give you the certified badass option trader card.
Just today, after I've had it on forever. It's good.
I will tell you that I have a new card to share. So we have our certified badass option trader card that we pass out. I received a new card. Honorary member of the Dapper
I'm
Dan's.
going to bet none of our viewers know what a Dapper Dan is.
Barbershop Quartet. Honorary member of the
Ben was just laughing as he was walking by.
Finest Barbershop Quartet. So I brought this. So when Liz sings, it's because you like to sing. When you sing on air, I'm going to bust out and give you the Dapper Dan's card.
If I could sing a Barbershop Quartet song right now, Matthew, join in with me. We're going to sing a Barbershop. No, just kidding. I was like, do you know any Barbershop Quartet songs? We're going to learn them, and then we're going to be handed the card.
I think we're right. If there are 3 of us, we're 1 person short of a quartet.
Jeff. I see 4 people in my eye line.
Oh, hey, in Hollywood, he'd be happy.
Good morning, ladies. How are you?
Good morning. Did you sing at all?
Could I sing?
Can you sing?
I think I could.
I think you can too. He can, ladies and gentlemen. He can do it all. He can trade. He can sing.
He can do everything.
He can dance.
I think I could. Nobody else.
All right, are you ready to get into Jacob's study?
Oh yes, I am. Let's do it.
All right, ready? Here we go.
Okay.
Timing 0 DTEs, tracking daily IVs. Is this supposed to rhyme? Is this like a haiku?
I don't think so. I don't think so. Okay, but here we go. The 0 DTE options market offers a real-time window into sentiment where implied volatility reflects the market's pricing of uncertainty over the remaining hours of expiration.
Okay. Unlike longer-dated options, 0 DT contracts experience compressed volatility dynamics as every price fluctuation carries outsized significance.
This creates just This creates distinctive intraday patterns where implied volatility must reconcile expected movement against rapidly diminishing time.
Yeah, so how does 0DT implied volatility actually behave as the trading day unfolds? So these 0DTEs, you go from like full,
it's all or nothing.
It's all or nothing in the day. You look at Bob, 34,000 in premium in the morning could be zero at the end of the day.
Yeah. And so that's just it, and that's fascinating. I'm glad you brought Bob up with this, because that's what's happening. It's almost as if it's in a vacuum, and it's all getting sucked out. At the end of the day, there has to be none.
But volatility, we'll see as the volatility unfolds, because as the market moves around, these move.
They do.
Move a lot. So
they move. Okay. So here's the study. Using 3 years of data in 0DTE SPX options collected every 10 minutes.
We're up to 3 years now.
3.
I don't know that we hit the 3 year mark yet.
Oh, apparently we did.
We'll have to check with the SIBO.
Yeah.
Like, what day did the 0DT SPX come out?
Moment of silence. I don't know. I can't.
I don't know. But nearly 3 years of data. At every data snapshot observed 0DTE implied volatility in 3 different ways.
Okay. So now this is going to be different than what we're doing. So the 3 different ways they looked at the IV of the out of the money option at the closest to the at the money strike. Okay. So the just out of the monies, right?
IV at the closest at the money, and then the IVX 60 to 30, 60. If you wonder what the IVX is, 60, 30, 10 weighted average of near at the money IVs.
Okay. And then the VIX 1 day, so the SIBO 1 day volatility index, following a parallel methodology as the VIX uses for 30-day volatility.
So I want everyone to know this comes from Jacob, who is our PhD from University of Chicago. Don't think that if you don't understand the 60, 30, 10 weighted average of the near at money VIX IVs.
We break this stuff down for you. If we can do this, anybody can do it.
You don't need to know that to trade.
No, you don't
need to know this to trade.
No, but some people want to know why the 0DTEs and when to use them, and this is how the sausage is made. But here's my favorite bullet point, amalgamated, because I don't know what that means. Amalgamated results to find the mean behavior over the course of the day, as well as the 1 standard deviation dispersion, okay?
Sometimes Jacob just likes to flash his expertise and knowledge.
We can, but Jenny and I can break this stuff down because we've been watching this every day and trading it every day. So we're going to take this and put it into our terms.
It's funny because if you trade and you have years of trading experience and someone asks you a question like, historically, what's this or what's that or what's this? Like, just from trading, we could usually say the answer, not knowing the actual, physical, mathematical backtesting of it, but just from experience of trading it.
Well, and it was very similar to even walking through Bob's study. You pulled it up. I already had it up.
She wasn't even waiting for me. She wasn't waiting for my instructions.
No, before the instructions, I was like, okay, well, he's probably selling this one because it just makes sense. They all kind of, and you could come at it from 2 different ways too. So we're going to go forward with this.
Okay, so at the money IV showed consistent decline throughout the trading day, but
the first 15 to 30 minutes of the day had a much wider range of behaviors. We have done this and said it on this show 100 times but sideways. The first 30 minutes of the SPX 0DTE, remember we just talked about that whole...
They're wild.
Try not to touch selling premium until after 9 o'clock.
We wait, and sometimes it's hard. Sometimes we're watching it. Market opens, bell rings, 8:30. We're getting in there, want to play some trades, but now we wait till 9.
So, and this is so visual right here. Look at that. Look at that huge, airplane tail.
And I don't wait
of the standard deviation that can move before 9 o'clock.
And I don't wait till 9 of all my positions and individual. But for the SPX 0DT, for a 45-day trade, I'm not waiting. A 45-day trade, 839 doesn't matter. But for the 0DTE, it does matter.
Okay, I shouldn't say it. 0DTE selling premium, which is what we're breaking down. So we just need to be very crystal clear on that.
Yeah.
So selling premium, 0DTE, look at that standard deviation. It's way wider than what your mean is, which that leads me to believe things shake out and things normalize. And Jacob did a great job edifying this over the years. 9 a.m.
Well, when you're looking at the decline of the premium, or decline throughout the trading day. It's money IV, standard. It's declining, but in the beginning of the day, it doesn't decline. So
it's a little bit more straight of a line. I get it.
So you're not getting that decline. You're not getting that premium sucked out of it. You're not getting that IV crush in the very beginning.
Right.
So honestly, it starts to decline. I think you could, if you wanted to, start a little bit earlier than 9, but we, from our experience, like to wait till 9.
We do. Our experience and Jacob's research.
Yeah, I'm impatient. Sometimes
And
you'll find me
I try to slap her right back into
8:45, 8:50. Sometimes I'm putting them on.
And I've done it before, and it works, but I've gotten bitten by it as well.
Yeah.
Okay.
Okay.
So now here's number 4. Broader strike inclusion doesn't change the fundamental dynamic.
All right, this favors early day entry for 0DT premium sellers. And we know we like to get in
early meaning 9, not you don't want to get in at, it still goes down the entire day. Like, so you see it, and you'll see some rapid decline right at the end of the day. So like 2 o'clock to 3 o'clock, sure, but you're not getting that much premium, and therein lies the gimme and the gotcha.
And I think this is all really important when you're selling both sides. Like for the two of us, we are just selling put spreads. We're still on the camp of we're just selling put spreads. We're not selling both sides. That's just what we're doing.
Because puts are neutral too.
Yeah. So
I want a T-shirt that says that.
But so it doesn't. The decay and the decline doesn't matter as much when you're just selling one side because you can get a movement, an underlying movement, and then you're out really quickly.
Yes.
Versus when you're selling both sides, this is really important.
It is very important.
Okay.
And that's what Bob does. Bob sells both sides.
Yeah, he sells both sides.
Yeah, not Bob. Jack. Sorry, Jack. Okay, here we go. While there's some wild days, the most common behavior was a slow decline, tracing slightly below the mean. Okay.
Just kind of slow decline, slightly below. Well, there were some wild days. All right, intraday.
Are those
Time of
wild
day.
days the cobwebs? Are those the cobwebs? They must be. Okay.
I don't know. All right, as the day progresses, VIX 1D weighting shifts from 0DT toward 1DT options. As a result, VIX 1D did not show the same intraday decay pattern.
Well, the 1D is 0 and 1, so it has to kind of shift, right?
But I guess, is this a tell to like not be selling the 1 day? Be focused more on the 0 day and not the 1 day? Because I know we have had people who...
I don't like the risk of the 1 day.
I know, then you've got the overnight risk. I know we had a lot of people to avoid PDT, they would sell the 1 day because then the next day they can close it. There was some kind of trick with avoiding PDT, and I think it was using the 1 day. But I don't like the 1 day as much.
No, but I also think people are saying, look at the VIX 1 day, and if it's above something, this was an older study.
Did you get a new zip up?
No, I've had this for
I don't know
27 years.
I don't know if I remember that color.
It's an old Lululemon one. But a lot of people look at the VIX 1 day saying if it's above this, trade the trade. I don't look that much into it because the VIX, and we talked about this with TP. The VIX 1D is the 1D and the 0D. So as it goes on, you're pushing more into the 1 day than you are the 0 day.
But again, this is from experience. If I'm going to put on an iron condor every day and I'm getting, $354 for this iron condor, and then one day I go to put on that same iron condor and I'm getting $250 instead of $350, I might say,
what the heck?
I'm not going to put it on today. That would also be a day that the VIX 1D is lower. So,
But you're not looking at the VIX 1 day. You're looking at the premium.
Yeah. You can find it. There are lots of ways to skin a cat.
Yeah, there are.
Is that still an appropriate saying?
Well, you just said it. Okay. So, takeaways. The implied volatility of 0DTE options consistently fell as expirations approached. True.
All right, the remaining SPX expected moves tended to shrink faster than the Brownian statistics would suggest. I think that was the Brownian results. Those
were the... Okay, the pattern is not visible in VIX 1D, which increasingly weighs 1DTE options as the day progresses, right? So as the 0 goes away, you're getting more and more of those 1 days put in, masking the unique dynamics of expiring contracts.
All right, here's the takeaway. Timing matters. Early day option selling can profit from this volatility contraction early in the day. We're usually in early and we're usually out by noon. Though you may want to skip the chaos of the first few minutes, but he says you may want to skip the chaos of the first few minutes. I would say skip the chaos of the first
30 minutes.
20 minutes.
Well, and I'm going to go back. Hold on, because it does say this.
No, you can see.
Yeah, it says this.
9 o'clock.
9, I mean, you could probably go a little bit before 9, but I don't mind. I like having So he did study after study after study that it's give or take 5 minutes before or after 9 o'clock.
And here it says the first 15 to 30 minutes had a much wider range. So 15 to 30 minutes. So I almost feel like we need to adjust the takeaway slide instead of saying the first few minutes, the first 15 to 30 minutes. Yeah.
Well, I mean, maybe few to him is 15 to 30. I don't know what really smart people think of as a few.
A few.
But yeah. So that's it's what I love about having him too is it just kind of edifies. Number one, why we wait. Number two, why we sell premium. So we're selling put spreads. So we're selling premium, but we're looking for a little bit of a pop. That's what we're doing.
Okay, so that was good. Great study from Jacob. Very good study from Jacob, so thank you very much. We are running out of time. It's 10:47. We've got a lot of tweets coming in.
Oh, okay, let's go to that.
So we'll go back into Twitter. Just go tap down.
Tap down? Okay.
Okay, Uncle B to 2016, thank you. SIBO added SPX Monday, Wednesday, April 18, 2022, Tuesday expiration, May 11, 22, added Thursday expiration. So by May 11, 2022,
That's pretty funny. So, like, I guess I didn't realize that. They added Monday, Wednesday, and then they just added Tuesdays. So poor Thursday was like out in the cold.
Then Thursday. But you know what? That's funny because Thursday is the worst day from results-wise.
It is,
selling
from selling
SPX.
premium.
Yeah. Okay, so May 2022, and we're almost in,
I love that.
2026. So 4 years.
Yeah. So we do have 3 years of good data. Maybe it took a while for them to get as liquid as they were.
Oh my gosh, Montezuma and Aztec options, are they like, are you worried about Montezuma's revenge as we head down to Mexico?
Oh, I didn't even think about that.
Yeah.
Now I am.
Well, I have one friend, and I don't know, she's kind of crazy, and you know her, and she's crazy. She's
Got it.
She's bringing like anti parasite medication to actually take.
You're in a room. I'd like some, please.
Yeah, she's bringing some.
Just give me that at the pool. You're going to hand me random pills. I don't care what they are. I'll take them.
Yeah, she's bringing them down. All right, here, this is great. Although, an OEX picture from summer of '87. Frank should get a kick out of this. Where's Waldo? Can anyone find Frank in that picture?
Oh, let's see.
OEX. Okay, I'm going to show you with my arrow where I stood. I stood like right here, and this the things changed. I came into OEX in 1997.
Well, I can't tell where the bottom is.
Well, I could see the way they're all facing, but I came in about 1997, a decade after this. It looks different because I used to update the quotes. I stood in the OEX.
Here's the quote reporter.
Oh yeah, there.
This is where she was.
That's me. There, that would be me.
Yeah, so, you were in this. This would have been Jenny.
So my first job down here, working for the SIBO, stood there in the OEX at my quote machine, and when they would yell out markets, I would update the markets on the board.
I wonder if anybody we know is in that photo. I can't see anybody. They definitely look different.
No, I almost think. Yeah, it looks very crowded.
Well, it was. It was one of the most crowded pits on the floor. I think the OEX was more crowded than the S.
I would have to squeeze in and get to my spot. And
they would give you like a little bit of a railing, and there was a lot of people around the quote reporter too, because you were the one in response of changing the boards.
Yeah, and as soon as I got to my spot, I was kind of stuck there all day.
Yeah. Okay, take a look at this, Jack Tucker.
I love the hard peeps as well. Yeah, Jack, you see, they are. Open them up.
Okay, fine. If Jack likes them, I like them. I want to be just like Jack.
No, so you get the peeps. I take a knife, slice them open, and let them sit in the pantry until they get hard.
That's weird. But if Jack likes them,
they're good.
I'm in. Okay, Taco Tuesday. Happy Taco Monday Tuesday. Re-entered the Tesla via, this is the Ratio
Super Bowl,
and Stack Another Hood Ratio Super Bowl, adding the ES along the way. So I love it, Blue Wackadoo.
Do we have it? Can we afford the Tesla Ratio Super Bowl?
It was $20,000. I looked at it.
No.
Yes. Tesla?
Let's go back to it. Okay. Let's go to January leap. What time is it? 10:51. Well.
Yes, Jenny, let me just do this.
Just go to January.
I'll just sell 2 puts so you can see this. I'm going to go to January 2027, and I'm going to sell two
puts for like $10 or something, so we'll get $20.
It's usually at the expected move for the cycle, I will tell you that.
Okay.
And it's $10,000.
$10,000. We've got it.
Well, you add the spread on, too.
No, because you're buying it. No, add on the spread. 430. Wait, where's the...
It's close enough. That's what I'm saying. Oh, it's a 2 lot. Let me take it down to a 1 lot. Oh, it's still $10,000.
$9,000. $9,000.
We still can't afford it in this one.
But it's not bad. This is Bob on Fire and Blue Wackadoo. These are good. I say good loosely. That doesn't mean they're guaranteed winners. There's risk in every trade.
They are bullish trades, and so you have to be willing to take the stock. None of our trades are trade recommendations.
Everything has risk. Every trade has risk.
I answered so many emails this weekend, and at the end I said, this is by no means advice.
We give zero advice. All right. Now Stephen Edward comes in as a mean it's a mean reverting asset. How about fading the natural gas move? Doing it in a small way, you can sell 1 MNG. So instead of selling 1 MNG, I might look at an upside broken wing butterfly where we're taking a credit. But natural gas can run. When it starts to run, it can continue to run. And at 3 and change, where is?
Oh, here, I'll go to natural gas.
Yeah. At 389, I feel like there's a lot more room for natural gas to run.
I think so too. Look at this. It's this move. This is crazy.
Yeah.
I mean, it just got back to where it was when we probably put the downside broken wing butterfly on.
So I wouldn't fade it yet. If we hit like 5, then maybe I'd throw something in.
I don't necessarily know that I want to fade this.
No.
I like looking at it's interesting for me though. And I appreciate where you're coming from. And I should look at this asset as different. I look at natural gas, gold, and silver very uniquely because it's very hard for me to have the upside. I don't want to lose the upside.
Well, and many of these you get a move and they build momentum, and it's not just like one up move and then it comes back down. You can have up move, up move, up move, up move. So I'm not ready to fade natural gas yet. No. Not yet.
So take a look at this.
And I will say, Liz, we are...
So look at this. I just want to go. I did the dollar side natural gas. We're almost out of time right now. Dollar side natural gas, you can see how far. Like, not too long ago, it was in the 10 handle, the 9 handle. This is I just put the dollar sign so you can see everything of the futures.
Okay, before we go, because we're out of time, before we go, I want to put the GTC in for Intel. We said we wanted to make about $500 on the Intel trade. And I want to put that GTC
so I'm
in.
Close the
I'm getting everything else out to the follow page.
If it's going to say a $3 debit, so I'm going to put it in for a $2 credit. $2 credit.
$2 credit. So if we took in a $3 credit, putting it on, and we take in a $2 credit, taking it off.
That's the hardest thing is putting in the GTCs.
Wait, okay.
It's in right here. I'll show you. So $2
credit. GT. Put in GTC because it's just day. GTC, and then if you hit review, it should tell you. I guess maybe that's just on the phone. Like it'll tell you like total profit on the trade. It would say like $500.
Well, that's fine. We've got it in.
Yeah.
You got debit versus credit in there, which is good. SPOOs are down 92.
That's fine. We've been here before.
Yeah, act like you've been here before. All right, Jenny, we are done for the day. We have to let the next show, the Options Trading Concepts Live in.
All right, stay tuned for a great show, and we will see you later today on Last Call.
Absolutely. Remember to trade small, trade often.
Laugh with us, learn with us, and watch the Liz and Jenny Show.
See you later today.
Got big trade ideas? Get the big deal at Tasty Trade. Make moves with confidence using smart tools and dynamic charts. And trade what you want, how you want. Earn a 4% cash match when you open and fund a new Tasty Trade account today.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Got big goals for 2026? Get the big deal. Earn a 4% cash match on all qualifying deposits, up to $10,000 total. Plus, unlock 30 days of commission-free trading. Trade with confidence using active trader mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. Earn a 4% cash match when you open and fund a new Tasty Trade account today.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. Only at Tasty Trade.
Global markets never sleep. Explore them with Forex, now available on Tasty Trade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on Tasty Trade.
Tasty Trade has crypto, and you can trade with zero commissions: Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
What's up, Tasty Nation? Welcome back to the show. This is Options Trading Concepts Live. My name is Mike, and I'm here with Thomas Westwater. Jamal is traveling back from Miami. Bittersweet. His team lost, but there are actually way more Indiana fans in this office than I could have ever imagined.
Is there?
Yeah.
Oh.
Yeah.
I mean, it makes sense. We're close.
Yeah. Andrew on the data team, IU guy. I think Beth went to IU, if I'm not mistaken. But then, yeah. Yep.
Close, yeah.
And then Steve on the trade desk, he went to IU.
Oh.
Who would have thought?
It's a good school.
Yeah, but kind of a really boring first half and then some fireworks in the second half. It was fun. And then, of course, the Bears lost, the Bills lost. So Tasty is a dark, dark, desolate place today.
Yeah, Bills coach, he already got fired, right?
Yeah.
Yeah.
It's crazy.
Happens.
Yeah. But it was a good season for both. We'll be back next year in full form.
Definitely be back. They're saying this is the franchise quarterback, you know?
I mean, I think so.
Yeah.
How many times can you just rip Hail Marys and actually succeed over and over?
Yeah, it can't be luck if you do it that much, you know?
Yeah.
It's some kind of playmaking where you're like, you know, you see the puck where it is before it gets there.
Indeed. But yeah, crazy times. And now, you know, we'll see what happens going forward. But Denver, They're unlike their third string quarterback. Bo Nix broke his ankle.
Yeah,
that's nuts.
Yeah.
But yeah, we shall see. Markets are flying around here. E-minis down 80, NASDAQ down 285, down the Russell down as well. Bitcoin down 5.5K, pretty big move there. And ETH following suit to the downside as well, down 8.7%, pretty big move there. And then you've got a bunch of big moves in energy. Natty Gas just going straight to the moon today. We will see how that plays out, and that is the topic of discussion today, as it is Thomas Tuesday with a little futures action for you. But I haven't done too much in this portfolio as of today. We're seeing silver climb back to new highs, or reach new highs, I should say. Gold also moving to the upside, so kind of a wild day. Equities selling off aggressively, and energy and precious metals moving the opposite direction in a pretty big way here. But I did have an SPX position on that I adjusted. So last week I put on the call broken wing butterfly. So I had the 7120, 7130, 7150. So 10-point wide debit spread financed by a 20-point wide credit spread. Put that on for $1. And then into this 100-point sell-off this morning, I took off the risk on that. So I paid 20 cents to bring that 7150 long call down to 7140. And now I have a 10-point wide debit spread with a 10-point wide credit spread. So locked in an 80-cent credit there. No risk on that position. No buying power required on that position anymore. And now we just have a free shot to the upside with a locked-in credit of 80 cents. And then I also closed this portfolio hedge that I had on. I had the 6,800, 6,700, 6,600 butterfly. This one was a symmetrical butterfly that I put on for like $500. And it was pretty much just chopping around that same price point. It was between $4 and $5.50, I want to say, for the entire duration of that hedge that I had on. And now today we finally get the 100-point sell-off, which we really haven't seen in many weeks. So just wanted to secure that value. It was a $155 net winner and gained back a lot of that value today into the sell-off. So just recognizing that there's 30 days left on this position. We basically moved from out of the money to at the money, and we were able to pick up a nice hedge win. So shutting that down, and if we get a reversal of this over the next couple of days, I'll just throw it back on. But I really do like the symmetrical downside butterfly for a hedge because, again, I put it on for like $500 initially, and it didn't really move in price until we got the sell-off where we got a nice appreciation there. But those are the two adjustments I made in this portfolio for now. We do have Netflix earnings after the close today. I put a link in the YouTube chat to Errol's Netflix earnings preview. I'm sure I'll talk about that after this segment as well. But check out the News and Insights tab on tastylive.com. We will have earnings previews for all of the big earnings reports coming out this week and next week and beyond. We're in the thick of it now because Netflix is releasing, and then you'll have your Apple, Microsoft, Amazon announcements next week. So plenty of earnings announcements to go around, and we'll see how they go with this big market sell-off here. What are you thinking in terms of the futures market and just in general, what's moving today?
Yeah, I think, it's a pullback that I want to try to maybe get a little long exposure on. I had a short call spread on the ES that I took off today. Made a little bit there, but now I want to get on the long side. I think like political volatility is really driving a lot of this sell-off. And, from what we've seen over the past year or two, that quickly or usually passes pretty quickly. This time can always be different, but I don't think so. I think I got to stay on the long side and scoop some up.
Fair. Yeah, and really, I think another thing that helps drive that decision-making is just looking at the vol curve. So this morning when we were down 100 plus, the VIX futures here were ripping a lot more. I mean, it's still a big move today, but when you still look at this contango here, so between the F, G, H, J, K, and M contracts, we are still in contango all the way through. Now, it did flatten out quite a bit. Like this morning, we were pretty flat between the F and the G, but we are down 80 points now. Volatility is coming down a little bit from the highs, and that may signal, that we're chopping around here. Maybe we see a continuation to the downside. If that is the case, I assume you'll see a bigger move in volatility futures and the VIX specifically. But the VIX right now sitting at 18, definitely come down from the highs. So I'm much more comfortable placing an upside trade into a sell-off like this when we see the VIX like kind of not reacting or at least coming down from the highs. I think if we were to see the move continue to the downside and the VIX ripping and staying above 20 and the vol futures ripping and continuing to flatten out that curve, I'm more inclined to take a wait and see approach. But I agree with you. I think, especially defined risk, I think it's fair to take a shot here. And naturally, I'm getting more long by taking off the downside hedge. So I'm not sure I'll put anything new on today, but we'll see what happens over the next couple of days here. See if it continues.
Yeah, I mean, like you said, we got earnings. I think, they're going to be good. We've had good earnings seasons in the past. They've helped us, corporate margins expanding, always a good thing. Besides for Netflix, we got a couple later this week. Intel, I mean, that's probably the biggest one after Netflix, but Johnson & Johnson tomorrow, big Staples name, P&G, Kinder Morgan. Yeah. I mean, next week is really going to be, where we get into it.
Yeah, if we look at the all earnings watch list on Tasty, it will automatically pull in many of these earnings reports that are coming over the next week and a half-ish. But yeah, to your point, Intel definitely in the thick of it. But yeah, Netflix, United Airlines, both earnings after the close today. And I think it'll be very interesting to see what happens, specifically with Netflix, because Netflix hasn't had the ability to stay afloat ever since the split that we realized. So maybe they'll come out with some good numbers and we'll see a rip here. But if you have any trade ideas, let us know in the YouTube chat. We can get to them shortly. But we do have some slides. I know you've put together a nice array of visuals here for this natty gas move. But I mean, this is nuts. This might be the biggest intraday move we've seen to the upside, at least in years.
Yeah, it's definitely the biggest move so far this winter. I was looking at that. So when I was putting together the data, I was trying to do this for like a move above 20%. There's just not many of them. There's a few of them, like after Hurricane Katrina, things like that. You would like the biggest one was like 56% after that. So, really, the charts I put together, the data here, it's for any move above 13% that we'll look at. But I had to talk about natty gas today. Coming back yesterday, I checked my charts really quick. I did a double take, looking at natty gas. I'm like, oh, what's going on? So, there's some crazy weather models going around right now. There's supposed to be this major snow, ice, sleet storm going across the United States from pretty much Dallas all the way to the East Coast.
Dallas.
So all these southern states that usually don't get ice or snow, where it shuts down the entire state.
Yeah.
That's what they're looking at getting starting Friday to Sunday. So all the meteorologists, and you see it on Twitter, X, they're all very excited about this. So it makes sense that natty gas is responding, right? Because even Texas is going to get this really cold temperature dip starting Thursday, Friday. And this is when the East Coast is already going to be experiencing a lot of cold. So let's go to the first slide, actually. Just shows kind of how this weather is going to be going. This is 6 to 10 days out, so January 25th. But really, the temperatures are going to start dropping in Texas and, across the South there, starting on Thursday. But this just shows, this very, very, very cold weather in the Northeast. And that's where you want to see cold temperatures if you're bullish on natural gas, because that's where all the demand, or not all of it, but that's where demand is concentrated a lot, is in the Northeast. Of course, lots of population there. You got New York City, Boston, Pittsburgh, Philadelphia, all those big cities, Chicago, but even the fact that Texas is going to be getting this colder weather, it's really helping,
drive out all these shorts that were in natty gas. And, we were dipping a lot lower than I wanted to go. So last week I've been in two short put spreads, and they were both in the money for me. Now they're doing good again, but how do you want to play it now? And I'm thinking, how do I want to play it now that I'm already on the long side, but after such a big candle like this, you usually get a dip the day after. And even a few days after, because it invites profit taking. A lot of people are getting out of their positions, etc. So we'll go to the next chart, and this kind of shows how many of the big spikes we've gotten. This is for the day after any 13% up move. It shows the price reaction the day after, and this goes back to 2005. So you see, a lot more red bars on there than you do green bars. There's only like 6 or 7 green bars. And the red bars, they're bigger than the up move. So it's more likely, looking back at the data, that we get a pullback, some profit taking. So you get a bigger move to the downside. You still get continuation once in a while with things like this, but it's more mild. So, just looking at this chart alone, what it tells me is maybe I want to take a really short-term bet on the downside, take advantage of that. And what position did I get filled in? I don't think I pushed it to the follow feed just yet, but I bought a put spread at 3.7, 3.75 for the 7-day out. So that's January 27th. It's in the G contract.
I do see it on the follow page, so I'm going to check it out if you're listening.
And, that's the way I'm playing it. And on the long side, I'm in the H contract at 3.4, 3.5. So I still need some upside on that one, but I also have a short put spread in also the G contract, or the J contract, and that's 2.6, 2.75. So that one, I'm actually probably going to take off pretty soon, but it's still got 65 days left. I might just roll the price up a bit actually there instead of taking it off. But this is a really needed development as we're, kind of almost halfway through the winter here. Natty gas wasn't doing good. But anyways, let's go to the third slide. Take a look at more specifically how price reacts. So again, this is after a 13% move. It's not after like a 25% move, because there's just so few events that the data, there's not really much to look at there. But, this is the distribution. 65.2% of the time after a move like this, you're getting a down day. Only 34% of the time you're getting an up day. And, if you look at that right chart there, that's the distribution. The next day return around 7% is the most. You get 4 events like that. The mean, which is the average, you get about a 3% down move the next day. Of course, you can also get continuations. This is a notable winter storm event, so you can't say with 100% certainty that it is going to sell off, because people might be very excited about what this does to demand, things like that. So let's go to the next chart. All right, the one on the left, so this is if you took a long trade, it's like the win rate. So 7 days out, you're still 60%, right? But the 1 day and the 3 day, you're losing more than you're winning. So for how I'm positioned right now with my portfolio is, these kind of, let's say long term, I have the short put spreads. I want to stay in those, because we're still performing good for those time frames. I'm just trying to take advantage of these pullbacks right here. So, say nat gas is down 3-4% tomorrow. It could be down a lot more. It could be down not at all. I'm going to probably take that trade off right away. If I get $100 out of it, that's great. And then I stay in my longs. A week from now, nat gas is up more. It's staying cold, like the weather models predicted that we looked at. And that's the optimal way to play this out. And yeah, that's pretty much the way I'm playing nat gas right now. But these weather patterns, as we get closer to Friday and this major storm that's supposed to develop, it's going to be important to keep looking at those weather models, There's a bunch of people on Twitter that are really good to follow to track these kind of events. So, it's definitely good. But I had to talk about nat gas today with 25 percent up move.
Yeah, absolutely nuts. But yeah, I agree with you. I think taking a little shot to the downside, I mean, it's actually kind of perfect because the G6 contract, 7 days to go to expiration for the options, the price is really booming here. Like, you're seeing the price reflected much more in the 7 day, but with 7 days to go, you can get cheap exposure, keep that risk defined. So I just followed you directly from your follow page post here. The 3.7-3.75 long put spread, $240, risk one to make one. And if we do get a reversal, even just a little bit of a reversal tomorrow or the next day, you could easily take out, between $50 and $100 out of this thing just from a little bit of a pullback. So, and at that point, if we do pull back, I think it's interesting to maybe then layer into some more longs to see if we get a upside movement over time. But yeah, I'm in with you. The 7 day 3.7, 3.75. But yes, Thomas did post that to the follow page. So you can click on that if you wanted to see what it looks like, adjust it, do whatever you need to do if you wanted to take a look. But yeah, what a move. What a move. I know Jamal was in Natty Gas. I don't know if he closed it or if he's still in it. I think he rolled it. Yeah, I think he rolled it. So we'll see. Hopefully he's paying attention. I'll have to text him today and be like, hey, Natty Gas is up 25%.
Well, I'm sure he's watching the show right now.
Yeah. From the plane or wherever he's at. But yeah, love it. Thanks for the analysis. But yeah, that would be crazy. I mean, it is funny though, because not funny, but Texas, like if they get 2 inches of snow, like you said, the whole state's just we can't do this.
Yeah.
Can't handle this. Yeah.
I lived in Georgia 2000. I think this was like 2010, 2011 winter. And I was by Columbus, which is where Fort Benning is. And they got 2 inches of snow. And I remember I'm from Chicago. So I'm like, 2 inches, this is normal.
Yeah.
And everyone's like freaking out, like the people that actually live there. And they're like, it's over. It's Armageddon. Like, they don't have snow plows. They don't have salt. Like everything was just standstill. Yeah. No one was on the street.
Yeah.
Yeah, it was crazy.
Yeah, that's the problem. They don't have the ability to facilitate a massive cleanup like you know, in the Northeast or here. Like obviously we have salt, we have snow plows, but they're just like, what do we do? How to drive on this?
Right. I think they were using sand actually. I think they were putting sand on the intersections.
Yeah.
But yeah,
sand actually is better than salt in terms of like keeping the roads.
Well, you can't get salt on your car down there.
Yeah,
that's why people drive down to like Florida to buy a car. There's no salt on. Rust a lot less. So.
Yep. But yeah, if only we used more sand instead of salt, it'd be crazy. But yeah, we'll see what happens with this price of Natty Gas. Both of us looking for a slight pullback into this big rip here. But yeah, if we do get a reversal over the next couple of days, we'll end up just closing it. But it is a much shorter time frame here. Expected move brings us down to 3.4 and up to 4.5 almost. So right at the current price, if we get any kind of pullback, we can expect to see this kind of appreciate by, let's say, $100, something like that.
Yeah, definitely. And I think we should talk about maybe what if you were short going into this move. I mean, what do you do on a 26% up move? I guess, I don't know, if you have duration, I guess you hold on to your seat for a little bit, maybe. Because if you're getting out of your position at this point, you're really just eating a big loss. So maybe hope for that, that pullback the next day.
Indeed. But yeah, I mean, this is why this thing is super volatile. You got to be careful with it, but we're typically trading defined risk for that reason, just keeping things small. And the nice thing about defined risk is even if you had like a short call spread or whatever, and this just blew you out and you have an in the money spread, at least with defined risk, you can just hold it and see if you get a reversal at some point. But yeah, we'll see what happens. we're both in, looking for a slight pullback here. But yeah, again, if we get below 3.7, we'll likely just close it. I would imagine it'd be $100 winner, something like that. All right, popping over to the YouTube chat now. If you want to join us there, we're streaming live on Tasty Live's YouTube channel. You can throw in your trade ideas, questions along the right-hand side chat. Give us something for Netflix and give us something for United. Both reporting earnings after the close today. Those are probably my top two. By way of miracle, I maintained my United silver.
Oh, there you
Even though I was like, I'm one flight short of what I needed to get it this year. And then I logged in to check some
They
flights.
gave it to you?
They gave it to me. Maybe it's because I chatted them and I was like, hey, what do I need to do this?
Right.
Because I was literally about to buy a one-way ticket and not show
Uh-huh.
up. And they're like, no, you have to go on the flight. I'm like,
Oh, okay. Wow.
why?
Yeah.
Just let me buy a one-way
If you
ticket to
pay
Michigan.
for it, they don't have to carry your weight, so they're saving money.
Yeah.
So I don't
Like, come on.
Yeah.
It's nutty. But shout out United for, I don't know, manually overriding me.
Yeah. And what does the silver get you?
Not much, but it does come in handy. You get to, so like during check-in, so 24 hours before the flight, you can, if there's premium economy seats available, you can upgrade for free.
Oh yeah, nice.
So that plays a big role, especially for longer flights. Like when I traveled internationally last year, that was like $400 a ticket.
Oh, okay.
But we were able to move it up for free. So
there you go.
So yeah, it'll save me a couple $100 this year for sure. Because we're going to Hawaii, Jamaica, just all the tropical places.
You gonna be kite surfing out in Hawaii with your brother?
I don't know about that. So yeah, we're going to a different island. But last time I went kite surfing, I realized that I shouldn't be kite surfing. It was more of like a survival thing than like actually having fun doing it, because it's nuts. Like you're just sitting there in 30-mile-an-hour winds. It's pulling like you slightly tweak the kite, you move like 10 feet, and you're just being pulled underwater for a lot of it. So it is wild for sure. He makes it look easy. All right. What do we got here in the YouTubes? Appreciate the B-Day love. One more revolution. We'll keep it rolling. Keep it rolling. SVIX. Shares on the vol pop worked out well. I'm out now. Yeah. So we've talked about this before. So SVIX is a 1x short VIX futures ETF. So ultimately, if you buy this product, if you just buy it with shares, for example, you have the ability to play that upside reversal. SVXY is usually the one that I go with. SVXY is a product that very similarly, if you get this big washout, so like when the April tariffs hit, VIX pops like super aggressively. This product went from 50 all the way down to the 30s. And of course, over time, as volatility calms, you still have volatility within this product, but it's very simple. Like if you get a huge sell-off like this, if you buy shares and volatility eventually comes back into the teens, you're going to see this drift much higher. So you're seeing this sell-off today in reflection of the VIX pop. So this was trading around 56, 57. Now we're down in the 50s. But yeah, to your point, like the VIX pop this morning was much bigger, and now you're seeing this thing reverse back to the upside as volatility kind of collapses here, even though the E-minis are still down 100, NASDAQ down 350. But it's a much more predictable way of trading volatility because you know that when the pop happens, eventually the pop will reverse, and this is a product that benefits from that reversal to the upside over time.
Yeah, so you're playing for the mean reversion. I think back in April, looking back, that was like a very obvious thing to do, you know?
Mm-hmm. Yeah. And, you know, it's not for everyone, but like this was the Volmageddon sell-off here in 2018 when some of the funds just went straight to zero. But here you can see the same thing. Pre-COVID, this was trading at 35. COVID dropped it all the way to 10. And then you saw it over the next couple of years go from 10 back to 30. And then as we got into this like super low volatility environment, you get this grind higher from the 30s to the 40s to the 50s. And then 2024, 2025, you see these big washouts again. So it'll keep happening. It is a mean reverting product, like you said. It's just I think you have to give yourself a lot of time for this thing to work out. So I really don't mind just like buying shares. Don't even need to do 100 shares. You could buy a couple here and there. But it is a more predictable way of trading volatility because you're trading the collapse versus the pop. And the pop is very hard to time. Check out Errol's piece on Netflix, tastylive.com. You can click on the News and Insights tab, but I did throw a link in the YouTube chat as well. All right, thinking of selling a short put in Netflix, Brian. Totally fair. I think if you're selling a short put, you just have to be willing to take the shares or be willing to roll that position out perpetually. Looking at the different expirations here, if you give us a strike, we can take a deeper analysis, but I think it could make sense to just like go to the 3-day if you're selling like an 85, because then you get all that premium. If it goes down, you can roll into Feb or March. If you're starting in Feb or March, you could go lower. But as you can see, if we look at the price difference between the 85 strike and all these expirations, you can see here that the March is trading for 380, the Feb is trading for 290, and the weekly this week is trading for $1.70. So 3 days to go, $1.70. 30 days to go, only $1.20 more. So less than double the price, but you have 10 times the amount of time. So a couple ways to think about it. If you're playing for a pure vol crush and you intend to just roll the position out, if it gets tested, going to the 3-day and then rolling to Feb or rolling from the 3-day to March, you will pick up a good amount of premium doing that. But if you're playing for more of a bullish move in Netflix and you believe that you're going to see a big rally, there's an argument to go to Feb or March, because with a rally and a vol crush, you will make more monetarily speaking in that Feb or March cycle, because you'll get the delta move and you'll get the vol crush. But pure vol crush, I think maybe you go to Jan 23rd, and then that gives you the ability to keep all of that premium on a neutral move or a rally or even a small sell-off. And then if you want to, you can roll to Feb or March.
Yeah, and they're still going through this trying to buy Warner Brothers thing too. So I'm not sure if they'll mention anything about it in the conference call, but the Wall Street Journal did report on that today, a new cash deal. I'm not really a fan of Netflix buying HBO, but
hey, if it reduces my subscriptions, please.
What if they do something to the quality of HBO shows there? I don't know. Did you see that Matt Damon was talking to Joe Rogan? He's like, yeah, Netflix is like, you got to restate the plot like 3 or 4 times because people aren't listening, and I don't know.
Yeah.
Makes sense when you hear it.
Yeah. I get it. Did you hear Matt Damon was offered like 10% stake in Avatar?
Oh, was he?
He turned it down.
Oh.
And
I did not hear that.
Yeah. That would have been like $1 billion thing for him. Big oops.
Yeah. You missed some.
Yep. Yeah. You miss some. Sometimes you swing and miss. Sometimes you swing and miss, and sometimes you don't swing.
Yeah.
Let's see. What do we got? I hopped on Apple too early. It keeps dipping. Yeah, down another 2% today. I mean, it is an ugly chart if you're looking at the daily. But again, I mean, these are the situations where it's like over time, if you think Apple will reach the highs that it's realized, it's a good opportunity if you're willing to take that risk. There's a handful of other products that are looking similar. Amazon coming off the highs. Google's the only one that's like still near highs. Microsoft, not a great chart either, down to 450. This one's a big sell-off, 100 points lower than where we reached twice. Do any of these stand out to you? Or are you kind of waiting and seeing and waiting for earnings?
I mean, on one hand, like Microsoft being down so much, it's like, is this a reflection of the AI trade losing enthusiasm? But then you look at Google, which is like well positioned for the AI trade, and they're still doing good things. But really, I think, how long can market confidence stay propped up? Like, if the big tech names aren't leading, how long is a rotation of other stocks going to lead the way this year? Is it not going to just be as robust? Apple, I think, is a good long-term play. I'm actually trying to look at some options like 60 to 87 days out. I think I might get in something there for a turnaround once this volatility comes back in. I think that might be a good dip buy for the stock. So I might get in a call spread there.
Go. Yeah, I think a lot of these have upside potential one way or another. I think it is tough for shorter duration stuff just because you've got earnings coming out. Earnings can be very, two-sided. Like they could report good numbers, but the stock could sell off for X, Y, and Z reason. So I'm probably going to wait for these, especially with the market being weak today. We're re-reaching the lows or getting close to them in the E-minis here. But yeah, I think because they're just around the corner, Apple, Google, Microsoft, all those earnings reports, I think I'll probably just wait and see if I can place something earnings specific for those names. Let's see. A lot of people weighing in on Texas using sand.
We have the beach right there. We could just get the sand from the beach, take all of it, put it on the roads.
Yeah. If we use sand, we have less repair work for the roads, but I mean, I've lived here forever. It's very clear that they don't repair the roads as well as they could, because then they would just be not getting the next contract to re-repair the roads. So
can't do too good of a job.
Yeah. Are Netflix expected earnings positive? I've heard lots of people canceling subscriptions. What do you think?
I mean, I'm just not into Netflix right now. I'm not watching anything on it. The only reason we have it is because my wife is watching something on it. I keep saying to cancel it, but I'm just one person. I can't reflect everyone.
But you are contributing to revenue.
I am.
Netflix. So I think a lot of this too is like when Netflix was having this run, they were getting a lot of live sports deals. There was speculation that UFC might go to Netflix. UFC is now at Paramount Plus, so that kind of took the wind out of the sails in terms of live sporting events. They still do, one-off football stuff, whatever. But yeah, this is a pretty big sell-off here, and we've seen a couple gap downs in recent history too. So read Errol's report, see what he's doing, but ultimately, I think the implied volatility, just looking at that specifically, the implied volatility here is 6 points on an $88 product. That's pretty decent. That's right in the middle of that between 5 and 10% range, right around 7%. So don't mind that. And then when you look at the 6-point implied move, 100% IV in the 3-day relative to 47% and 43% in Feb and March, respectively, you do have a lot of premium relative to the premium in Feb and March. So I think you could do a bunch of different stuff there. But yeah. Looks like E is holding a defined risk put spread with the downside capped. So it looks like it's a short put spread.
Do we know what they did after last earnings?
I think they sold off here, yeah.
Yeah, if it was.
It had to be this gap.
Yeah.
And we've seen kind of lower lows ever since then.
Because I know it's only been a couple of quarters now. They're not reporting like actual subscriber growth, I don't think. At least not in the US they are, because it's a saturated market right now, right? So really they have to go for international, they have to go for crackdown on password sharings, things like that. And now they're at such a mature stage that you're seeing, acquisitions, trying to buy Warner Brothers. You got money, you have to do something with it.
Indeed. Brian was looking at the 80 strike in the 3-day, willing to take the shares. Yeah, So the 80 strike in the 3-day, 60 cents, pretty cheap. But the further out of the money you go, the more downside move you can actually absorb. Like if this goes from 88 to 85, you'll still make all this money here. And then, if you're willing to take the shares there, you will be able to roll. If we do get down there, you'll be able to roll from the 3-day into Feb or into March if you want to keep it in options position and pick up some more extrinsic value premium. But yeah, I think it's a sound strategy. And yeah, if you think it's going to go down, but you're willing to take the shares if it's down 10%, then yeah, the 3-day makes a lot of sense because you won't be as adversely affected by a downside move if it's only like 3 or 4 points, because that premium will still go to 0. Yeah, near the 52-week low, down 30% in 3 months. It's kind of troubling. We could do a put ratio. That could work. Put ratio on the downside or diagonal or calendar to the upside. Is it a good idea and which strikes? So calendar spread, diagonal spread, really up to you. If we just look at from the upside price perspective, I just like to do this, like just pull up the 90 strike, for example, between Feb and March. You're paying $1 more to go to March, you get twice the amount of time. So automatically, I'm just going to go to March if that's the case. If I'm buying that, and then I'm always going to just buy or sell the 3-day against it if it makes sense. And in this case, picking up a ton of premium in the 3-day 90 strike. If you're going with the calendar spread, I might not go with the 90. I might move it up a little bit. Go to like the 95, just so that you're playing for a directional move and you're leaning a little long if that's what you want to do to the upside. For a diagonal spread, I would do something like this, like long the 90 March, short the 95 3-day, picking up $1.16 to reduce basis by about 20% on that long option in March. So plenty of cost basis reduction, only $4 here, pretty cheap. But yeah, that's where I would go. Anywhere between 95 and 96, I think, is where I'd go. But even the 97, like still 80 cents is still pretty big considering it's 2 points out of the money from the expected move. And then same story to the downside. I think you could do the same analysis. We're at 88. Maybe you just go straight to the 88 strike. Or if you wanted to go to more of a round number, you could do that. But let's just look at March versus Feb. Yeah, paying $1 more to go to March, twice the amount of time, automatically going to do that. And then downside premium is not as good. If you look at the 95 to the upside, that's 7 points out of the money. It's $1.20. 7 points out of the money on the downside, only 75 cents. So certainly more premium to the upside. However, you still can get into this nice wide 7-point put diagonal spread for $4. So this thing will really appreciate, because the upside one we were looking at was about $4 for a 5-point wide. This downside here is about $4 for a 7-point wide. And then if you want to go a calendar spread route, I would probably go somewhere to like the 85. You could go lower, but if we look at this, like a downside put calendar, long March, short the 3-day, picking up almost 50% cost basis reduction with the sale of the short option relative to the purchase of the long. So this is nice and cheap in terms of the cost relative to profit potential. And if we look at the Theo zones here, if we push this to the 23rd and then we crush implied volatility, let's just say like 5-6%. Let's bring this down to 35%. Just to be conservative here, this is what you're looking at. $150 to the downside if we hold this to Friday and we get a sizable vol collapse in the March cycle. But if we don't, if this only goes down like 5%, you could make a lot more if you're right. So always nice to mess around with the analysis tab and see where you can land on certain projections or theoretical projections. But I feel like the downside diagonal is speaking to me. Just because like with the calendar spread, you still have risk to the downside if you really get a huge sell-off and you're paying, $2 and change, where this downside put diagonal, you're paying more, but you'll make $300 if you get a sell-off here.
Yeah, I like that.
And if you want it to be more conservative to the downside, you can move this short option up a little bit. So like here, 5 points wide for 420, but I think I'd rather do the 7 point wide for a little bit more premium and just play for a sell-off here. And this adds a little more downside hedge to this portfolio. But yeah, for whatever reason, I'm always pretty weary of placing upside trades in big name stocks that are highly correlated to the E-minis and NASDAQ when we're seeing the E-minis and NASDAQ sell off pretty hard here. I think they'd have to really report good earnings with a good forecast for the stock to rally.
Oh, yeah, yeah.
But that's just me. Either way, defined risk out in March, 60 days to go. We can manage it as we see fit if we do see a rally after the close today. But I think I'm going to do this.
I'm going to do that too. I like that.
Here we go. We're both in. Let's see. United Airlines. I think this one I have to play to the upside, right?
UAL. When do they report?
Today.
Today. Oh,
Yep. So this one, similar expected move here, $6 expected move, but this is a $110 price point. So lower implied volatility, all else equal, only looking at about 5-6% of the stock price here. Sitting near highs. Maybe we go with something like a calendar spread here. But let's do the same analysis. Let's look at the 115 for March and Feb. Same kind of story here. Going in March, you pay $1.60 more, $1.70 more, and you get twice the amount of time. So I think I'm going to go that route. And let's just see if we play to the expected move in the 3-day. If we go to like maybe a little inside, maybe a 115 strike. If we sell the 115, we buy the 115, $5, paying $7 for the March long call, selling the short one for $1.60. I don't know. Feels expensive. What about a put spread? This could work. 30-day put spread for $1.50.
That's not bad at all.
Yeah. Going out to Feb. So same kind of story. If I'm buying an option, I want to go to March instead of Feb because it's cost adjusted for time. It's cheaper. But if I'm selling premium, I want to go to Feb instead of March because I want that bigger vol crush. There's 5-6 percentage points higher here in Feb relative to March. And still 30 days to go, though, just in case if I sell the spread and UAL sells off, I'll have 30 days for it to reverse. But yeah, I think this could work here. I don't like going to the 3-day for short put spreads just because you have no defense. If the stock sells off, you're just kind of stuck in the 3-day cycle and you can't roll it out. So I think this is what I'll do. $1.50, short put spread, instantly filled. Oh no. Was I price improved? Yeah. Wow. $1.64. So don't use the mid price there. $1.64 if you're tagging along is what I was filled at. So you could probably set it there, right around there. What else we got here? Sitting on a Feb Netflix put spread 95.98. Roll forward or hold on. I think Feb is okay. Again, if you roll from Feb to March, you're rolling into a lower implied volatility cycle, and you'll have to hold it for a longer period of time. But if Netflix rallies aggressively on earnings, you'll still be okay. But yeah, I don't mind staying in Feb for this one, just because you'll get value back if you do get a nice rally there. And since it's in the money, 95.98, you would pay a debit to move that forward. Looking at an 85.80 24-day. Arrows is 90.85 31-day. He is in the 90.85. So basically, at the money, risk one to make one, trading for exactly $250. The 85.80, 24 days to go, is in the weekly cycle. Still pretty liquid here, not too bad. But you're taking on more risk for less premium.
I kind of like the 1-to-1 for this.
Yeah, especially if you think it's going to rally. Like, then I would rather have more profit potential, less risk. Because if I'm wrong, especially if it sells off aggressively, you're going to lose either way. You might as well lose less and position yourself for a decent rally. E-mini is selling off pretty hard here, down 112. NASDAQ down 400. Bitcoin down almost 6K.
Is there a tweet or something we missed?
Is that dude tweeting again?
Be a tweet.
Yeah, Bitcoin down 6K now. E-minis closer to the low of the session. Pretty big intraday range here, though. From the E-minis, 88-point range, but we gapped down from Friday for sure.
Trump is going to start a press briefing at 1 p.m.
Really?
Or I guess 12 p.m. Chicago.
Really?
Or he'll participate in one. It doesn't say speaking. It says participate. Means he's going to say something.
Oh, yeah. SPX, 23-point implied move through the end of the day. Feels pretty light with that in consideration, too. But we are still seeing some implied volatility now with the little vol pop here. 90 points through the end of the week, which isn't nothing, considering it's already Tuesday, halfway through the session today. 94 call calendar, short the Jan 23, long Feb. I assume you're talking about Netflix. $94 call calendar. Long Feb, short Jan 23. Yeah, I think this is fine. If we just isolate this, push this to Friday, and then since we're pushing it to Friday, we don't have to make any adjustments on the short option, but Feb here, you got to kill this volatility. Let's bring this down to 35% as well. So let's do a 12% vol collapse, bring this down to 35%, just assuming that might be the case here. What are we looking at? Yeah. So paying $120 for the whole package, you could make 180-ish if we're right on the vol crush, and you get the move to the upside, and you hold this to Friday. But yeah, paying $260, collecting $130 for that cost basis reduction, big cost basis reduction, 50% on the cost of the long option. So I like that at the very least, especially with this fact that you have this nice wide range for profitability because your debit paid is so low. So yeah, I like it if you're bullish. Couple minutes left here. What other earnings we got? That's pretty much it, right?
Yeah, I mean, there's not really anything too exciting.
Do you have any other futures on your mind for this week, or are you just playing the cards as they come?
Yeah, I'm just trying to. I was off Thursday and Friday. I gave myself an extra day yesterday too, so I'm just getting back into the swing of things.
Here you go.
Yeah.
Yeah, silver ripping higher, up 6% here. Gold, crude, lots of energy movement. Are you doing anything in the ags, or kind of just taking a wait and see approach?
Yeah, I have a corn short put spread at 405, 415. And that's the only AG product I'm in. I'm long gold via call spread, and I am long the 10-year ZN via a short put spread. See, I don't know. Natty Gas helping the portfolio a lot today, and gold helping a lot today. Other than that, tomorrow I'm probably going to make some more moves.
Go. What brings you to ZN? It's a unique one. We haven't traded that.
I think I followed Chris on this one. But, the bonds are just getting smoked. 10-year moving, it's probably about 4% now.
Yeah.
30 years up, those mortgages are not getting cheaper. 10-year 4.2575. This is interesting how the bonds are going to move against Fed policy if this keeps up and these don't revert right away. Especially with the administration saying they want rates down. This is kind of the market telling them they're not doing the thing that they want. I don't know. I mean, Japanese bonds overnight, they sold off pretty hard. Really hard. Japanese bonds are up huge. It's going to be interesting for the yen, but I'm not in the yen. So.
Yeah, I had a long dollar short franc position that is now back to my P&L lows. It was like a scratch last week. That's what happens when you say you can't close things if they're red.
Yeah, right.
But yeah, seeing the euro pick up a little bit today against the pound specifically. This one's up $25, but I'm just going to leave these on, see what's what. But yeah, currency's flying around today. Pretty big move here when you look at the long dollar position. And just looking at this watch list here, you can see lots of movement between the popular USD products. Anything that's paired with the dollar is moving to the downside for the dollar weakening. So yeah, craziness.
Yeah, I was short the euro. I had a long put spread on it. I was trying to follow this trend down, and that trade got smoked today. So see how that goes.
Sometimes that happens.
I have time on it. So
yeah,
45 days.
I like it.
Maybe this press conference coming up. Maybe it'll change things.
Maybe it will. I'll be keeping my eyes on the e-minis. But yeah, we do have a Fed decision January 28th, so 8 days from now. 95% chance we do nothing. So let's call it we will not do anything, most likely. But that's kind of the same story all the way through April. So we have another one in March, 80% chance we do nothing. Another one in April, 64% chance we do nothing. We stay at this 350, 375 level. And then June is where we are projected to get our first cut. So we'll see how that shakes out. We'll see what the Prez has to say in about 4 minutes here. But we are out of time. So thanks for tuning in. If you have any further questions, you can find us on Twitter. I'm at Trader Mikey B. Thomas is at FX Westwater. Thank you again for the Natty Gas overview. That position's coming in $20 already.
There we go. Go out to lunch.
Yeah. So yeah, short term put spread here, long the 375, short the 37. So check that out on the follow page if you want to tail us there. But yeah, stay tuned. We got plenty more content coming your way on the YouTube channel as well as tastylive.com. We'll be back same time, same place, 11 a.m. Central tomorrow. We'll see you then. Peace.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tasty Trade and tastylive web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
It feels good to get smart. Get even smarter with the ultimate how-to guide. Learn 31 different option strategies, covered calls, iron condors, jade lizards. Become a trading mastermind. Get the guide at tastylive.com/guide.
Tasty Trade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
Got big goals for 2026? Get the big deal. Earn a 4% cash match on all qualifying deposits, up to $10,000 total. Plus, unlock 30 days of commission-free trading. Trade with confidence using active trader mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. Earn a 4% cash match when you open and fund a new Tasty Trade account today.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Your crypto needs a wallet, and crypto is better when it's tasty. You can now do more with your digital currencies with the Tasty Crypto app. We're proud to offer a self-custody wallet for Bitcoin, Ethereum, and Polygon. Transfer your digital tokens directly in-app and access thousands of tokens available only on-chain. Your wallet is your key to decentralized finance. Download the Tasty Crypto app and get started today.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. Only at Tasty Trade.
Earn a 4% cash match when you open and fund a new Tasty Trade account today.
What is going on, everybody, and welcome back to Risk and Reward. A little bit of a longer weekend, but we're back. We got a little bit of volatility. Hope everybody's doing well. Hope you all had a great weekend. Before we get into the info for today, Brother Gus, how we doing?
Doing well. Been firing on some dips this morning. I must say, when the gap downs come, I'm all for getting involved with those. We're dressed alike, as happens so frequently on this show. Back to my green water bottle because I located the straw for it. It was lost in my dishwasher, but I was able to put my hands on that. Congratulations to Indiana fans. Condolences to Miami fans. Wonderful game last night, and happy to be back.
What were your thoughts or predictions prior to the U Miami Indiana game?
I figured Indiana would win. I thought the spread was a pretty good number. I figured it would play sort of close, and Miami put up a good fight. Certainly the best defense that Indiana has faced throughout this entire playoff run. And Indiana just seemed pretty clearly unstoppable throughout the playoffs, and Miami put forth their best effort, but just couldn't quite get the job done.
Yeah, that's how the cookie crumbled. I know the Bears is a touchy subject still, though, but what a game. I was kind of riding off the high of that game. I'm not even a Bears fan.
Yeah.
I am a Broncos fan. It was sad to see. I was calling Broncos and Bears in the Super Bowl. So if that was on your bucket list, or if that was on your sheet, you're gonna have to go ahead and scratch that off. So maybe the Broncos, maybe the Patriots. We'll pivot from the conversation, but Broncos, Patriots, who do you got? Why? It'll be exciting.
I think the Broncos have a better chance than people are giving them. Bo Nix obviously out now.
It's a tough one.
Yeah,
it's a tough one.
But I think with that coaching staff and with Jarrett Stidham at the helm, they have a better chance than people are probably giving them.
That's what I like to hear.
They got a real good defense. The Patriots offense did struggle against that Texans defense. Just C.J. Stroud had one of the worst games we've ever witnessed. So should be a good one. But I think that'll play a little bit close. I don't think the Patriots are just going to run away with it or anything.
No, I'm excited. Just slide Tom Brady in there. We'll be good. Call it a day. With that being said, hope everybody else is doing well. We're managing some of these positions over here. And we can go ahead and jump straight into the Tasty Trade platform, check out what's been going on, what's been moving. We know the market gapped down. We've been seeing a lot of weakness. Volatility expanding a little bit more, which I was excited about because we like to play around with the VIX a little bit more, especially you dabble in there.
I do. I was long VIX. Last week I said that my VIX senses were tingling for no particular reason. So got long some naked calls in the VIX. I have since exited those, pulled out, still a little bit higher than we are right now. Like pretty much first thing this morning at almost exactly 20 was my exit for a nice little profit. Something to the tone of 40% profit on the contracts, but not that much in terms of raw dollar amounts. Certainly not enough to offset all of the long delta that's getting pulled down in the rest of my portfolio. However, I have now gotten short VIX, and I will wait. I have gone, what expiration cycle? 50-60 TE, March 18th expiration cycle, 19 strike. So just relying on the vol crush that we seem to see every time we get the vol pop. And my sentiment elsewhere reflects that as well. I have gotten long. I got long some NVIDIA this morning. I got long some Amazon this morning. And I have also tailed your Netflix position. And I've gotten long some Netflix. Not your specific position, but I did decide it
Sentiment,
was... I decided it was time to pull the trigger and pick up some Netflix. Incredibly rare earnings trade out of me. And I'm about to put another one on while we're on air as well.
Oh, I love that. I mean, Netflix has been getting absolutely beaten down. It'll be exciting to see the sentiment after the meeting, especially with the Warner Bros. Situation, Paramount situation, everything we've been talking about over the last, I think, maybe month now. But with that being said, we did a little bit of NASDAQ today. We went 1 for 2, which we'll touch on here in a little bit. So a little bit of scalps, getting in second full trading week getting into the year. So we'll touch on that a little bit. And then silver. Not to mention silver, but even gold, right? Absolutely insane moves we've seen on some of those products. So we'll touch on there too. Talk a little bit about our sentiment, how we're going to be positioning for those, kind of what we're looking out for. But these metals are moving, and they're moving fast. Gold taking the lead in terms of the lead out of those two metals. So don't know if you have any thoughts on those, but silver and gold, can't stop, won't stop.
It's incredible. Can't stop, won't stop is right. I saw a video on Instagram yesterday of a guy who was on the show Pawn Stars in I believe 2013, 2014, something like that. And he was selling a 1930s vehicle of some sort that was in really good shape, and he wanted 100,000. And they were stuck between 95 and 100,000. And he said, "Okay, I'll go 95 if you'll pay me in gold." And he took 95K in gold in 2014. So people were extrapolating that out. Something like 375,000, 400,000 would be the value on that gold now. So shout out that guy. Hope you're out there. Hope you're alive and well.
Yeah, I mean,
with your many ounces of physical gold.
2014, we're dipping back into the 10 years ago. I don't know if anybody else has seen the trend where we're bringing up a lot of footage, videos, whatever it is from 2016. Just bringing up the last decade. 10 years has gone really fast. So just thinking about 2014, kind of crazy how fast that's been. But don't know if we're on the same side of the internet, but that has been a trend as of recently. Go Broncos. Now that the good teams are all out. I shouldn't have finished the second half of that. No, but we can go ahead and jump over to the TradingView platform, and we'll look at some more of these metals, and then we'll go back on over to the TradingView, our Tasty Trade here in a little bit. We'll get on some more earnings positions, check out other things that are moving. But a little bit of the micro NASDAQ for the day.
We got rectangles, baby. We got rectangles.
We got squares. We got it all. So if you like geometry, this isn't for you. No.
Every square is a rectangle, but not every rectangle is a square.
That is true. That is true. That's words of wisdom.
Cases.
That's the first words of wisdom that you hear as a kid growing up. You're like, wow, that's valid. That is true. No, but with that being said, we took a little bit of a long. We were consolidating all morning. Anybody else that was looking at the initial balance that was formed this morning, pretty much all the volume aggregated within here. And then we kind of saw a little bit more of a strong break here, which gave the confidence to take the long to the value area high. So that's kind of what played out there. And then we took the short here. I mean, we just top tick stop out. You gotta love it. This is one of those where the market then sells back off, and you just gotta love it. So that's kind of how the cookie crumbled today. That one's bittersweet. That last one was bittersweet. 15-point loss. Market runs in your direction, but what can you do sometimes? Didn't want to chase it, and that's as far as we got with that one.
Right? Yeah, still in a positive day.
Yeah,
we're working out for you.
Decently well. Daddy Trump is about to speak.
Yes, Trump is about to speak. I believe he was supposed to start at the same time as us. So, we schedule our things at the same time as Trump because we know we can compete for viewers. But, the way that those it's usually a Trump kind of operates on rapper time with these speeches. So he'll come out 25, 30 minutes late sometimes, and you just got to deal with it.
Trump is just leveraging the Tasty Live show.
That's true.
Got to plan it at the same time. These boys hop on there.
Yeah, maybe Trump is trying to steal viewers from us. Exactly. Has anybody ever considered that?
He's trying to snag every last view, every last bit of attention. But no, especially with Trump speaking here in a little bit, it would be really awesome to be able to catch some of that volatility. I don't know if we're going to get that, but while that is being done, we will take a look at gold. We'll take a look at silver, some of the futures for Bitcoin, and then we'll circle back around to these other positions like earnings.
Andrew, are you talking about Frankie selling his 1929 Mustang? We're not talking about Frankie Walsh, are we? Because if so, I am not. I would have noticed if it was Frank Walsh on the episode of Pawn Stars. I don't remember the name of the guy, but it was something like a 1929 Mustang. I'm not a car guy. Is Apple on your radar? Apple is on my radar, I would say, as it pertains to these kind of dip buys that I've been firing off this morning. This one when I was looking at everything this morning, it looked like, and actually it was what Ariel acknowledged where he got top tick stopped out. It looked like we were sort of forming a reversal there. So I was trying not to waste any time getting long a couple of positions. Apple, though, did not seem like it was beginning to reverse. The momentum still seemed to be strongly downward. So waiting to see if I can't get a better entry on Apple. But this is definitely another one that I'm eyeing to maybe grab some longs on here amid this dip. But yeah, with vol expanding again, not racing in, but definitely on my radar.
Oh, most definitely.
But yeah, okay. And yeah, United Airlines was what I'm gonna get on here in a little bit.
I gotcha. A little bit of a pullback in the crypto market. I know we were looking at IBIT the other day a little bit, some BITO, the crypto ETFs. But let us know what you're trading. Let us know if you're trading any Bitcoin. Let us know if you're trading any Ethereum right now. They're taking quite the pullback, I gotta say. I mean, just zooming out a little bit here. Let's go ahead and take this drawing off the screen.
Say, what do we got going on?
A massive circle. But just zooming out a little bit here, let's do a little bit of analysis together. Let's go ahead and take out our fixed range volume profile. And let's go ahead and see if we can find a prominent swing high and a prominent swing low that we can take. Zoom out a little bit more. Go to the daily. And let's just take this little consolidation period that we have, because it's looking like in this little consolidation period, this might end up being the high for this area or this little range that we're trading in. And this looks like it is the swing low. So with that being said, let's take the fixed range volume profile and just take it from that swing high to the swing low to the current trading price. And let's just view where most of the trading activity has taken place as we've been consolidating for the last month and a half since the end of November over here. So now what this is letting us know is that this point of control, this is where the most trading occurred, which was at 90,867 on Bitcoin. And we're peaking below that now. So that's something to keep an eye on if we're directionally trading Bitcoin. That's just add a little bit more context around what crypto's been doing. It's looking pretty weak right now.
As someone who is directionally trading Bitcoin, I am a sad puppy today in that regard. Actually, this discussion just reminded me that I wanted to rotate out of some of my February 20th expiration on IBIT. Keeping on the naked 60 call, which is essentially worthless at this point, basically just a wing and a prayer on that one. But I also have 54.56 short put vertical there, which I just took down from 3 contracts to 1. If IBIT could somehow do the miracle rally back over 56, then that would essentially just reduce me to a break even with the losses that I just ate on those. But want to get some cost basis off the table there because there was plenty of meat on the bone left to lose.
Oh, I like it still. Still getting a lot of volatility out of Bitcoin. It's seeming that it's offering a lot of long opportunity and short opportunity. Just zooming out a little bit over here. But before we switch gears from Bitcoin, we'll just mark off these levels so that we can return to them throughout the rest of the week. So let's just mark off the value area high here at 93,277. So what we're going to do here is go 93,277, which you don't even have to type it in here, but it's kind of nice to just see it because it shows it off to the right side anyways. And then we'll just label that value area high. And then we'll do the same thing to the bottom over here. So we'll put the value area low there. And then we'll go 86,515. 86,515. It's like whenever you're going to your email real quick, you're like trying to memorize the number real quick so you don't lose the other half of it. That's what's going on right now. And then the value area low. So this is just letting us know that 70% of the trading activity took place inside this range. So if we start to get a little bit more acceptance above it or below it, maybe we start to go seek a new level of value. But just lets us know where the market's kind of been with the distribution of volume at least. But we'll see where Bitcoin goes. It's been exciting. A little bit of movement.
We love a bell curve. We love a bell curve.
We love a distribution of volume.
Yes, we do.
We love that.
But yeah, surprised to I don't know. I will say this. Maybe like the worst prediction I've ever made before was something like 6 months ago when I was like, is crypto going to start to move in tandem with the metals, or vice versa, whatever? Are metals going to start to kind of move in tandem with the crypto? It seems like these could both be hedges against inflation. Oh no. Oh no. Terrible. Hand up. Horrible prediction. Yeah, that was that has not manifested whatsoever. If anything, they've been moving like inverses in the past 3 months or so.
I mean, I gotta say, I don't think a lot of this was on our bingo cards though. So I mean, to your point,
absolutely.
but I mean, good
Absolutely.
Lord,
Yeah, I don't know that it was on anybody's bingo card for crypto for the metals to make the type of move that we've seen. I know a lot of people were long metals, and I'm sure that you were thinking there might be higher highs in silver, but I don't think anybody was necessarily predicting SLV to test 90 less than a month into the year. And I mean, it's just insanity. I mean, I don't even know how many times I've tried to get short this thing now. I mean, I think it's been like once a month I try to get short because I figure this just has to run out of steam sometime. But the biggest meme stock in the market is freaking gold. It's silver.
Well, I mean,
it's insane.
We need to take a book out of Brandon's book, because Brandon has an average cost basis of about, what was that, 55,000 on Bitcoin? I mean, you're sitting comfy, right? Like that's getting, that risk to reward is attractive. That's a little bit more favorable. It makes you more comfortable just to sit in your position. And I bet, I almost called you big deal, Brandon, you're not, freaking out about your position in terms of your feelings.
Absolutely. No panic selling
up, gapping down.
I saw also mentioned, had some at 800 back in the day on a hidden wallet of lost magic. I'm seeing that would, that's tough. That's a tough pill to swallow, Brandon. My condolences to you on the lost wallet there. That's, I can understand how that would eat you up. I hope you've made peace with that situation at this point. And you never know. Tech is only advancing. As AI gets better and better, we're probably like 5 years from you just being able to instruct an AI to hack into your wallet.
You might be, if that. But with that being said, we can go ahead and jump back over to the Tasty Trade platform. We'll see what's going on over here on these watch lists, see what's going on with earnings. I know you had a couple things on your mind as well. But as we come right back to this silver chart just once again leaving you speechless. One for the books for sure. Silver is one for the books.
Thank you for the kind words, Andrew.
History books. That's what it is.
Should do a live stream if Trump goes live and speaks on tariffs/economics. Not sure if you can due to rules, but it'd be fun to tune in and watch the charts react. I mean, we absolutely, we could. I don't know if we could pipe it in. I don't know what the. I'm sure that there is some kind of restrictions on who can re-air those Trump live streams, but we could always sit here and watch the charts react. That's absolutely possible. Back when ETH was mineable with GPU, I would mine it and turn it into Bitcoin, so it sits on chain today. How about that? Gold to silver ratio chart is looking scary.
I really don't hate some of the calls on GLD. I mean, some of the premium, the gap up and the hold to the highs is insane. Not against the position in some of these metals at the same time, to be honest.
Yeah, it's incredible. But I'm going to throw on here is United Airlines, UAL. They have earnings after the bell today, much less. I guess it's not getting the coverage with big Netflix also going off. But after the gap down today, this just feels like a good spot to kind of get contrarian into earnings. I have a strangely sharp prediction on this, and if I'm right, it'll be awesome. But I'm thinking United, the difference between United and Delta donked their earnings a week or two ago, whenever that was. The major difference between these two companies is that Delta has a relationship with, I believe it's called Monroe Energy, to source their fuel, and they're able to get fuel a little bit cheaper, while United is willing to gamble a little bit more and just go market price for fuel pretty much all the time. And so when fuel goes down, that's really good for United and slightly worse for Delta, and vice versa. I am expecting United to say something Venezuela, something cheap fuel, and this could, when issuing forward guidance for the full year for 2026, that could be enough to prop this up. So that's where my head is at. I'm going to do something fairly aggressive and short dated here. I don't know about like necessarily 3 DTE, maybe 10 DTE, but I want to keep this pretty tight, isolate the binary earnings event, and just play a slight little move to the upside. I don't even need to get too crazy. But yeah, I'm gonna do good old fashioned short put vertical, and yeah, maybe we'll try like 110, 112 for 10 DTE. What about 109, 111? Is that more 1-to-1? Yeah, I'll go 109, 111. That's $98 of buying power for 102 in credit. So pretty much 1-to-1 risk profile there. we'll keep things light. I'm not insanely convicted about this, but I am willing to take a shot. So we'll see.
100%.
See if we can get a fill too. These are not tight spreads.
I do like United. Like as a service, I think United is really solid.
Oh, sorry.
Maybe up there with what, Delta? Do you have a preference?
I'm definitely more United. I personally travel American more than anything. It's just who my credit card is with. My parents are United, and I've always I flew United a ton.
That's what I was going to be curious if it was habitual.
I do think that United is definitely like the best service.
Is it?
Having flown all
Why
over.
do you say
Delta is very competitive as well. I think United and Delta are kind of on one tier. It's a slight leg down into American, which is still very nice. It's not like budget by any stretch of the imagination. And then as you work down the rungs into the budget airlines, they all compete as well. But United, it's just I don't know. I just feel like I've always just gotten slightly better service, more beverage service, wider range of snacks, slightly more high tech. I like the especially like the seatback TVs just have a little more going on United. The flight map is just a little bit better. It's just like I feel like at every turn they're just kind of 5% better. Like
it's the little things.
Yeah, it's not
It really is the little
anything
things,
like groundbreaking. It's not like it's not like United is some crazy luxurious thing in America. And American is this considerably worse thing.
Yeah.
But just it's just little edges here and there that make me partially United. I'll be moving on a United credit card here pretty soon.
Oh, nice. There we go. There we go. We got a little bit of United Airlines earnings coming up here, so we'll see how those pan out. Especially with Boeing and some of the other names in the airline space at the same time. We'll keep an eye on to see how the overall sector moves. Boeing has been going ballistic since end of November. So
yeah, Boeing is an interesting situation with the whole Trump is going after the defense contractors now is a big news thing last week. Maybe 2 weeks ago. It all runs together, man. But when Trump went after the defense contractors, I expected Boeing to maybe take a little bit of a sentiment down move with that because while they're obviously not a defense contractor, they have operations in those circles. But it seems like everyone just went after the Lockheed Martins, the Northrop Grummans, the L3 Harrises of the world, Raytheon, and didn't really consider Boeing in that broader calculus. So yeah, I mean Boeing. The funny thing about Boeing is like, how long is their order backlog right now? Like 9 years, 12 years? It's always such an absurd order backlog. It's like no one could order a Boeing plane for the next decade and their revenue just wouldn't change. I mean, it's crazy. They're very stable in that regard. Delta, United, great full service airlines, better than the budget airlines, not much more money. Absolutely, Soul Train. I agree. Yeah, especially these budget airlines are getting carried away. It's we need a Ryanair-esque thing here. We don't have anybody that's going. I saw Ryanair is beefing with Elon Musk on Twitter right now, and as part of that, they're rolling out $16.99 one-way flights, which $16.99 euros, so $20 call it, one-way flights. They're selling 100,000 tickets on this promotion. There's nobody that's even coming close to that. And especially when you get into Delta and United versus say Spirit and Frontier, if you're booking 3 months out, it's going to be like $60 more to take a United or a Delta or an American. And it is just worth every penny, in my opinion. Obviously, purchasing power varies for everybody, but I am not in the upper echelon of purchasing power as in the broader American scope. And it's just worth it. Spirit, I mean, they want to charge you for a cup of water. You kidding me?
Yeah.
What are we talking about?
Oh, completely. And I mean, if you could offer the convenience with little effort to yourself, I mean, especially with
I'll tell you
like
what too. That's another little thing I think United does 5% better is they always give you the full can. They'll give you the full can and a cup of ice. While on even just like American, they'll pour it. And if you ask for the full can, they'll usually give it to you. Yeah. But it's not the default.
Yeah.
United, they're always like, oh, here, take it.
That's true. That's a good point. That is a great point there. United on top as it stands. And then maybe Delta. But what Delta do you look at for the short strike when selling vertical spreads, 45 DTE? Sometimes my eye kind of goes straight to 30 Delta for the most part. Sometimes it'll fluctuate around there if I want to be a little bit more aggressive, kind of sneak it up a little bit. It's usually just to collect an additional credit for the most part. But usually around 30 Delta, we'll feel a little bit more comfortable to sell something out of the money.
Same answer for me. 30 is what I was going to say. I took the words right out of my mouth. Oh, enjoy walking the dogs, Allison. Have a good one. See you soon. Hopefully Trump doesn't take the market while you're gone.
Yeah, no, I mean, I think Brandon had said, Trump said we're making record highs today. So the market has only been going down since that comment has been said in the chat there, Brandon. So we're going to go ahead and let that one slide. But We'll see what we get. I haven't seen an increase in volatility.
I mean, I will say, I mean, if you just bought what Trump tells you to buy when he tells you to buy it for the last year,
that's a great point.
Things would have panned out pretty well for you. So I listen to the man when he talks about the markets.
You know what? With that being said, what do we got on in the market? We don't have any directional bias in the market right now. We got a few moments left. Do we need any long delta right now, guys? We've sold off. We've gapped it down. Brandon, I'm coming for you if we gap down again tomorrow. No, I'm just kidding. No, I'm actually. We'll just see what the contracts are going for. We won't be impulsive and throw anything on there, but let's just quickly see what these are going for. 595, 590, 113. Let's see, go 600. Let's go $5, 130, 130. We could go a little bit further out in time because that's already 24 days left and still not getting that much credit.
I mean, that is very juicy premiums on what I feel is a pretty realistic range to stay outside of there.
I think we could. I mean, we could look at the 605s. We could sell the 605s. We're trading at 610, 611s. I'm short micro NASDAQ scalps now.
Hi guys, watching you in a room full of reporters waiting for late Trump to speak. Yeah, that sounds about right. It's okay. The Futures Power Hour gang is more suited to handle a Trump live speech than we are anyway.
Yeah.
But yeah, it's rapid time, man. Trump, he'll come out on rapid time.
It is rapid time. It's looking like we're now, Brandon, maybe taking out the morning lows. It's looking like we're trying to do right now. We won't do anything in QQQ or SPY right now. If we did, it would be a little bit more longer dated, just to get our longer term opinion out there, just to dip our toes in the water, put a little bit of skin in the game. But right now, I honestly don't even have too much of an opinion on the market. I'm really not that bullish. I'm really not that bearish. That's why I don't even have a swing position on personally.
Yeah, I'll definitely be eyeing some longs. Yeah. It's I don't know. Yeah, it's a great debate internally right now, and if I want to get long before or after this speech. I mean, if good things happen, I don't want to miss the boat, but at the same time, it's also very likely not so good things could happen, and there could be better buying opportunities. I've put on enough longs today.
No, I hear you.
I've put on enough longs against this move. I don't need to.
I'm not running. I feel you on that because I'm not running to throw longs on either. Really want to take advantage of this if this is a dip to take advantage of. But I mean, just zooming out on QQQ, like I mean, I guess personally, I am a little bit more short biased, but it's like trying not to pick off the top, and I don't know. I guess we'll sit on our hands.
Yeah.
I guess that's where I'm at. I don't know.
No one ever went broke sitting on their hands.
Yeah, it's not. Unless you're broke already.
Oh, unless you're broke already.
Because then nothing changes.
You're not getting more broke.
That's very true.
No one ever got margin called. Well,
there we go. Anything else top of mind before we head out for the day?
No, I think that's pretty much it. Starbucks flying against this move. Starbucks is quickly becoming my GOAT, really validating my thesis here. Shout out Brian Nickel. I love you.
The GOAT.
That's the GOAT. That's what I got.
Cool. Well, E-Media, Stefan, Soul Train, Brandon, everybody else, thanks for taking the time to hang out with us for the day. We'll keep an eye on the overall market, see if we get a little bit more volatility to kick in there with Trump speaking. We'll keep an eye on gold. We'll keep an eye on silver. Be sure to pay attention to make sure any of those margin requirements could increase. I mean, I don't know. There's a lot of insane volatility going on right now with the metals. So that's going to do it for today. Thanks for taking the time to hang out with us. Be sure to stay tuned for more segments coming on next, and we'll catch you guys next time. Peace.
Tasty Trade's Active Trader interface makes futures markets your arena. Built for the bold, not the bored. Trade CME futures with a single click. From micro contracts to major ideas. And go even further with futures options. Tasty Trade lays out multiple ladders and charts for total visibility. Plus, hundreds of built-in indicators for traders who want a broader view. Tasty Trade, pro-level tools, intuitive design, total control.
In the world of investing, a beast lurks between the numbers, ready to pounce. Some traders hide from it, some ride it. If that's you, join us on Tasty Trade. Genius loves company.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. Only at Tasty Trade.
What's up, everybody? Check out my new series, Life Cycle of a Trade, where I show you my real-time trades with insights into strategy selection, adjustment mechanics, all the way to the closing order for all of the tastylive core strategies. Got big goals for 2026? Get the big deal. Earn a 4% cash match on all qualifying deposits, up to $10,000 total. Plus, unlock 30 days of commission-free trading. Trade with confidence using active trader mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. Earn a 4% cash match when you open and fund a new Tasty Trade account today.
Tasty Trade has crypto, and you can trade with zero commissions, Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
Global markets never sleep. Explore them with Forex, now available on Tasty Trade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on Tasty Trade.
Earn a 4% cash match when you open and fund a new Tasty Trade account today.
We're back. It's still Tuesday, January 20th, 2026. This is Futures Power Hour, sponsored by CME Group. I'm your host, Chris Vecchio. He's Ilya Spivak. Ilya, I've made the frequent mistake once again of deciding to take a social media detox for a few days over a long holiday weekend, only to arrive at whatever the hell this is today.
That's what you get. You gotta look at your screen in a drug addict-like fashion. Watch all the quotes. Otherwise, you never know what'll happen.
My mistake. Notifications on moving forward. The latest notification that we received, of course, is that this Greenland thing is still going forward. There's been a lot of leaking of text messages between world leaders, between Trump and the Danish PM or the Finnish PM or even with Macron, the president of France. Trump on his way to Davos, tweeting up a storm, truthing up a storm, I suppose. Either way, though, Ilya, the point is that he's set to speak sometime soon. Carolyn Levitt announced that he will be the guest of honor today at the White House press conference. So we should get some of those quotes shortly. I don't control the sounds around here. But we do see, though, that this is the catalyst, because once that was announced this afternoon, volumes in the market dried up. It's pretty clear that markets are waiting on tenterhooks to see what the president will say about this now evolving saga. Out is the Green New Deal, in is the Greenland deal, as we have since learned today from the president himself. I suppose that's a clever bit of marketing. It's a day where we see Sell America reasserting itself across the board.
Right.
It's not my conclusion. It's the conclusion of what's in the news. Your broad financial media sweep tells us that it's a risk-off day. Fox News taking the more optimistic approach that there is indeed a plan for Greenland, whereas CNBC calling it Sell America, and Bloomberg focusing a little bit more macro with respect to the Japanic going on. We can say Brexit, right? So we can call it Japanic, I think.
Why not? Why not?
Ilya, what are we doing here? Is this just another weekend where we take a look at our shiny rocks that carry no cash flow, no dividends, no coupon payments, and hold them near and dear to our hearts?
I mean, you got to hold the shiny rocks today. I certainly am. Yeah, I mean, you look at this, and Sell America is exactly what we see here. It took us longer to get to this point last year. We started selling off mid-February. We didn't get to this level of hair on fire until late March, early April, as Liberation Day loomed. And of course, Liberation Day came out and everybody said, well, these people are absolutely committed to cutting off their own face. Let's just go ahead and dump their assets. And then after a few days of that, we got a situation where the president said, hey, bond market's getting yippy out here. Let's go ahead and put these tariffs on hold. And after lots of stalling, dissembling, and obfuscation, we get a tariff regime that ultimately the markets end up acclimating to, because it ends up being not what the president said. And let's not forget, we are still waiting for the Supreme Court to maybe strike down the core part of those tariffs, because they're conditioned on IEEPA. And the Supreme Court seemingly is in no mood to hear any of that nonsense. So instead, we're back to that same mode here already by January. It's the same exact thing. The markets are looking at this and going, okay, so all of these operations that the U.S. has been conducting, capturing Russian tankers, bringing assets into the Middle East, all of that depends on bases in Europe. Let's not have those. Let's go ahead and break down NATO, which has enabled literally the things that we've been doing just over the past few weeks, let's say. And so, needless to say, the markets are apoplectic, and there's, again, well, this place is too volatile, sell. And so bonds are down, and stocks are down, and the dollar is down. And for me, the question is, how long before the president comes crawling in front of a microphone and says, wait. We're yippy again. Let's back this up. And your sound is off.
Maybe it's today at Davos, but if it's Sell America, which is what we're probably seeing here, dollar down, bonds down, stocks down, gold up, it's certainly hitting the stock market. Stock market, of course, gapping open lower and then continuing that way. 68.54 right now on ES, back to that 68.50 level. Can't get away from it. It's a 25.9 IVR, so volatility has jumped, but in terms of where it has jumped to, whether or not this is considered something substantial, we'll call this a VIX now trading in at an even 20. We'll have volatility futures for the front month for G up at 20. We go over to H, the next month contract. They have to risen across the curve here. Ilya, I'm thinking about what happens next, of course, because it seemed like for the past few weeks, the market was taking a look at this Greenland issue and treating it more as a hobby horse of the president.
And rightly so.
Now it's potentially pricing in a deeper schism between the U.S. and its major trading partners, a general risk premium rise at the long end of the Treasury curve, the tariffs that have been proposed as a result of this Greenland negotiation, if that's something that we want to call it, feels more like a forced sale.
Has a certain extortion vibe to it.
Goldman Sachs has estimated that those additional tariffs constitute about 0.1% of the S&P 500 earnings potential for the remainder of this year. So not necessarily a material hit to some of these companies' margins, but the supply chain issues and the knock-on effects could be profound if that's the direction we move in, of course. I would just take a look at some of our major production lines here for something like, we'll call it a fighter jet, like an F-22 or an F-35. A lot of those components are sourced from abroad using engine parts from places like the UK and Germany, from companies like Rolls-Royce, for example. So, Ilya, today's news, of course, that sparked some of this concern today more than it did, let's say, when the futures market opened on Sunday evening into the Monday market closure, is that we had this Danish pension fund, a Kidemiker pension, saying it's exiting its U.S. Treasury position by the end of this month as a result of what's been happening here with respect to the U.S. and Denmark and Greenland. I do think some context is important there before we talk about the sentiment more than the actual market impact. They're saying they're going to sell $100 million worth of U.S. Treasuries. The most up-to-date information that we have from SIFMA here in the United States suggests that Treasury trading volume on a daily basis is about 1.047 billion. We'll call it, 1.047 billion, 1.047 trillion dollars per day. So $100 million of bonds being sold over the course of a week or two in a market that's going to turn over tens of trillions of dollars in that interim period.
Right.
The
Economist made a similar point and said in GDP terms, it looks like if all of these things go into effect and they get uplifted in June as the president threatened, so he's talking 10%, and then if there's not compliance, then 25% by mid-year, that if that were to occur, that would shift 0.08% off European GDP and 0.06% off US GDP. There's a separate study coming out of a German think tank, not today, over the weekend, not linked to the president's comments. No, this was not timed. That says that 97% of tariff incidents, that is to say the place that's paying the tax, Americans, because of course it is, because you can't tax citizens of other countries unless they are at the very least within your borders. And so you're going to have to tax who? The people importing the stuff. Where are those companies based and who are they? They're Americans and they're based in America.
Yes, that's not according to the study. That's according to just economics.
Right, but they actually went and looked at the numbers and said, oh, look, maybe it's shifting. Maybe that's the logic, but the actual incidence is landing elsewhere because of the way things work out. And sometimes this happens. You intend to levy a tax over here, but the way that it's passed on from where you levy it to who ultimately pays it, it might be paid elsewhere. So this German think tank went and said, okay, let's not go theoretical. Let's look at the actual numbers, who's paying these tariffs. 97% of it falls on Americans.
Yeah, it's a big number. So I suppose Trump using
Europe must really be shaking in their boots now.
So we're going to tax Americans to get
because Europe won't give us Greenland.
To give us,
we already have a base, and the treaty permits us to expand it as much as we like. What are we doing?
Hey, they estimate that a purchase of Greenland could cost around $750 billion US. Ilya, do you want to guess the market cap that's been wiped off from stocks today? It's been a Greenland. It's been a Greenland.
Ah, it's about the size of Greenland.
Oh, okay. So the market's already paying the price for it. The volatility rise here at ES.
The markets are nothing if not striving toward efficiency. I won't say efficient, striving toward efficiency.
Maybe it's priced in then 68.49, 68.50 here. The low that we have at the early part of January, 68.66.75, that is knocked out today. So all of a sudden, this higher high that we put in last week, that's now.
Good night.
Yeah, good night. The uptrend from the lows that we had in in November, December, and January, that's out here. So the close today matters a lot. with President Trump set to speak, and I'm looking to see if there's anything coming across the news wires related to this. Is there anything? Not that I see so far.
I'm not seeing anything yet.
Maybe my feed is a little bit slow to update here today. That obviously is the most significant catalyst that we have rest of the session. I know that there are Netflix earnings out after hours today.
United Airlines too, as one Anthony Batista reminds me.
Yes, but are these going to set the trend for markets? Listen, Netflix probably has a little bit more idiosyncratic risk than an Nvidia or a Microsoft.
I can't watch the news. I'll watch a spy show on Netflix instead. At least it's a little sane and soothing.
Yeah, if the people are worried right now, I suppose now is the time to be launch a cooking show. Like the cooking show viewership rates begin to take the real significant upward trek after 9/11. Because everyone wants to feel, and always after a crisis, cooking shows get more popular. So I would imagine that right now might be a good time for a cooking show based in Nuuk, Greenland. Probably would get some views. But we see Netflix here.
If we could only send the great Anthony Bourdain there for some cultural exchange.
Oh, rest in peace. Tomorrow, Johnson & Johnson, Charles Schwab. There's really nothing that's going to help define the macro news. So it's all Davos. It's all Trump. It's all what he's going to be saying here. So if you're looking for, this to be a typical kind of day or week, I suppose that is not something that we can ultimately count on right now. Ilya, as for me, whether or not this is a good time to try to catch a falling knife, I think is a question that a lot of people are going to be asking themselves, because dip buyers have been continuously rewarded in this market. Every 3 to 5% down move, if you've been waiting there with open arms and you are willing to wait a few weeks, you seemingly haven't been disappointed over the past few years. So with this move today, we're not there quite yet, but we're getting in the territory of just about 3% off the highs. High is up here that we have on the 13th at 70.36, and we're about 180 points off that move. So this being a 68.47 market, it's almost 3% right now. I don't see anything short-term here in the technicals that tell me it's a good time to try to buy the dip, though. No. Lots of negative momentum, lots of divergence that's still pointing lower, volatility still on the upward creep. If there's a time to add, it's not right now if I'm a bull, which I am. So I'll be waiting, but this is not the time to add.
Yeah, I mean, I've been sitting on my short exposure in the S&P and NASDAQ for 39 days as I look at my platform here. So call it just over a month. I'm not touching anything. At this point, this is starting to work a little bit. So I'm going to sit on this and wait. I still have over a month to expiration. 31 days left in NASDAQ, 38 in S&P. So I'm not touching anything there. There will be a point, and I did this in April last year, where the insanity reaches peak and markets bottom. I bought that bottom. I'm going to try to buy this one. Nobody knows where the bottom is. Nobody knows where the ultimate point of exhaustion on this is. This doesn't seem like it.
Can we talk about the Russell, though?
Yes.
That looks pretty good, all things considered. That's a nice long lower wick. Listen, it's not going to be immune to a bigger market sell-off, but if I'm thinking about the winners and losers here, it can't go unnoticed today that the small caps are outperforming the mega caps. Even in something like RSP, it's down 1.33% compared to an S&P 500, 1.8% at the market cap weighted level. If we go over to QQEW, similar type of story, off 1.31% compared to the NASDAQ's 1.85%. This is a Mag 7 story, almost like it's a capital flows kind of story, that global investors are rebelling against the biggest names right now that carry our market higher. Mag 7s here, it could be problematic for the way that I'm trading, as we do see some support down in play near the November 20th lows that would knock me out of a good deal of things. And Ilya, I can go to a lower term time frame here and start to make a case that perhaps there's a left shoulder head, right shoulder with a neckline that just broke. So the markets right now don't look good. They don't look
Well,
good.
I mean, there is something
an
to be
obvious
said here.
reason. Go ahead.
Yeah, I mean, needless to say, I agree. For the Russell, there is something to be said for its concentration domestically. I mean, you can't really call this America first because this is quite clearly counter to American geopolitical interests. And that's not an opinion. I mean, you see the way the markets are reacting. They're not reacting this way because it's good. So, and they're not reacting this way by buying the euro and selling the dollar. The euro is the best performing major currency today because they think this is bad for Europe. So let's just be clear. This is not an opinion. The price action has spoken. So that this is not America first, that much we can see. But it might be America alone. And the names in the Russell might be more resilient to America alone. Only about 20% of Russell earnings are generated overseas, as opposed to about double that for the S&P 500 as a kind of catch-all for the sort of market average. So the Russell is quite a bit more comfortable being a domestic sandbox kind of an animal than is the S&P. The multinationals in there are much more, it's in the word, multinational. So
tell me about this, though. We frequently say around here that one of the issues with the Russells, all else being equal in a rising rate environment, is that so many of these small cap companies have floating rate debt. At least they have higher levels of floating rate debt compared to the mega cap tech companies. Likewise,
and less
they have
cash on hand.
smaller moats is my next point. They have the balance sheets aren't as the kind of shape that an Apple's is or a Meta's is. So when you have these episodes where it looks like economic growth could slow and a backdrop of rising rates alongside of it, the Russell tends to get hit hardest.
Yes.
Is it noteworthy on a day when treasuries are getting a little unglued and hey, maybe those out of the money put spread in ZB, which expired in 3 days, they've come back from the dead all of a sudden. And that reverse iron fly-in notes, that's certainly moving today. Again, monkey paw curls, not for the reasons that I wanted them to. But we see here earlier that, even with the long end getting unglued a little bit, Russell is not necessarily taking it on the chin the way the other things are, even if you would presume the yields would hang heavier here.
Yes.
This is perhaps the most comforting thing about the Russell. If we're thinking about like, where could I pick up bullish exposure to stocks on a day like today? The Russell probably is making the most convincing argument to be a dip buyer there first than elsewhere.
I mean, we've been talking about this for a couple of weeks. You're absolutely right. We've been talking about how the Russell did make a new high relative to October. The other two have not. So, and NASDAQ has been soggier, relatively speaking. So when you look at this, you go, okay, so if the estimate is this only shaves, in the worst case scenario as announced so far, again, we don't know anything. We don't even know if the president has the authority to levy any tariffs. This could be a completely empty threat because the Supreme Court comes out and says, no, can't do it.
Is that one of the reasons why the Supreme Court's delaying the tariff decision? Because they're waiting to see how this plays out and maybe factoring into their decision-making apparatus how Trump is actually using the tariffs and how he's trying to implement them?
It could be. I don't know.
There's part of me that thinks
I wouldn't know to say, but
that the more this Greenland stuff goes on, the less likely it is for the Supreme Court to rule in his favor.
Sure. I mean, there's obviously no national emergency with Denmark.
You don't think the 56,000 people who live in Greenland constitute a... Okay, go ahead.
Yeah, well, I mean, I guess, but maybe not the kind of national emergency that our staunch allies, Canada, Mexico, and the core of the European Union are. But, we've got their eye on them. The strange thing about all of this, when you look at the Russell, is you go, okay, well, surely this is the most growth sensitive names. But then you go, but if the worst of this, assuming the president can actually do it, is 25% and it shaves off 0.08% off Europe GDP this year and 0.06% off ours, is there a growth risk? If there's a protracted trade war, if this turns into a tit for tat sort of situation with Europe, okay. But judging by what happened last April, that doesn't seem like the likely course for now, or at least I think that's what the markets are telling themselves, that this will be another taco situation.
Interesting to see that other equity markets around the world are not nearly as down as ours are today. You could go over to something like EWC for Canada. It's off just a little bit more than 0.5%. You can go to Mexico. That's up 0.6%. Head across the pond, I suppose, EZU, European stocks are down 1.6%.
Is that because they think he's changed focus? Oh, he's not looking at us anymore, everybody.
Well, no, one of the prevailing trends of last year was that as there was perceived capital flight out of the U.S., whether or not that actually occurred is a different story, depending upon what metric you're using. But if you think that global interest was away from allocating the next incremental dollar to the Mag 7 names and was looking for lower PE, lower valued options elsewhere, we see that the U.S. was the worst performing developed equity market in 2025, even though it was up on the year. You could basically pick any other country out of a hat and its stock market was up 20, 30, 40% year to date. So I'm thinking, Ilya, then if the factors that are driving us higher in 2025 have continued and perhaps accelerated, enhanced, have been amplified, maybe would be the better way to describe it here in 2026.
Okay.
Shouldn't we be dip buying in foreign equities first? And I know these aren't futures, but again, the Russell is standing out today as something taking it on the chin a little bit less than everything else, and foreign equities are taking it on the chin a little bit than everything else. It's the mega cap tech names. You know, the crown hangs the heaviest upon their heads.
Yes.
Something for the watch list.
I'm certainly, as you know, out there shopping whenever anything in Latin America becomes available, interesting, and on at least somewhat relative discount, because this spheres of influence thing is a longer term story. It's not going away anytime soon, in my opinion. Divesting from China was always going to look like shifting to Latin America to some extent. And it could have been done different ways, but that seems like something that's likely to continue under this administration, the next administration. And so anytime anything comes around there, and I look at Peru, I look at Chile, I look at ILF, which is the catch-all ETF index, just as an indicator to see what can be found there as far as signaling. But
that hit a new high today, for what it's worth, in terms of signaling.
It did. Brazil in particular, obviously, has been my focus. They've really stood out as a way to sort of get exposure to the U.S.-China tiff, because a lot of what China would substitute the U.S. for is in Brazil. That's where ag is. That's where oil is. They have tons of rare earths, by the way. I've heard the argument that maybe Greenland is a rare earths play, which has got to be a level of confusion as to what rare earths are and what the problem with their supply is that is truly baffling. Rare earths are not rare. What's rare is the smelting and processing of them, which is incredibly dirty environmentally and very labor intensive. It's part of the reason it happens mostly in China. Our problem is not that we can't get access to rare earths or that China has a chokehold on rare earths. It's that China has a chokehold on rare earths processing. And if somebody wanted to do that elsewhere, and somebody were financially inclined to fund such things for geopolitical and security reasons, one would not go about it by trying to secure more raw, unprocessed supply.
Ilya, if this is a wedge that we're seeing here in the S&P 500 play out, it has ugly connotations for move back to 6,600. The market has a small bounce here, no longer down 2% on the day. We're waiting to see if President Trump is going to say anything. It's noteworthy.
He's said a lot of things, just none of them have anything to do with this.
Yeah,
it does make you wonder why he's doing this right as he's about to go to Davos, because I think if you give the situation the dispassionate reading, and you go, okay, well, this is norm shattering, but the president shatters norms a lot. So, okay, is this the first time that we've had a tiff inside of NATO? Well, no. Turkey and Greece have shot at each other. The US and Europe were on different sides of the Suez crisis in the 50s. So one thing after another. I mean, there's precedent. It's not like NATO has to collapse tomorrow. It's also way too integrated to collapse tomorrow, even if this was that. So it's just there's too much. So what are we angling for here? The president has used this level of shaking the apple cart
Nobel Peace
in previous episodes to extract concessions as a bargain.
Concession being a Nobel Peace Prize.
What's the concession? What are we doing here? What's the end game?
The end game is a market sell-off, then a taco. So we'll see where we go from here.
From the perspective
perhaps.
of the administration, I struggle to find what it is that we want to shake the Europeans to do, because this looks like the stick followed by wails of disbelief, which typically are followed by the carrot. The good inspector is going to come into the interrogation room any moment now with a coffee and a cigarette. The question is, what's he going to ask for? And in previous episodes, you could see, okay, J.D. Vance goes to the Munich conference, rubs mud all over European leaders' faces, and makes it clear you need to rearm now. And in fairness, they've needed to rearm. They've needed to meet their NATO obligations for a long time. And it seems to have lit a fire. So, okay, you have one element here where you go, okay, I see what we're doing. We're trying to shake Europe out of their stupor, let's say on defense spending, the hard way, because they won't do it the easy way, and the president is just the kind of norm breaker to do it. Okay, fine. What are we doing here? What is it that we want from them in this instance? I'm not really sure. I don't see it.
Whatever it may be, if this Danish pension fund is selling what is a minuscule amount of treasuries in the long run, and quite frankly, is more about the sentiment than anything else, that there is, when one company does it, when one institution does it, others follow. So you could presume that there could be a little bit more selling pressure here. Ilya, a country can't dump all of its treasury holdings in a single session, even over the course of a few days, given all the institutions and on even weeks. At the sovereign level. It would also then make the holdings that they have even weaker. So it is a little bit of shooting oneself in the foot. Nevertheless, the sentiment remains. So bonds here after break above 116. Looks like it's a good time to get long. So much for that. The downtrend, Ilya, the diagonal off the highs that we have here in October and then again here in November. It did hold up thus far in January. We break through the flag support. So it was a bear flag with a potential head and shoulders pattern now. So much for the longer term bottoming efforts. Well,
and by the way,
this is good news for me because I have 3 days left. Yeah.
We talked about last week about doing it as a spread, being long the long end and short the sort of 10-year tenor. and saying, okay, I'm just going to look for the curve to twist from the belly into the long end, for rate cuts to go from the belly into the long end. That's out the window. But what a good thing to have gotten on the short side of the belly last week. That's certainly paying for some sins. But I've flipped over the long
trades never
end.
hurt.
No.
Yeah, notes over bonds. The knob spread can work sometimes. I haven't traded in a knob spread in a long time here, but we're seeing that play out. Bonds are down over 1 point right now. Notes, hey, notes getting away from 112, 111 and a half. It's a 22 IVR. So, okay, maybe this is going to work out. It's certainly not a winner yet. We're at 31 DTE here, but the reverse iron fly that was put on 60 odd days or something when it was first put on, low IVR was actually a negative IVR environment and sitting at 112. I've kvetched about this a lot recently, but I point out that this is kind of the action that we've been hoping to see at some point to the duration of this contract, where we just break away from 112, directionally agnostic, hopefully get to 110 or 114, close to it in that time. So at 31 DTE, this is finally starting to move where it feels like I may have gotten into a good trade here in notes for what feels like the first time in weeks. Bonds, on the other hand, the longer duration stuff clearly not working out here today, but with 3 DTE left on the 112, 113, I was riding this into the ground because it was at max loss. So if there is just any sort of recovery here, like another point or two, I could take this position off at a smaller loss. That would be a win. Either way though, Ilya, I'm looking at ZB right now. That's looking now like just a very clean head and shoulders pattern with a bear flag coming out of it. The measured target then is 116 up to about 119, 3 points. So you're looking at 113 potentially as a landing spot. As it turns out, in the ZBH6 contract, the lows that you have in September are right around 112 and 22 ticks. So accounting for the fact that there tends to be overshoot in markets, I mean, this would be the point I'd be staring into if we think that the
Hence
bonds
the flipping. Exactly. I mean, I couldn't agree more. And it was a knob spread, and now it's not, because I have now flipped to be just outright short the bond market. Obviously, the notes exposure stays, but the bonds exposure got flipped over because this is turning exactly. And my chart looks pretty much identical to this, minus the moving averages. A trend down, a continuation flag, and those lows from September looking like the spot to look to aim at.
Headline here, moving the market potentially. The Greenland Prime Minister Nielsen says his people should prepare for a possible military invasion, according to Bloomberg. I haven't seen anything interesting come out of Trump's press conference yet. He's been talking about, and I've seen several people tweet this out, he's been talking about he's been operating this binder really well, and most people wouldn't be able to do so without cutting their finger. So that's where we are in the Trump press conference cycle side of things, Ilya. It's 2:05 Eastern here, which means it's as good of a time as ever to go over to metals. But quickly, before we do, Treasury auction schedule over the next few days. We've already been through the 10s, the 30s. This week, and it just jumped off my screen here. This week, we have 4-week bills, 8-week bills, 13. Yep. 17, 4, and 8-week bills. Next week, 13-week, 26-week, and 6-week bills. We'll have 2-year, 5-year, and 7-year notes. So right now, if you're looking for something at the long end of the curve, I suppose 10-year tips on Thursday, that rarely ever moves the NRZB, but I suppose it offers a read-through because those are the Treasury inflation-protected securities. Sell America is back for stocks and bonds and metals. But Sell America for metals is, well, buy the metals.
Yeah.
Which gold is sitting just $5 off a new all-time high, 47.65 here, Ilya. We've been drawing some triangles here. Everywhere I go, there are triangles that I see. And these triangles continue to point higher now. So 47.86 was an upside target we outlined last week. Gold keeps going up. Silver keeps going up. It's 3.67% here on the day. A nice quick $168 rally. As bad as everything looks for me on the stock side of my portfolio today, I am just so happy for gold and silver because they have neutralized the threat otherwise.
Yeah, I mean, if we look at this, frankly, the only thing that I'm concerned about is selfishly wanting a little bit of a pullback so I can roll my February futures into April.
How dare you?
That's really
very
it.
selfish of you.
Yeah, I mean, just let me get a little discount. That's all I'm saying. Just a little something.
46.50.
Just let me hold a little something.
That's the line in the sand right now. It was the highs that we had through last week. We gap open higher here at the start of the week. We really don't see a move after the gap open below 46.60. So I would imagine that becomes a line in the sand where if we do get some dips over the next few sessions, it's a point of interest. As it were, the 1 week moving average is at 46.50 right now. So we're not there yet, but I would remind people that once we start to see gold get in that 3 to 4% above its 1 month moving average mark, things can slow down a touch. Same thing for silver when it's about 7% there, although silver is like 110% above its 100-day moving average right now, which it's never, ever been before. So who knows if any of these overbought readings actually matter in terms of short-term moves. Nonetheless, volatility here. I think this is perhaps the most surprising part of the gold reaction after the weekend's news and whatever we're hearing right now about binders and paper cuts is the fact that vol hasn't necessarily trekked higher. Right? We were at the mid 50 IVRs last week. We're still sitting at 57. Does that raise an eyebrow for you?
I mean, as I look at this, I think the most obvious thing that you see is just the same kind of demand for a non-sovereign type of instrument. We've talked about this being a long-term narrative. Obviously, today it gets extra juice from sort of shorter-term events. But does that change anything, really? No. Does that change the narrative? No. All it does is it creates a sort of accelerant, if you will, in a trend that has been here since, let's be generous, at least the beginning of last year. And it isn't surprising because that's where we get the new administration coming in and starting off on a norms-shattering kind of program. And not surprisingly, the markets are saying, well, okay, let's get us some sort of exposure to a non-sovereign currency. We don't want to pick a different one that isn't the US but fiat or otherwise sovereign because we don't know who the US is going to pick a fight with. And the US is the biggest gorilla in the jungle here without question economically. So we don't want to run afoul of America if they decide to impose sanctions on somebody or use other economic weapons like they did, for example, on Huawei as a company, on Russia as a country, on Iran as a country, et cetera, et cetera. So we need an alternative because while there's chaos in America, we don't want to outright pick a different side, which is unworkable because the dollar is so ubiquitous and America is so ubiquitous. We need a way to move around value that's not sovereign sensitive. This is not going anywhere. It's certainly vulnerable to a pullback if the president, even as he's speaking now, decides to go, the Europeans are all up in arms about this Greenland thing. It's not get all serious, everybody. Okay, maybe. We saw taco on taco with the tariffs. So maybe that's what this is. I'm not sure what it is that we're negotiating for with these tactics. Maybe it's rare earth extraction rights. Maybe we already have a military base, so that reasoning is obviously bunk. We don't have rare earth development rights, and we don't have exclusivity at the expense of Europe. Maybe that's what this is. is we have to be allowed to take Greenland's rare earths or to build a smelting operation there, and we get dibs and the EU doesn't somehow. Maybe that's what this is. Who knows? In either way, it's silly and makes no sense whatsoever for what we're actually looking to achieve. And the markets are saying that. That's not an opinion. Again, the price action is telling you what the collective wisdom of the world's money is. So if that's what this is, maybe, but in the event of a pullback like that, does the long-term narrative end? No, there's 3 more years of it at minimum. So if there is a pullback, I'll roll at a discount. Thank you very much. But I'm not going anywhere.
No reason to go anywhere. Exposure is working on the long delta side right now. Gold up more than 13% year to date after today's price action. Similar performance for silver, which hard to believe. We started the year at a very paltry $70.98. Up $24 since then. $23. Yikes. Too far, too fast is definitely something that works for me, but macro matters more than any of those short-term considerations here. 87.3 IVR. So volatility is coming in for silver. It's not the greatest of news, Ilya. We would like to see a little bit more volatility on the gold and silver side if this was going to be something that sticks. Maybe copper is that canary in the coal mine, in the copper mine, because unlike gold and silver, it's not having a bounce today. It's down 0.5%.
Yeah.
It is holding the trend line off the lows that go all the way back to late November, which, mind you, this is the November low that also you can line up on your silver chart as the final turning point before this extended run up into the mid-90s began.
Yes.
So if copper's breaking down here a little bit, oil's up a little bit, there's no growth read through per se. But as someone who's bullish and recently, extended bullish exposure, this is perhaps my least favorite metals chart at present time. It could be another flag looking for digestion, but we're going to have to play it by ear. Oil is the interesting one, though, throughout all this, because it is bouncing back. I know natural gas is having a hell of a session. In fact, we do have to start there because this is what would be the 3rd strongest day on record when I last checked for natural gas. Oh, Ilya. Boy, paper hands vecchio here. Last week got out of my short put spreads in natural gas, and if I had only waited 2 or 3 more sessions, how well those would have worked out. Natural gas has just been treating me terribly recently, so I don't know what to do with it. What I do know, though, is that what has changed here, aside from this polar vortex that's here, that's coming in. I know it's like a high of 20 degrees outside right now in New York. It's 2:15 in the afternoon. Ilya, there are several big storms that are forming over the next 2 weeks. There's one that's coming up over the next few days, which, even if it's not something that continues to impact natural gas, I suppose a PSA for the listeners out there. If you live in a state from, say, like Texas to Oklahoma, and then just take like a fat marker and draw it all the way across the country to Maine, and if you're east and a little bit north of there, chances are you're going to be hit by snow over the next few days. I looked at my local forecast through February 3rd, Ilya. We're expected to have 29 inches of snow between now and February 3rd. So natural gas here today, 25.7% to the upside. You can't say you're shocked if you're a natural gas trader. We saw this just a few weeks ago. The market does move in these dramatic moves as such. If we really want to be optimistic here, there's a ton of vol, directional neutrality, 65 DTE. Can you do it? Here's the thing. Frank tagged this earlier for me, Ilya. This is not necessarily a sustainable recovery. See this aggressive backwardation here?
Yeah.
390 down to 320 in the next contract. This is not about a fundamental change in supply or demand over the next several weeks and months. This is a reaction.
Back to 390 into October.
Yeah, this is a reaction to, holy cow, we just have this big low pressure system and cold air combining with all this moisture now. And so that probably means blizzard-like conditions, and this is a market that was oversold. But I think that is really the important point. It is the G6 contract here that's seeing this. If you go over into the H6, it's a 19% rally. The further you go out in time, if I were to go out to September, you're looking at a 9.78% rally. So wallop across the curve, this is just exceptionally aggressive backwardation being priced in. It's not necessarily a sign of a market that feels this is anything more than a reaction to what's happening over the next, say, 2 weeks.
Yeah. Yeah. And I mean, as ever, I am not touching this any more than I am sticking my hand in a piranha pool, especially when everything is going the way it's going on the macro and the geopolitical front. If ever there was a time not to play with explosives, this seems to be it.
It does set up the idea that if this thing continues to rally and we get through the next week and a half, probably going to set up a sell the rally situation. And if, one further point to that, well, natural gas has risen to the upside when we have higher demand out of Europe, like in 2022, thanks to their energy crisis and Germany's brilliant decisions to shut down nuclear power plants as they went into an armed conflict with their neighbor to the east. That was their majority energy provider.
Brilliant.
When we run into trade issues with other countries and natural gas is on the chopping block, we tend to get oversupply here in the U.S. in the short term as a consequence because we're not exporting things. That's one of the reasons why, given everything going on with Greenland, if we get to the other side of this weather, we start looking around the corner. What's the bull story? Right? If Greenland's going to happen, Europe is going to stop buying natural gas and start going to threaten to stop trade with us. So we're going to think about oversupply issues. This could be a big fade. I know you're not touching it. You do have resting interest in crude, though, which
I do.
That's really beautiful price action the last few days, given the pullback on the Iran news.
It really is. And this is what we talked about last week, that you don't want to confuse the breakout and the reaction lower after that breakout as being motivated by the same type of thinking, even though it's linked to the same story. Because if the story here is, the U.S. is not going to intervene and that's the pullback, yeah, sure. But that's not what the breakout was about. The breakout was not about spiriting Maduro away from Venezuela. It was not about Iran teetering organically because their own people have risen. It's not because we're capturing tankers with the use of European bases. Hopefully we don't lose those bases. I digress. But it's the combination of all of those things. It's the idea that suddenly you are getting a roadblock in place for the shadow tanker system that supplies Russian, Venezuelan, and otherwise sanctioned crude to China. From Iran, from all of the key players here. And all of these dominoes are falling, and all of that crude is at steep discount because, of course, it's illicit from the perspective of U.S. sanctions. And so, not surprisingly, the question becomes, well, if this is what happens and China can't get cheap crude, they're going to have to, A, buy what they don't get at market prices, which should drive those prices up. And number two, they're going to tap demand that wasn't expected to be there in places like Saudi, Iraq, the Gulf. They're going to go and make claims on output there that they weren't expected to partake of. And so all these expectations for a glut maybe go out the window now. And that's not a story that's about U.S. involvement directly in Iran. And so not surprisingly, after the pullback, we stabilize, we hold the breakout. I'm still long. I plan to stay long. And you're sounding well.
Sorry, got this lingering cough thanks to many kids and the flu in the house. If we got along the curve,
same thing here.
Lovely disease vectors. We have a December expiry that's only up by 0.81% today compared to the front month, which is up 1.35%. So you could see how there is this, well, if trade is going to be disrupted, if the European Union and the US are going to freeze up trade, if only temporarily, if there's concerns over supply lanes and supply chains, right? I mean, the US Navy is what guarantees global trade.
Yeah.
To make sure. So, I mean, who's to say that the US is going to turn around and say, we're not going to protect Maersk container ships now? Those are Danish. It's not our problem.
Yeah. Yeah.
Okay. So crude here. Last week, when we had that breakout and pullback, it was noted that this pullback brought us back to the swing highs that we had at the end of December, right in this 850 area, which neatly coincided with both the 1 month moving average and then the 50-day moving average. There's the market Thursday, Friday, now into today. That's where our lows are formed. And it's a nice retest of the backside of the trend line from the June and the September swing highs. So Ilya, if you're a horizontal guy, if you're a diagonal guy, people can shake hands here and say, this is a hold of a breakout of support, of resistance turn support, whatever we want to call it. We got a nice little Morningstar type of candlestick cluster-ish thing going on here where we have the red bar, the doji, the up bar now. We have positive slopes in each of the 1 week, 1 month, and 50-day moving averages. So oil, even with its 40 IVR, it feels like directionally the path of least resistance is to the upside still, despite last week's turbulence. I know the gut feeling for a lot of folks is going to be, how can we sell the vol and look at the range? Which, if we wanted to consider that, recent lows are near 54. You could say recent highs are up closer to 64. That's kind of lopsided, but if we wanted to operate around there and just go $1 wide on a short iron condor position, let's go like 65, 66, maybe 50% probability of profit, maybe risking one to make two. I like the exposure that I'm in personally right now, which is the short put spreads, the long call spreads. This thing looks like it's going to get going. Maybe Iran didn't happen last week, but as it is worth reminding folks, the USS Abraham Lincoln is still on its way to the Central Theater, right? So it is expected to make to sail into the Iranian war theater within the next 2 sessions. So if there weren't...
This thing's not over. It's not even close to over.
Yeah, there's another thing that may be waiting on the other side of Davos. That's all I'm saying.
Yeah, I mean, when you see the regime crack down the way it has, killing thousands of people, typically the history is you don't stop the uprising, you clarify it and inspire it. And people start to really organize and go from spontaneous to much more committed resistance. We know, obviously, that when this whole thing happened and the U.S. was mulling an incursion, both Saudi and Israel reached out and said, don't do this, because we don't know who the other side is. If you get rid of the Ayatollah today, then who runs Iran? Unclear. Nobody knows. The opposition
reminds me of that Simpsons
united.
bit with the Ayatollah shirt. Works for any Ayatollah.
Yeah. So
we could talk more about this
that's
another
the
time, because
question.
we need to clip the dollar now before we run out of time here, because I'm seeing
yes.
that we have a few minutes left. Hey, best laid plans of mice and men go awry, especially for the dollar here, which was showing really nice technical feedback last week, giving us a bounce through swing resistance levels, getting above its 1 week, 1 month, 50-day moving averages, holding them as support. Friday gave us a doji candle inside day. Today we are greeted with a big gap lower. It's the euro, it's the pound. It's just not the Japanese yen. My goodness, this weak, pathetic currency, Ilya. This is why
they
I said
announced the snap election and roiled their bond market. So that'll do it.
JGB yields soaring at the long end of the curve. This is why I said Japanic before, because if on a day like today, the yen can't get a rally out of it, then what will actually help the yen moving forward? But it's all about the euro. The euro is 57.6% of DXY. The pound is sitting right in at 11.9% of DXY. So between these two, you were looking close to 70% of the broader dollar. The euro here with an enormous turnaround candle, gap open lower. It's a bullish key reversal if there ever was one, just from a pure definitional standpoint, because we did clear the low from Friday and we're set to close above Friday's high. You could see the same thing here in the British pound. You could see it here in the Canadian dollar. Not quite, but it's a bullish piercing candle. Either way, sell America here. If it's back, it's stocks down, it's dollar down, it's bonds off. The metals are going to get the love. Is this a taco moment, Ilya? I mean, that's what I'm thinking about today. We're going to have to cover this more when we get to overtime later on and what to do with our beleaguered US dollar. Maybe the economist can throw us a bone and give us like a cover with a battered Ben Franklin, maybe a black eye, a loose tooth.
So maybe surely it's coming. I'm still long dollars for what it's worth. I don't think it's crossed any points of no return here today. The euro obviously looks closest to it, but I'm still long. We'll see. Obviously, I'm also short stocks, short bonds, and long gold. So you got to have some balance in the portfolio, I guess.
Balance is good on a day like today. All the good things that have been working in equities are suffering, and it is those sins are washed away by what's going on in the metal. So hopefully folks are able to navigate the waters carefully here, which they're waters, Ilya, that we're going to be navigating in about an hour and a half time together when we get back for overtime at 4 Eastern, 3 Central, which is always here on Tasty Live Monday through Thursday, right after last call. So be sure to join us as we break down what is a market breaking down as we go into the final 90 minutes of trade here today. You and I need to clear out, though, because Dr. Jim is up next. Dr. Jim Schultz with From Theory to Practice. You're watching Tasty Live.
Got big trade ideas? Get the big deal at Tasty Trade. Make moves with confidence using smart tools and dynamic charts. And trade what you want, how you want. Earn a 4% cash match when you open and fund a new Tasty Trade account today.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that 1-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Global markets never sleep. Explore them with Forex, now available on Tasty Trade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on Tasty Trade.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
Jim Schultz, and this is From Theory to Practice. Welcome to the show today. Welcome to the broadcast. Man, welcome to the synthetic Monday edition of what it is that we are trying to do. It feels like a Monday, but it is every bit a Tuesday. So welcome to the show. If you are watching over on the Tasty Live Network, I would actually bounce on over to YouTube because you can join the conversation and join the discussion and communicate with our brethren who are also watching the program, man. You can celebrate if you are a market bear. You can commiserate if you are indeed a market bull. But it is, of course, a good good time had by most. And naturally, we know that the most important thing that you need to do today is hop into the chat for no other reason than simply for the love of the algo. So, Josh, bring us into the market. If we still have a market, guys, it is not good out there. It is not good out there at all. Even the S&P is down 144. You've got the risk-free instrument, also known as the NASDAQ futures, not exactly risk-free in today, down 541 on the day. You got the boomers down 885. You got the Russell 2000 futures index down 36. You got bonds down a point. You got notes down. You got oil up 89 cents. You got UB40 is even down. Man, look at the shifties. Man, look at these guys out there. Gold up 168. And then, of course, you've got the Hunt brothers going to be following suit with silver up 578, 577 on the day. That's not even the highs, I don't think. I think wasn't silver over 95 last night? I think they were. We'll look at the charts here in a couple of minutes. Man, we're going to crack everything open. Errol Coleman settings, daily bars, might even look at some monthly charts. Man, we're going to do the whole deal here today. But yeah, the metals are looking good. Everybody's excited. You got volatility up 2 points. Volatility futures up 2 points. And you got the VIX. Spot volatility is going to be up probably similar. Yeah, up about 2 points. So the VIX is now over 20. I mean, this is it, guys. This is what you train for. As a premium seller, come back to me if you're multitasking. This is what you train for. This is why you do all those extra sets of walking lunges. This is why you do all those, press downs, incline curls, supersets. It's for moments like this when the VIX is back over 20 and now it's right pickings. Like now it is for the plentiful, for the bountiful when it comes to selling premium, and you got high credits and high premiums and everything following suit with volatility being on the upswing. And so, so the markets are, it's a little something indeed. But haven't we seen this movie before? Like somebody check me if we haven't seen this movie before. I mean, we've got the tariff talk, we've gotten the threats of tariffs. We've got the threats of taking over other countries. We've got the threats of a real life risk game, which again, I don't understand the strategy. I do not understand the strategy. Everybody knows you start with Australia. You start with Australia, you start stockpiling armies, and then you move on out from there. This doesn't make any sense. We're starting in the middle of Greenland. We're starting in the middle of Africa. This is just bad risk strategy. I mean, come on, man. We need to start with Australia and work our way out from there. But nevertheless, this is where we're at. So maybe that's why the market is down. Maybe that's why the NASDAQ is down 547, because it's like, man, this thing's going to fall apart. This thing is just not going to work. You've got too many borders you have to defend. It's just not a good strategy. And so NASDAQ down 550. You've got ES down 145. You've got some very B-minus analogies. And so all is right in the world. Like all is indeed right in the world. So, okay, what I want to do, though, I see you guys in the chat, man. Look at you guys. Man, look at you guys. Rodrigo is here. Ranch is here. Sam Hell's in the house. Emmett Morrison. iPod Touch is in the house. Guys, iPod Touch is here. iPod Touch is here. Now, he didn't call this one, right? iPod Touch is usually his wheelhouse. iPod Touch is good for that 30 to 45 point NASDAQ drop. Like you get, like a 37 point drop, iPod Touch has got you back. But you get the big one, you get the big kahuna like today. Nah, man, iPod Touch's been quiet. Been super quiet the last couple of days, but he's here today to take his victory lap as he rightfully should. And so I'm going to get to as many of you guys as I can here in a few minutes here in the YouTube chat. What I want to do though first, let's go ahead and let's take a look at a few things happening in the portfolio, and then if I'm not mistaken, today is Netflix earnings. If I'm not mistaken, today is indeed NFLX. Is that right? I'm pretty sure that's right. Netflix is today after the bell. Yeah, Netflix, if you look at the overview, you can see that the earnings are January 20th after the bell. That is today, January 20th. You got Netflix is unchanged on the day, which that makes a lot of sense as it's kind of waiting. It's very much a wait and see for the binary event. Oftentimes when stocks have earnings coming up, that night or the following morning, whatever, kind of regardless of the market movement for that day, the stock will oftentimes be kind of immunized from that move as, the market is just waiting to see what those individual company results are going to be, whether they're good, whether they're bad, whether they're indifferent, looking at guidance, looking at, tie colors of the CEO, kind of taking that Jerome Powell type of stance and strategy. We've got to know all of that information before we know which way we want to take the stock, of course. And so Netflix being unchanged on a day like today, not super surprising, where everything else is basically going to be down a ton, other than Starbucks, of course. Man, look at Starbucks. Man, look at this flight to quality. It's a beautiful thing, Starbucks, right? Because again, when all is falling apart around you, like, what do? You go get yourself some B- coffee. Like, what do? You go get yourself some moldy coffee and pay $8-9 a cup for it. And so Starbucks up 54 cents. That makes a lot of sense. And so, all right, so we're gonna do Netflix. That's gonna be here in a couple of minutes. But before we get to Netflix, let's comb the streets really quick, survey the landscape that is the portfolio, and then we'll kind of go from there. So number one, let's go ahead and address the elephant in the room. Let's address the silver elephant in the room, if you see what I've done there. SLV. So we have on a straddle in SLV. It was a strangle. It is now a straddle. You've got silver up another $4.54. I think I called for silver to finish the year at like 88, but that was at the end of December or the very beginning of January. We still have 11 and a half months left. I'm going to need this thing to slow down just a little bit because it's not going to finish at 88. It's going to finish at 188 or 288. And so, of course, I'll take a partial victory lap if that happens. But yeah, I'm going to need this thing to slow down just a wee little bit. And so clearly you can see that our strangle, now straddle, it's seen better days. Our total trade price here is $5 and some change, but you've got, the mark price. It's a little bit more than $5, let's say. And we could round it down or round it up, but it's not doing super well right now. So the question becomes, what are we going to do? To be honest with you, going inverted is fine. Going inverted is a fine strategy. It's often the final stop on the train tracks when it comes to adjusting, strangle, tighter strangle, straddle. Then you go inverted and you kind of just, wave the white flag, and then that's going to be that. For this specific strategy, I think I want to stay in the straddle for now. And let's stay. we're pretty bearish silver now. We're going to need silver to obviously cool off and come down a little bit. And so, we're definitely directional in silver and SLV. But I'm like, let's hang tight on this. Going inverted, over the years, I've done it. I've not done it. I've kind of tested both sides of the fence. There's nothing wrong with it, of course. I think it's totally fine. But you really are giving up quite a bit when you do go inverted. In fact, I'll even show you guys. Like right here, right now. Like if I go to, you've got SLV at 85 and some change, right? So if I go into the trade page, rather than you guys just hearing my kind of subjective opinion about this, let's look at some actual numbers. If I go to the February cycle with 31 days to go, so I have, that's Starbucks. I was like, wait, I have 100 shares of SLV? I'm like, that would be amazing, but I don't. Let's go to SLV. If I go to SLV, let's see here. If I do, so I go to, I've got 31 day cycle. If I go to the 64 put, so you can see that the 64 and a half put is only selling for about 60 or 62 cents, right? And so clearly there's not a ton of premium left in this specific put. So what I could do if I wanted to is I could buy this put back and then roll this guy up to like the 85 strike, right? Basically, or roll up to the 85 and a half strike. Oftentimes when you go inverted, the clearest reference point is just rolling to the at the money strike. If I roll to the at the money strike, then that is going to allow me to maximize the extrinsic value that I collect on that roll as I go inverted. Because remember, at the money strikes carry the most extrinsic value. So I know that an at the money strike is going to give me the most premium collection that I could possibly muster on that inverted strangle. Now, of course, there's gotchas that come alongside that gimme. As we all know, there's always a gotcha that comes alongside each gimme. But right here, if I want to maximize my extrinsic value and essentially, effectively neutralize my directional bias, I'll still be a little bit bearish, but I'll be a lot less bearish than I am right now. I would collect $6.83 if I do this. Now, if I bring up the change here really quick, I've collected, 5 something? Yeah, 548. Right? So if I did this, if I went inverted and collected another 680, I would tack that on top of the 548. So that would be a total of what, 12.20, 12.30. So I would have $12.20 or $12.30 collected on what would end up being a $21 inverted strangle. And so a $21 inverted strangle, I've collected $12 to $13 on. Remember, when you go inverted, if the stars align properly and you kind of get the best case scenario, you want your credits collected to exceed the width of the inversion. right? Because that essentially, that difference shows you what is my maximum profit potential on the strategy. Like, what is the best case scenario for me on this strategy? If I've got a $10 wide inverted strangle, but I've collected $13 on it, then that difference is going to show me, okay, this is the most I could possibly make. $13 of credits minus a $10 wide inverted strangle. So a $3 maximum profit potential. Now, of course, to get those $3, I've got to carry it all the way to expiration. It has to expire. It has to stay within the strikes. Like, it's no small feat to get there, but that is my best case scenario. Okay, what happens if the opposite is true, which is what we have here with SLV? What happens if the width of the inversion actually exceeds my credit collected? So what happens if it's the opposite, to where I haven't collected enough to even cover the width of the inverted strangle? Well, then that difference between those two numbers, the credits collected and the width of the inversion, that is now going to show you your guaranteed loss. At least this is your minimum loss for that cycle. It could be worse if SLV doesn't cooperate, it doesn't stay between the strikes. It can certainly be worse than this, but this becomes your best case scenario. So for me, if I collect $12.30 on a $21 inverted strangle, my best case scenario is only losing $7.50. Now, I mean, let's be fair about this. Right now, I'm losing about $16 on the strategy. So only losing $7 actually looks pretty decent if that is indeed what it comes to. And so this is the, the largest or biggest, which is essentially the same thing. This is the best redemptive quality when it comes to an inverted strangle. You are able to, minimize the losses, quite effectively, by rolling that untested side up to where the stock is. Okay. What are you giving up in exchange for that? Well, you're essentially giving up any possible chance at bringing this thing back to an even smaller loss or a scratch or, heaven forbid, a winner. Okay. So how do you decide what to do? Well, a lot of it, kind of traces back to what are your personal feelings? What is your personal bias on the underlying instrument? Also, what is your size in the position? Like if you're really, really, really small, which I would argue I am here with this SLV position. I mean, this is only a one lot in SLV, and this is an account with $35,000 in it, these days after a decent year last year. And so it's like, well, a one lot in SLV is not too crazy. This is not something that's going to be super oversized. And now all of a sudden we're emotionally charged up. We're not able to trade the position objectively. We have to do things maybe before we wanted to do them. I don't think we're in that scenario at all. And so when you have your size in check and you are really small, it does, you have essentially afforded yourself the luxury to kind of, decide how you want to play a given situation. I don't know that there's necessarily going to be, an optimal choice here, choosing between going inverted versus staying in the straddle. And so for me right here, I want to stay a little bit bearish silver. And I know this is famous last words. I got it. I know it's going to 100. I know it's going to 125. I know, SI is going to gap up to 137 tomorrow morning. I mean, Peter Schiff has assured us. Robert Kiyosaki has assured us that these things are going to happen. I got it. I just want to see it with my own two eyes. But I did want to show you guys what would essentially happen if you do go inverted. You would be essentially locking in a loss for that cycle. But again, truth be told, it's a much smaller loss than what we have now. So if SLV did cooperate and stay between the strikes, then I would be in a better situation than I am now. But I kind of like, if SLV drops $5, $6, $7 in the next couple of days, then the straddle's going to be in a decent spot too. And so for us right now, I'm going to sit tight. I'm not going to do anything with SLV. And then, give you guys a reason to watch the show, tomorrow, the next day, the day after that, and so on and so forth. Because when SLV is, 91, 96, you guys got to kind of see what happened. So, all right, let's go to, so that's SLV. The other trades, honestly, I mean, we could take some victory laps in SPUX, of course. We could lament our GLD position. Man, I'm really glad we went defined risk on the GLD position. That was clearly a good move with GLD up $16 today. That is some crazy stuff. Gold up 173. GDXJ, we did sell a put in GDXJ, so that's working out quite well. I'm going to sit tight. Let's see if we can't get to 50% of max profit on that guy. Because at this point, we need every penny from all these winners that we can possibly muster to pay for SLVs, GLDs, and so on and so forth. But GDX, GDX and MCL, I mean, these guys are they're hanging on for dear life inside of the strangle from the standpoint of you've got MCL. The short call strike is 61. I've got the stock at 60. I'm going to sit tight. Let me let it cook. Let's let it simmer on the back burner, and let's see if we can't get a little bit of this theta to just come off the position, kind of day by day. Similar situation with GDX. You've got, a 103 short call strike. The stock is at 102. It is just barely inside that short call strike. Again, I normally like to sit tight. I don't normally like to adjust too aggressively when the stock is still inside of my strikes. Oh, excuse me. I want to let it work. I want to let the strategy do the heavy lifting. I don't want to necessarily do the heavy lifting for the strategy. That's its job. That's not my job. And so the theta here is $10 a day. So that's a pretty good combo pack, if I don't say so myself. That's a pretty decent looking little value meal. You've got kind of the double Whopper, maybe a Whopper Junior, and then you've got, kind of a medium, maybe a large fry right there. That's looking pretty good. $15 of theta between MCL and GDX. That's looking pretty good, looking pretty strong. And so, all right, let's stay with MCL. We're going to stay with GDX. Now let's go to Netflix. Okay, so here's what we're going to do with Netflix. So I talked with my assistant. I talked with my intern. For those of you that are brand new to the show, I do have a trading assistant. I do have an intern. She does all of my trade analysis for me, at least all the losers. I think I'm the only one on the network that has a trading assistant and has an intern. Her name is Amelia. She was also my 5, soon to be 6-year-old daughter. And she has very, very, very clearly told me that we're going to do some Netflix. And she wants to play Netflix to the downside. I couldn't believe it. I think she's watching Netflix right now. She's not feeling well today. And so obviously, as is the case, was this the case for you guys? Maybe this is a generational thing. I don't know. I'm 44. I'll be 45 in a few months. But I remember, when we were sick, when I was sick as a little guy, I was able to, Josh is buying calls at a boy. That's my man right there. That's my man right there. See, he's serious about making money. It's all fun, it's all games, it's all this, that, and the other thing. But again, if you're serious about making money, you need to be on the other side of all of my trades. But anyway, when I was a little guy and I wasn't feeling well and I stayed home from school or whatever, it was basically just an unwritten rule, right? I got to watch TV, I got to play video games, I got to do whatever. And so it's kind of a similar deal that we've carried forward into our family. I'm curious to know if that is indeed how you guys deal with it with your children out there. If you have children, small children, whatever, when they stay home and they're not feeling well, what do you let them do? Do they have to I don't know, read books and stuff? That's brutal. That'd be doubly brutal. But then of course, what's interesting about that, if I could stay on this tangent for an extra 6 or 7 minutes, there's an interesting little game theory situation happening there because the kids figure it out, obviously, right? And so the kids figure it out, especially when Penelope's 11, she's very clear of the concept. Eli's 8, he'll be 9 in a couple of months. He's very clear of the concept. And even Amelia at 5, almost 6, she knows what she's doing. She understands. It's a little bit of cat and mouse. It's a little bit of, a boy cried wolf type of situation where it's not feeling so well. And so maybe I can just watch Mary Poppins all day long. But anyway, I digress. We go to Netflix. I think we're doing it to the downside. Can't believe it, actually. I don't even know if are we allowed to do that? I don't know that we are, but this is Amelia's trade, by the way. So what we're going to do, so it's a Tuesday, feels like a Monday, but I think we're going to keep this kind of buttoned up. Let's keep this kind of straight-laced. I don't think I want to do a butterfly. I think I just want to go with a purely directional play that's very simple, very straightforward. Let's just go with an at-the-money long put spread. Let's just go with, whenever you want to take a directional shot for an earnings play, there's obviously a number of ways that you can do that. You can do butterflies. We do that all the time. Do the expect to move butterflies. Take your directional shot. It's a cheap way to, play, the upside, the downside, whatever you want to do in that stock. But another way that isn't quite as cheap, but it's a lot cleaner, is you can just buy an at-the-money vertical spread. So you buy a couple strikes in the money, you sell a couple strikes out of the money, and that becomes essentially your directional play for that earnings event. And again, if you want to buy, if you want to play to the upside, you do a long call vertical. So you buy a call, a couple strikes in the money, you sell a call, a couple strikes out of the money, straddling the at-the-money price, and that gives you a bullish play for earnings. If you want to play it to the downside, you do the same thing just on the put side. You buy a put, a couple strikes in the money, you sell a put, a couple strikes out of the money, and that gives you a bearish play for the earnings call. So I think that's what we're going to do tonight. Let's play for Netflix to go lower. So what I think we're going to do, she's even got the strikes picked out for me. She wants to do a 91, 85 long put spread. And this is basically straddling the at the money price. Netflix is just a hair under 88 right now. And so 91.85, we're going to pay 320, 325 for it. So we're basically in a risk one to make one scenario. The probability of profit is 51%. That's essentially what you would expect. You expect it to be a coin flip. You expect this to be a risk one to make one type of scenario. And so it should have approximately a 50-50 proposition. And so 91.85 for Netflix. I think I might, let me just see here. What if I did a 90.84? Just to move it down, just to maybe take the cost down just a little. Oh, that's perfect. Oh, that's perfect. Yeah, we're going to change it just ever so slightly. So we're not perfectly straddling the price anymore, but we were able to take off about 25 cents off the cost of the strategy. So now I'm at a 90.84. The pop is still about 50%. Now it's only 48, but it's like 48.51. If it's good enough for government work, it's good enough for me. But here now we're risking one to make one. So this is a little bit of a better situation from a risk standpoint, because from time to time, we happen to get earnings trades wrong. Like from time to time, we miss the mark. I mean, it only happens about 4 out of the 5 shows in a given week. And so we need to be somewhat mindful of the fact that this could be another one of those days. And so 90.84. Yeah, I like it. We'll pay $2.98 for it. And boom, there you go. Got filled at $2.97. We got improved. We got a little bit of a discount there on the debit pay. So okay, so we did Netflix to the downside. We lamented our SLV position. We showcased the do nothing strategy, which again is our default setting for a reason. And now what I want to do, let's go ahead and do man, let's get to you guys. Where are you guys at? I see you guys in the chat. Man, look at you guys in the chat. This is some good stuff. I'm gonna surprise and delight some people near the end. Man, I see some new people. I see Mike Evans in the house. Man, Mike Evans enjoying your off season. Mike Evans in the house enjoying your off season, probably in Cancun, probably somewhere super fun. And so thank you there, Mike Evans, for being here and being a part of the show. You know, we appreciate all that you do for the Tampa Bay Buccaneers and their organization. And so thank you so much for being here, my friend. Mike says, we let them watch TV and play video games. Rarely did they feel like playing video games if they were homesick. See that, again, that's the deal, right? Again, with the game theory, it goes a couple of levels deep because it's kind of like, hey, are you really sick? If you were so sick, you should be asleep. If you were so sick, you should be blah, 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 blah. But I was like, I don't know, man. Like, you know, I don't know. You're right, though. I can't necessarily disagree with that. And so, but let's see. Morgan's in the house. I see Morgan Stewart McRae in the house. I appreciate you there, Morgan Stewart. And so thank you, my friend. Let's see. Where are we at? I see, we got some new people here. Yeah, I see, man, I see. Well, Catterday Night's here. Catterday Night's not new. iPod Touch in the house. Man, it's so funny. And so let's go back to the beginning. Where are we at? So Sam L's in the house. What's going on there, Sam L? Doc, no alert from iPod Touch before we ran straight into Greenland. I know. He's here, though. You guys should talk to him. He's here. He is in the house, which he should be. You know, NASDAQ down 516. That's a big day for iPod Touch. Turns out a risk-free asset can drop way below zero. I don't know that it's an oil 2021 type of thing. But yeah, the risk-free asset, not exactly risk-free in here today. And so maybe it's a very high-risk asset at the end of the day. And so Paul Heyman in the house. What's going on there, Paul Heyman? I was wondering whether you are still long Chicago Merck Exchange position limits of 6,000 gold futures contracts in your private trading account. If only it were that simple, Paul. If only it were that simple. If only we weren't short the metals in our stealth trading accounts. If only it were that simple, right? Man, that would be pretty sweet to be long position limit. Any metal, you can take your pick. Like it's dealer's choice, man. You can be long gold. You could be long silver. You could be long copper. You could be long platinum. You could be long palladium. You could be long whatever you want to be long. And man, you'd be doing really, really well for yourself. Old Two-Face in the house. Dr. J, big ups to your Rams. I know, man. Been telling you all about the Rams for a very, very long time now. For the algo, what are we doing to Netflix? Yeah, man, we're playing to the downside. And there you go. Yeah, the Netflix. I saw somebody else make a comment about the Netflix Time Warner deal. I got a buddy of mine that works for a buddy of mine here in St. Pete that works for Discovery. He works for the Discovery Channel. He works like in their finance department. And so he's a finance guy too, but he's on like the corporate finance side of things. So it's always so funny. Like whenever I actually saw him just yesterday, but whenever we hang out, we have kids around the same age and stuff. And so it's so fun to hang out with him. He's a great guy. A couple years younger than me, and great guy. But it's always so cool. It's always so fun for me because, like, you know, in the world of finance, there's essentially two paths that you can follow through the forest. For those of you that have been to, you know, like formal finance education, like at the college level or, you know, graduate school level or whatever, you're typically going the investment route, which is the route that I went, of course, or you're going the corporate finance route. So now you're doing like net present values and IRRs and like things like that, right? And so he went the corporate finance, like project valuation route, and I went the investment route. And so it's always so funny, like when we happen to hang out, like he'll tell me things about his world and I'll tell him things about my world, and the Venn diagrams, like, they don't overlap at all. It's pretty amazing, actually. Like, I'll talk about certain things and he'll talk about certain things, and I'm like, yeah, I have no idea what that is. I remember learning about it 27 years ago, but I haven't used that, you know, not a lick in the last, 17 years of my life. And then, like, I'll start talking about the market and he'll be like, yeah, I have no idea what's going on. I'm like, how can you not know? Like, it's so obvious, it's all out there. But it's really interesting, man. In the world of finance, you have these two different tracks that are very, very different. But let's see. Orgdenu's in the house. What's going on there, Orgdenu? Orgdenu, I owe you an email. I know that I do. Hello, Dr. Jim. Hope you had a great long weekend, starting the week with the gotchas. Yes, we are. Apparently so. The market's kind of getting some of the gotchas out of the way. But don't worry, guys. It's Taco Wednesday or Taco Thursday, or Taco Friday. I'm not sure that we can have a Taco Friday. I think it has to be Wednesday or Thursday. But don't worry. It's not. It's only going to be a day or so. And then we're just going to, rippity rip right back to all-time highs. And so, Sam L., Doc, when the Hump Brothers won't stop, Doc, the Hump Brothers won't stop until SIL hits 100. What are we doing with the SIL position? Convert it into pizza. Yeah, there should be some kind of converter there. There should be some kind of like exchange rate deal. Like you've got euro to USD, you've got Australian dollar to US dollar, and then you've got SIL to, Hump Brothers, slices. Like, I'm going to need some kind of conversion there. I would imagine pretty soon they'll be able to shut down the pizza shops. Like, at this point, they've got to be pretty close, I would think. I mean, we are at, like, if we look at a chart of SIL, I meant to do this, actually, to start the show. Yeah, silver up $6, almost $6. It was up to 95, though, right? I think it was. Yeah, 95.77. Man, look at that, 95.77. So here we go. Hold on. There we go, 95.77. Yeah, so this thing was way up there, man, like way up there. Was that last night? I think that was overnight, right? Was it on the futures open last night? That might be right. But let's check. Let's not take my word for it. That's a dangerous place to be. No, it was actually this morning. Wow. So it was this morning. It was wait, hold on. Yeah, there it is. It was early this morning at 7:02. 95.77 was your high on silver. And then since then, it has just been, kind of the ultimate search for equilibrium as the market tries to figure out where it wants to go. And so, yeah, man, gold, I mean, 5,000, it's got to be a foregone conclusion now, right? I mean, if I go to GC, let me pull up, I'm actually just going to pull up the 7-day contract. If I look at a 7-day contract for gold, what is the delta? Now, I haven't looked at this, so I don't know. What is going to be the delta on the 5,000 calls for 7 days? This is only a week. So you figure in a week, we'll probably have Greenland. We might have Belgium. We'll probably be making our way into like Poland, I would say. And then just the next 7 days, right? And then after that, I'm not exactly sure. 7 days, I'm going to say 18 delta, 19 delta on the 5,000 calls, right? So if that's true, we're going to see what the number is ourselves here in a second. But if that's true, then that means that's like a 35, 38% chance of a touch. That's like 1 out of every 3, 2 out of every 5. I mean, man, that's really something. All right, so let's look at 5,000 call, 7 days away. Okay, so I was a little bit off. Not that off, but a little bit off. It's only an 8 delta. So I was 1x off, I guess. And so 8 delta, so that means the probability of a touch is 16%. And so that's 1 out of every 6. It's not so likely, but man, it still is pretty wild that it is an 8. This is only 7 days, guys. This is only a 7-day contract. And then, of course, like if you look at, this is the beautiful thing about like the metals, the equity markets are similar. They're oftentimes in contango. And so by being in contango, man, we don't even need to earn the 5,000. We can just roll into the 5,000. Like if we just sit tight, we just keep rolling forward, the price just naturally lifts up because of the contango on the futures curve. It's like we'll get our 5,000 one way or another. Like we may earn it, we may not. We may just roll into it with the contango in the futures market. Like if I go into, what is it, GCG, and then the next cycle is J, I'm assuming it's contango. Maybe it's in backwardation now, but I'm assuming it's not. Oh yeah, look at this, guys. Look at this. Hold on. I got to figure this out. What is the next cycle after J? Wait a minute. We may already be at 5,000, guys. If we just look at the right contract, we may already be at 5,000. So hold on. I'm curious now. So we're going to spend a couple extra seconds on this. I do want to get to you guys, but I'm going to look at least a couple of these. So G, right? So G, this is the front month. This is what we're all trading right now. This guy is for the next 7 days or whatever. That's at 47.64. Okay, no problem. J, right? 47.99. I just got you another 35 points. You didn't even have to work for it. You didn't even need to trade it. Boom, there you go. 35 points higher. So 4,800 on the J contract. What's the M contract? So M, I think, is June, right? So let me go to GCM, see if they'll show it to me. They may not even show it to me because it's so far into the future, but they may. Wow, look at that. There's another 35 points. Guys, we're gonna get it today. You don't need to wait for this. You don't need to wait for like your volume profiles and your pools of liquidity. No. We're going to get this today. M is 40. This is how the futures curve works, by the way. M is 48.34. Let's go all the way to Z. Hold on. I'm going to go all the way to December 2026. This has got to be at 5,000. GCZ6. Oh, they're not even going to give it to me. Oh, I can't trade it yet. They got us. What is September again? Hold on, GC September is is it T? No, it's not T. I don't know what September is. That's okay. Oh, thank you, Josh. Good looking out. What is September? They don't have gold September either. All right, so we gotta wait for our 5,000. Thank you, Josh. That was clutch. And so Josh been on the network now, been part of the network now for like 7 or 8 years. That's the first time he's ever been clutch. So nice job, my friend. Very, very nice job. All right, let's go back to you guys though. Let's see here. But I appreciate you there, Sam L. But yeah, 5,000 front month, back month, whatever. It's coming. It's coming soon. You can't stop it. And by that, I mean, I probably don't think we're going to get there. So Saturday night, what's going on there, Saturday night? I appreciate you, my friend. Wolf is in the house. Dr. Jim, we are almost to your yearly SLV target of 88. That's right, with 348 days to go. Is it time to sell some call spreads? I don't know, man. Again, I mean, the internet has assured me that it's going to 100, right? Follow Robert Kiyosaki. Right? Rich dad, poor dad guy. Like he's telling me it's going to be 200. 200 by Memorial Day. Like 175 by my birthday. That's May 19th. Right? And so it's like, I don't know, man. Like, I mean, I don't know. You know, you got to buy them high and sell them higher, man. Don't overthink this, right? Don't overthink this. If you can't beat them, join them. Which, of course, that essentially means it's going way, way lower. So iPod Touch in the house. What's going on there, iPod Touch? Man, I appreciate you, my friend, as I always do. Weiss in the house. Hello, Dr. Jim. Happy Taco Tuesday. He's not doing it, though. He's not doing it yet. Like, did he already do it? There's no way. I mean, the market is staying down. There's no way that it's been Taco Tuesday. And so, again, it could be a Taco Wednesday, could be a surprise Taco Thursday. Taco Friday is not allowed. And so tomorrow and the next day are the only two shots we got. And so that's just the way it is. Rex Kramer in the house. What's going on there, Rex Kramer? Appreciate you, my friend. Emmett Morrison here for class. Dr. Jim here for the lessons on why you love the Rams and the Hoosiers. Man, my Hoosiers looked good last night. Man, they looked good last night. But telling you guys about Methuselah, whatever his name is, but telling you guys about him for many, many, many years now. And yeah, they look really good last night. I mean, I didn't see a single play, but I did hear that they won. And so congratulations to the Indiana Hoosiers. And so it's only now a couple of years that it'll come out that they were cheating all along and they were getting plays and getting this and getting that. It wouldn't surprise me. It wouldn't surprise me at all. I'm no conspiracy theorist, but I'm like, I don't know, man. Something about this just seems a little bit off. But anyway, I digress. So Sam L, posting this for the algo. Appreciate you, my friend. Not the doc, but somehow the doc will still see it. I did. I made it just right before the show. It's going to be over here in about 5-6 minutes. And so thank you, my friend. Brian Dowdy. Hello, Dr. J. Can you help me understand more about how the size of one ZN contract correlated to how many shares of TLT? I want to go small at first with bonds as I don't know where it's going. Yes. Okay. So I don't trade ZN that often. And so I'm not going to be the one to ask about, the conversion from ZN to TLT. And so Chris or Ilya will probably be a better resource for you there from a future standpoint, because I'm trading the big dogs. I'm trading, obviously, MNQs and MESs and some MCLs and and things like that. Russell 2000 from time to time. And then obviously like GC and SI and SIL and things like that. But I don't trade notes. I haven't traded notes in a very, very long time. And so I'm not as well versed on the conversion from notes to bonds. But if you want to get really small, I mean, TLT is going to be a good, my internet connection is unstable. Okay. TLT is going to be a good option for you, I think. I mean, you can essentially get as small as you want. It's only $86 product. And so that's not too bad when it comes to sizing. And so if you want to get really small in here, you could do something define risk. That would obviously shrink your size pretty reliably. And then, with it only being $86 product, I mean, you could go in here. If I wanted to do something let's say I wanted to do something in March. So I want to do something in March. And, if I go in here, if I were to sell, man, the premium in here is really not that great because the IV rank is only 21.9. If I go in here and I sell, if I sell like an 85 put, the buying power is not too bad. I mean, the premium is not that great just from the standpoint of, the IV rank. 21.9 is really not that bad, though. I actually thought the IV rank would be lower based on these premiums. But with an 85 put, I'm at a 107 or $109, a $1.09 credit or a $1.07 credit, and the buying power is $1,500. I mean, position sizing wise, I mean, if you've got $20,000 or more, you can fit that in. Okay. I probably wouldn't do this trade specifically. And you were just talking about trying to get small, some type of bond exposure. And I'm just giving you one example here in TLT. I wish I had more to share with you on notes, but again, that's not really up my wheelhouse. And so I would just be kind of searching through the dark, much like you yourself feel like you're doing right now. And so I don't know how much help I would be there, but I'll reach out to Chris or reach out to Ilya. They might be able to help you on that. But when it comes to, TLT right now, from a premium efficiency standpoint, this honestly doesn't look that great. Just because I'm only collecting $1, I'm only collecting $100 and putting up $1,500 in capital. That's not necessarily the best relationship. I typically want to collect, 10%, I would say, or more. 10% is kind of like I wouldn't say it's the bottom. Like I won't ever consider anything below that, but it's a good reference point for trying to understand, what kind of premium efficiency am I able to, muster on this position. And so you didn't ask about this specifically, but it might still give you a little bit of value since I'm not really able to give you too much on the notes front. Looking at premium efficiency can be a good way to kind of understand, like, all right, when it comes to, the risk I'm taking on, the buying power that I'm setting aside, the capital I'm using, right? How much bang for the buck am I able to muster and generate on this position? Premium efficiency can be one way to kind of look at that. And so I would probably pass on this though, just because it is pretty low. And yeah, but TLT would allow you to get fairly small in bonds, even if you're not comfortable doing notes yet. But reach out to Chris. I think Chris can probably give you some more insight on that. But let's see. Oh, Ranch in the house. I see you, my friend. I appreciate you. Rodrigo in the house. Hey, Dr. Jim, what's going on there, Rodrigo? I appreciate you. Sam L, the algo knows I watched this twice. Doc, explain yourself. That's what I'm saying. I appreciate that very, very much. So thank you for that extra watch time there on the show. And Mount Go Rail, we appreciate you. You appreciate us. Let's go Algo. That's right. Man, does Algo have a ticker yet? It's got to, man. In the day and age that we live in. Oh my gosh, look at this, guys. Look at this. It's right there. It's right for the pickings. Algo is right now untaken. Algo is completely open. It is free for the taking right now. ALGO. I'm shocked, absolutely flabbergasted that ticker is not taken right now. In this AI world that we live in, man, that seems like some low-hanging fruit if I've ever seen some. And so let's see, James Bond, number 4 in the house. James Bond, how low can we go, Dr. Jim, on the S&P futures? Yes, look at the S&P futures, down 145. And, tomorrow, I mean, we'll see how Netflix goes and such. But, man, we've got IV ranks coming, MES is 27.8 now. You've got MNQ, 32. So, I mean, we'll probably be selling some premium tomorrow in the futures options. Give us some S&P 500 exposure. Give us some NASDAQ exposure. Give us a little bit of something to work with in the major indexes because volatility is up today. If I had more time right now, I'd probably do at least one of these. But we're almost out of time and I don't want to rush it. And so let's just wait. I mean, tomorrow's content, it's not going to create itself, right? And so MES and MNQ, we'll look at those guys tomorrow. But let's see. I see Tafatozi in the house. Let's see. James Bond says, good call on the Rams, by the way. Well, I mean, they won, right? But I still lost $20 to Mr. Thomas Osnoff, and so that's not good. We'll have to go double or nothing on something else. But let's see, iPod Touch. It's different this time, is it? iPod Touch. Oh man, I love it. I love you, man. I absolutely love you. So I hope you're back tomorrow when we're up 750. Like when the Nasdaq's up 750 tomorrow on the Taco Wednesday. You better show yourself in the stream because we're all gonna be looking for you. Stephen Bivens in the house. Joe YQ in the house. Man, Mr. Pillow's in the house. I appreciate all you guys so much. Mr. Pillows, the risk-free instrument isn't so risk-free today. No, it is not. No, it absolutely is not. And Rand says Netflix revamped its Warner Brothers bid according to New York Times. I'm in the flicks. I couldn't resist. Yeah. And like I said, my boy works for Discovery, which is underneath Warner. And so like we were talking about that yesterday, and he was like, yeah, I mean, he was just talking about the board, and I'm not even sure I'm allowed to tell you guys this stuff. So I don't want to get him in trouble. But it looks like the Netflix deal is probably going to go through, but I think Peacock still might be in the mix. That's all I'm allowed to say, I think. I'm pretty sure I can tell you guys all of it, but anyway. Oh, man, we're out of time? Yeah, we're just about out of time, man. I see you guys, though. Andrew Cortado's in the house, man. Look at Tomas. Man, look at you. Adam Armfield's in the house. Beckett's in the house, man. I appreciate you guys. I appreciate you guys so much. If I can ever help you guys in any way, shape, or form, please shoot me an email. I'm jschultz@tastylive.com, or we can connect on Twitter. I'm at jschultzf3. I would love to hear from you guys on there as well. But stay tuned. We do have Tim Knight coming up next with Trading the Charts. In the meantime, guys, trade them small, trade them heavy, and stay generous. We'll see you guys tomorrow.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Got big goals for 2026? Get the big deal. Earn a 4% cash match on all qualifying deposits, up to $10,000 total. Plus, unlock 30 days of commission-free trading. Trade with confidence using active trader mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. Earn a 4% cash match when you open and fund a new Tasty Trade account today. Got big trade ideas? Get the big deal at Tasty Trade. Make moves with confidence using smart tools and dynamic charts. And trade what you want, how you want. Earn a 4% cash match when you open and fund a new Tasty Trade account today.
I'm feeling fly tonight, like a rocket ship. I wanna drive fast in this red hot whip. We gonna stand our ground and show off all our moves. Get out the glitter ball and play some dope grooves. I wanna play the game, I wanna roll the dice. I got an easy hand that's gonna make the night. You wanna dance off? Let's get our shoes on. I'm done with all your fussing, this body totally bussin'.
Hey everybody, Tim Knight here. Hope you had a good long weekend. It was an extra long weekend because we were all waiting for the markets to open to see how they would interpret this latest science fiction fantasy world living in. And for those of you who follow me on Slope, you might have observed exactly a week ago. It was actually last Monday. I wrote a post called Advantage Bulls. And it was one of those I've done 50,000 posts approximately over the years, so I write a lot. But this is one of those rare posts where I basically said, it's hopeless. It's just, the market goes up every day. The government is corrupt and fully behind this. It's never going to go down more than a few hours. All is lost. And for those of you who read me a while, that is your signal to short everything that has a ticker next to it. Because when even I just throw my arms up and say that this is, it's just going to go up forever, that's when you go completely short. Okay, there's your tip. So in spite of my despair, it's not like I went flat or anything, but I was awfully light. But over the course of last week, I kept tiptoeing in and tiptoeing in and tiptoeing in. And I think when I last saw you on Friday, I said something along the lines of, this is the first day I've really enjoyed, this first day of the year that I've really kind of felt in sync with things. And I also pointed out that we had started to do a little damage finally to those intermediate term trend lines on Wednesday. The market recovered in its cute little way on Thursday, as it always does. Then Friday did a little more damage to those trend lines. And I expressed the sentiment that I hope it means something, that this damage is a signal that something subtle is changing. And it has changed. Now one day does not a trend make. I've done this long enough to know this is not the time to declare victory. Give me, if we're 18 months into a bear market, okay, we're going to do some victory laps. No, one day, no. But it's blood red and it's a step in the right direction. The one victory lap I will do, and it's more of a victory lap for technical analysis and not me, is those ratio charts I shared with you ad nauseum starting like 18 months ago. Now, I don't show them anymore because I've been asked to use a different platform than my own. But on my own platform, I showed you that, to a man, that precious metals divided by equities was looking extremely bullish. And equities divided by precious metals was looking extraordinarily bearish. And those are just reciprocals. But all it really suggests is, and it's the mantra I keep talking about, precious metals are going to do great, equities are going to do terrible. The first part of that equation has worked out spectacularly. And the ratio charts telegraphed that way in advance, way before people were talking about it. So when silver was in the 20s, I was yammering on about how great silver is. Now that it's approaching 100, now everybody's talking about it. You get your Robert Kiyosaki's of the world yammering on about silver. But my ratio charts talked about it when silver was in the 20s and gold was like 1600. And as I say, the numerator, if you will, the precious metals have absolutely followed that right in line. The equities, they got some catching up to do. They're starting to weaken a little bit here and there, and I'm completely short. And I mercifully came into the day about 150% committed on the short side. So that's worked out. But, equities absolutely have not had any kind of thing resembling a bear market since 2008. So the kind of move I'm talking about is like tens of thousands of points off the Dow, that kind of thing. Not like 1% down in a particular day, sometime during the year. In any case, the ratio charts were prescient to the nth degree. And the little bit of trendline failure we saw last week was a good minor subtle signal that something's in the air here. Now, we're all at risk. Any bears out there of taco time? Trump always chickens out. We've been tacoed left, right, and sideways. It's like Taco Tuesday. So we'll see if that happens. It could very well happen. But as always, I just try to go chart by chart by chart, tighten the stop, be logical, be rational. Try to use cold numbers to defeat histrionic emotions, some of which I actually manage to do, sometimes I don't. So that's kind of my preface to this move. And so we're having a nice move today. Again, the old bullish precious are working great because we're at lifetime highs on gold, lifetime highs on silver, lifetime highs on miners. And the bearish equities is, for a change, also working at 2, down over 2%, which is like a crash these days, down over 2% on both the ES and the NQ. So, and this is definitely the best day I've had for the year. We're not very deep into the year, so it's a pretty low bar, but definitely a very good day. So, having said all that, 6 minutes into the show, let's swiftly go through the charts and kind of catch up with each other. Here's the spider. This is the subtle little break here and the subtle little break there that I was talking about. We have clearly moved the right direction because, I was, the point of despair I was at was around about here because the bulls should have run with this. That was the exact kind of setup they'd want to see. Beautiful breakout, and you just want to follow through. 7,000, 8,000, 9,000 on the S&P, the kind of numbers that Tom Lee predicts. So that flopped. We have a failed bullish breakout par excellence. And we've got a beautiful gap here, which I hope we won't even bother reapproaching, but we do have a nice new gap all over the place. And I'll just to add some spice to this, if the AI hype on which my family's fortune is largely based, so I have no reason to diss it, but if the AI hype dies, God help us all, because this market is toast. AI is the one and only thing holding this beast up. Okay. Here's the cubes. The cubes are obviously down hard too, 2.17%. Big gap down there. Failed bullish breakout. This gap was from Jesus H. Christ Almighty. This gap was delivered to us. We approached it here. Sealed it beautifully on Thursday, I guess. Sorry, Jesus. And down we go. So, thank you, JC, from your chosen chartist. All right, here's gold. Lifetime highs. I don't know. What are you going to say? It's doing great. Those men out there who bought their wives' jewelry a decade ago, good on you. Probably one of your better investments. Because that jewelry, the good stuff, just keeps going up in value. Silver is doing even better. Silver is up 6% approximately, lifetime high. We could be at triple digits this week. We could be at triple digit silver and $5,000 plus gold this week. Could happen, unless taco hits. I'll say it again. I keep trying to get cute and short this mega rally here and there. I lose every time. I'm not that bright. I've got some XME puts, which are flat incredibly. I can hardly believe that. But yeah, I will say to myself, even though I'm alone, out loud, don't get in front of this train because it keeps running you over. One day I'll learn. Now, with all that's going on, you would expect crypto to be doing amazing. Everything's exactly what crypto should benefit from. Not so much. We look at Bitcoin here, down about $6,000. And how about that? Look at that. Remember my resistance? We got as close as we could get on this day and have just plunged since there. And yet Tom Lee will still be asked, so where do you think crypto's going? I think it's going to 200,000, and it won't. And they'll ask him again next month. So it's not. MSTR, Michael Saylor, hello Saylor, is down 6.44%. Just embarrassing. Embarrassing. I'll say this. MicroStrategy at this very moment, and hear me well, is the same price that it was in February 2000, 26 years ago. And yet again, Michael Saylor wants to get on the cover of God knows what. He can't. There you go, Michael. We have Tom on this week and then Michael again next week. Why? Why on earth? Give me your money and in 26 years, I'll produce nothing for you except deeply deflated dollars or inflated dollars. So unbelievable. And even the Trump twins, the offspring of our leader, produced ABTC, American Bitcoin. You can see what a sensation that's been. Lifetime low. When the day comes that DC is not pandering to the crypto community. I guess Bitcoin's going to be, I don't know, $12. It's just everything should be supporting crypto. This is a crypto dream, the way things are set up. And yet, here we are. This is the kind of performance you're getting. Speaking of Washington, D.C., here's Tesla plunging. We've lost about approaching 20% since December 22. On the heels of its lifetime high back on December 22, if memory serves. You try remembering all this stuff. It's a lot of data. There are no notes here. This is just me thinking, because I don't remember people's names, but I remember price quotes. Some other odds and ends. Axon, in this day and age, it's kind of hard to believe this is down, but we're down 1.18% on Axon. These are just some items I'm short. Bath and Body Works, BBWI, nice tumble here, over 7% negative on this. I've got 30 different either short positions or long put positions. Let's just call them bearish positions across 30 symbols, and these are just a grab bag of them. Another DC beneficiary, Palantir, wild-haired Alex Karp. Palantir is down 1.12%. And is still working on that enormous distribution top, that enormous topping pattern, which hopefully will finish at some point. For a change, Royal Caribbean's being nice to me. It's down almost 2%. Nice little tumble there as well. BRKR, Bruker, up 3.5%, reversing away. We got a bullish engulfing pattern on this, but long term, I still think this is going to do nicely on the downside. It is looking at those aforementioned 30 symbols, 3 of them are up at the moment. XME, up 1.21% because of gold miners, I suppose. BRKR, which we've just mentioned, and PGR, which is a real favorite of mine, but that's a 0.63%. So by and large, things are down, but we do have a few bad boys out there. Here's a new one, Caterpillar, CAT, down 2.5%, following the lifetime high on Friday. A real favorite, probably my favorite chart of them all right now, Dell, DELL, off almost 8%. Remember this one? We've talked about that. Look at that beautiful pattern. Head and Shoulders is complete now. I have not calculated the measured move on this, but it's a very small number. I have big dreams and hopes for just how far Dell could go. Meta, which I had some very intimate experience with last July. This one is down about 2 2/3%, so sinking nicely. And again, I think much lower prices to come. And keep in mind, earnings are coming up for a lot of these companies next week and the week following. NVIDIA, crucial to the support of this bull market, off 4.13%, another nice gap down on that one. A new friend here we've talked about, Supergroup, SGHC, down 3.27%. I introduced that to you last week. A somewhat better known company, IBM, off about $14, almost 5%. Good one there. Got puts on that, I'm short and have puts on that. Yeah, a few of these are kind of doubled up on. And Uber, just to wrap this up. Here's Uber down 1.58%. A nice rounded top on that one. So just a whole hodgepodge of interesting short positions. So with just a few moments left, let's just, you know what, we're going to finish with bonds. Something nothing to do with stocks, but I just want to hit this point. Bonds are down hard. This is not good, depending on your disposition. But I've talked in the past, remember this pattern right here, I talked in the past about that little pattern within a pattern, which could be breaking down. And it was sort of monkeying around for weeks and weeks and weeks. Finally, over the course of Thursday, Friday, and definitely today, we've turned tail here and have taken a nice tumble, which obviously increases interest rates. But I think that's just another signal about the worldwide disposition toward investing in the U.S. and the faith in our government. But it'll be expensive. Interest rates rising is going to be an expensive fact. So anyway, that's it for me today. We've got, I don't know when our next holiday is, but I think it's a nice long way off. Maybe Easter or something like that. So we'll actually get to enjoy trading for a while. But that'll be it for me for now. and I'll see you here tomorrow. So thanks for coming by. See ya.
Got big goals for 2026? Get the big deal. Earn a 4% cash match on all qualifying deposits, up to $10,000 total. Plus, unlock 30 days of commission-free trading. Trade with confidence using active trader mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. Earn a 4% cash match when you open and fund a new Tasty Trade account today.
So I see you're taking an interest in open interest. Open interest, open trades. It's right there. Imagine all the trades are in XYZ at the same strike and expiration. Day 1, Brittany buys 4 options to open a trade. Dean also opens, but he only buys 2 options. And then, closing bell. Day 2, open interest is 6 because of yesterday's trades. Now, Jessica gets in on XYZ, and she buys 2 options. Day 3, since no one has closed any trades yet, open interest is at 8. Watch this. Brittany closes her trades, Dean closes his, and Jessica keeps her eyes open. On day 4, open interest is now down to 2. That's because Brittany and Dean closed their positions and there are only 2 still left open. That's how open interest is different from volume, and both of them are parts of liquidity, which is something we look for before we enter into any trade. Pretty simple.
In the world of investing, a beast lurks between the numbers, ready to pounce. Some traders hide from it, some ride it. If that's you, join us on Tasty Trade. Genius loves company.
Earn a 4% cash match when you open and fund a new Tasty Trade account today.
Ring the alarm, hey, ring the alarm, boys. Turn up the charm. Listen up, y'all. Get out the damn stall. It's the last call. Hey, the last call. The last call. The last call.
Hello, everybody, and welcome to the Last Call edition with Liz and Jenny. My name is Liz Dierking. The beautiful brunette is Jenny Andrews.
That way. Good. How are you, Liz?
Good. Yeah, good. We've got earnings on deck. Spoos are down 145. Close all. We are back in crash mode, Jenny.
I guess 145. It's not too terrible though. I mean, it's probably the worst we've seen for the day, but if this is all they've got, it's not.
I don't know. I think I saw them down almost 200. Am I wrong?
Really?
I don't know. I don't know if I could be. No, I'm sorry. 2%. It was just always 2%.
Okay, yeah, I don't know. I've got bigger things going on here. I have the furnace man fixing my heater. I am very excited to get heat back in this house. Hopefully he can work his magic and there's heat before the show ends.
You are going to freeze your tuchus off if he doesn't get it working.
If he doesn't get working, I don't know what I'm going to do, really. Move out.
Hey, come on over. We can commute in tomorrow to the SIBO.
I'd love to take a shower. I'd love to take a shower sometime one of these days.
Got really hot water, working showers. Come on over.
Oh, man. I will. If he doesn't fix this furnace, I'll be over tonight.
All right. Well, offer still stands. Okay, Jenny, this gets away from us pretty quickly. It's last call. When the bell rings, we can no longer place trades, which is not usually how you and I operate. We're still getting used to that. But we do have some earnings on deck. Do you want to jump into them, or do you want to talk about our big deal first?
Yeah, no, we're already on the platform. Well, it's already on the platform, but let's talk. I guess we can talk about the big deal. The big deal, 4% cash match for new accounts with new deposits. If you put in $100,000, you're going to get $4,000.
I mean, it's kind of a big deal.
You put in $10,000, you're going to get $400. It is a big deal. It's huge. Last year was just 1%. 4% is mind-blowing crazy.
Yeah, it is mind-blowing crazy. I mean, when you think about it from that perspective, you just made 1 year's an interest rate, like the interest rate.
No, it's great. It's great. Yeah, it is fantastic. So if you are thinking about opening an account, this is the time to do it because offers like this don't come around very often.
No, they do not. So yeah, that's pretty interesting. Okay, Jenny, let's do some earnings because today we have some fun ones. Hold on, I'm going to go back. I'm just going to Twitter because we love Bob on Fire, and he posts this for us. He posts this for us daily. And take a look at this. Vetted. Now there are a lot more earnings on here than the ones that are up there. There's, we had some before the bell this morning, and then there are some additional ones as well, but kind of vetted. And I think these are the names we all know: Netflix, U-All, Johnson & Johnson, Halliburton, and Schwab.
Perfect. Perfect. And let's just start at the top. And I would say if I had to place them in order of importance, Netflix, U-All,
Johnson & Johnson, Halliburton, Schwab,
Johnson & Johnson, Halliburton. I don't know. We don't trade Halliburton too often.
But I think Halliburton could be that's very topical. I would actually put them in the exact order that Bob did.
Would you?
I would. Because Schwab, I don't really care about financials. I never really have. I mean, no, that sounds bad.
I just don't know if Johnson & Johnson that liquid, that active?
I don't know, but let's go. If we both agree Netflix and U-All, then we'll get to the bottom three. Deal?
Yeah, with Netflix and U-All, and we'll see if we get to the rest of them.
Okay.
Now with the SPOOs down, 150, Netflix is still green on the day.
Netflix is still green on the day, shockingly, right? Now, I will tell you, this has been higher today because, let me show you the high. It opened at 88.93 and its high was 89.90.
Yeah, so close to 90, a couple dollars higher, but it's still green on the day. So far, the only things green on the day are, besides volatility and metals and oil and natural gas, are Intel. Intel still green on the day, and
you know what else is still green on the day, and I don't think we have it, but I do, and that's why we used to have it in here. Bloom Energy is up, and so was, which is crazy because this is kind of my nuclear alternative, and nuclear's down.
Well, this is all just energy. This is like an energy.
It's a fuel. It's energy fuels.
Energy fuels. Okay. So yeah, we've got some energy stacks up, but as far as the equities go, we've got
and Micron. I forgot about that. Thank you.
Micron.
Yeah, Micron is bucking the trend right here.
Netflix hanging on by a thread.
So let's go into Netflix. Now, I want to be bullish in Netflix because of Stranger Things.
Okay. All right. There's a lot. There are a lot of Stranger Things fans. I'm not a fan, but I'm not into sci-fi.
I watched it with my kids. It was a really fun thing to do over a decade because that's how long it lasted. Because every 3 years they would come up with stuff, and I think a lot of kids and a lot of people watched the Stranger Things finale season. So I'm going with, not that that matters, and I know nothing about it, but I'm going with Netflix is going to be up because of Stranger Things, and they're also they also put an all cash bid in for Warner Brothers.
So Netflix at $88, really had hit hard times last quarter. So it's taken quite a beating. I don't mind getting long. And if looking at it, I would say either a Jade Lizard or a Diagonal.
Okay. I think so as well. Now, I went with a Diagonal, but I didn't think Jade Lizard. Let's go Jade Lizard first. It's $1,000 in buying power.
Mm-hmm.
Hold on, I gotta break it.
So $1,000 in buying power. It's neutral to bullish, only risk to the downside, no risk to the upside. But if it goes up really high, you might not make anything.
Now, I will tell you, in a down market like this, do I think Netflix earnings are going to skyrocket? No, I don't know, but I just wanted to lean bullish. So I don't mind this option, okay? So this is option A. Good. We're using $1,000 to do this. Now, my go-to move kind of for earnings is the diagonal, but let's see if it sets up. So I'm going to go with the 95 just outside. You can go 95 or 94.
Here, why don't you explain the mechanics of the diagonal and why you're choosing the strikes you're choosing?
Well, I'm not choosing the diagonal yet. We're just going to walk through it. But the diagonal is selling the near term, buying the farther out term. And technically, by all sense of the word, this is a poor man's covered call. All diagonals are poor man's covered calls. Not all poor man's covered calls are diagonals, right? So
I think it's flipped. All poor man's covered calls are diagonals. not all diagonals are poor man's covered calls.
But it's the same concept, right? So you're selling.
No, because if you buy the 50 Delta, that's not a poor man's covered call. This is not a poor man's covered call.
Some people set it up like that, being like, I'm going to buy the at the monies and I'm going to sell the nearer term. So this is $2.33, which is cheaper than I thought it was.
But you can't say a 45 Delta call is equivalent to a stock replacement.
Oh, I agree. But some people will say that. That's what I'm saying. That's why we name things what we name them. You know, when I say a diagonal, that I'm buying a farther out in time and selling a nearer term, and I'm buying the 50 Delta and selling at the expected move for the cycle. When I'm doing a poor man's covered call, I'm going farther in the money, but we name those strikes. People look at this totally different. Like, what does it go in as? I think even poor man's covered calls go in as diagonals. It just goes in as custom.
Yeah, like if I'm going to do a diagonal, I'm buying the 50 Delta in the longer term, selling the, at the expected move in the shorter term. If I'm doing a poor man's covered call, I'm buying the 80 Delta in the longer term and selling.
But I would like to state both are bullish trades.
Both are diagonals. Both are bullish trades.
Both are bullish trades.
And if you're really bullish, you go with a deeper in the money call that has less extrinsic value. If you don't want to have as much at risk, you go with, closer to the 50 Delta, and you're giving up more extrinsic value, but you have a lot less at risk.
I appreciate that. We don't need to overthink this. The diagonals are pretty easy, especially earnings diagonals. You sell the expected move for the cycle. I chose the 95 instead of the 94 because it's pretty cheap. Okay. And you buy the at the monies. That's a bullish. You can flip the cards over and do a bearish diagonal if you think it's going down. Now, you will lose money. You will lose money if Netflix goes down on earnings.
Now, this is what we focus on with these diagonals. How wide they are and what we're paying. We don't want to pay more than half the width. This is $5, $6, $7 wide. We're paying $2.80. Great. Seems like a deal. We're paying less than half of the width of the diagonal. If it was $7 wide and we were paying closer to $4, I think we would set the strikes up differently.
What can you lose on this?
$2.80.
How would you lose $2.80?
If Netflix goes down tomorrow.
But it's got, you do have something with 10 days in it. It's got to go down pretty far.
Pretty far to lose the full $2.80. So the thought is you'll get that dollar something decay this week on your short. You'll have that 10-day long. It's got 10 days to go. It would have to go down quite a bit to lose the full $2.80. So it's a low risk earnings trade. It's a low risk, high reward, right? So we're risking $2.80, can be worth $7 in the end of the week if Netflix goes, blows it out of the water and goes through the expected move.
Yeah, but if it goes up a little bit, you will make money. So say Netflix, the expected move for this is $6.62. If Netflix goes up $4, you're going to make money.
Yes, you will. So I do like diagonals. They're a low risk way to make. And last year, this earnings cycle, we had a very good run with diagonals. We put in a lot of bullish diagonals. We had a very good run with bullish diagonals last year, this earnings.
This earnings cycle we did. I'm going to press it. Now I'm laughing only because the chat says we have to go long Netflix because Dr. Jim shorted it.
Oh. All right, I'm going to get this pushed out right away.
Okay, so that's Netflix, and then so Netflix it's a very low capital, low commitment trade. We use $280. We don't expect to lose the entire thing. I mean, we could if it gaps down wildly, but if it stays right here or goes up a little bit, we'll make some money. Okay, next up is we're going to go to you all because Jenny and I both agreed that that was the second most attractive name on that list. So if you're going to look at you all, let's take a look at where it's got a 23 IVR. It's a $108 product. Now this chart looks very, very different than Netflix.
Yeah, it's like the opposite of Netflix.
Yeah, it's the opposite of Netflix. We're near the top of our range. Mm-hmm. So with something like this, I would like to look at a Jade Lizard again, or even, take a look at this. How much is this selling the put? $1,400 to sell that put.
It's kind of a lot.
Yeah, it was $1,000 in Netflix, but it was only $80.
Yeah. There's a Jade Lizard. I don't want to be taken down by earnings. I really don't. I don't want to be taken out by earnings. So
and the diagonal can't take you out. I mean, it can give you a little bit of a wound, but it can't take you out.
Now, what would you think of an upside broken wing butterfly in UL? Because it's already pretty high, thinking like, oh, it could go higher. Maybe we could end up pinning the strike. But taking a credit, what kind of credit do we get here? it'd have to come in.
Well, no, I mean, you do have to kind of make it a little narrower. So I could go like that, get 83 cents, and then buy something to break a wing. Here you're risking 260 to make 140. It's not bad.
It's not bad. We're risking the same amount as we're risking in the in that other diagonal. But this way, if it goes up, we'll make money. But if it goes up too far, that our risk is to the upside.
Yeah. So this isn't bad because no matter what, to the downside, we'll keep our 28 cents. If it goes up, we'll be fine. My only caveat with this, Jenny, is it is a Tuesday. I almost thought it was a Monday. It is a Tuesday. And this, even if it goes straight to 114, we're going to have to sit on it until Friday.
Could you, I don't love it. I don't love the collecting only 25 cents.
What about? No, I don't want to do an iron fly.
No, it's tough. You all's kind of tough, honestly. I
just want to set it up and see. $3.30 on a $6 wide. You're paying more. Is it $6 wide? $5 wide. Is it $5
wide? $5 wide.
It's too expensive.
And if you tried the crab, which would be, if you tried the crab, which would be still buying that 109. And this is a trade. This is like a Nikki and Mike trade. They created this. Sell 2 114s. And then buy 116. Yeah, I mean, it's not bad. You're not paying as much. And then you've got the 109 116. So, or 109 114, $5 wide. Even so, you're paying a decent percentage of the width of that spread.
Yeah, we're gonna go next. I'm going to Johnson & Johnson.
You know what? When we can't come up with something, I think this is going to be a rule this year. Like if we can't come up with something and the calendar's less than $1, let's just throw in an earnings calendar.
Okay. Upside or downside?
Doesn't matter. Just do it at the money.
So I'm going to go 109. Actually, I'm just going to go 110. There, 142.
Oh, no. It doesn't. I said if the calendar's less than $1.
That's what I'm saying. This is, we're going to go next, Johnson & Johnson.
Yeah.
Johnson & Johnson, I want to see how liquid it is. 217. We got to do a 217 calendar. Sorry. I'm sorry.
And this will probably be about the same price as the...
Oh, no. 57. That's getting shipped. And then I'll explain why. Okay, so...
that was so cheap. I was going to say, even though Johnson & Johnson is twice as expensive as you all, this calendar was so cheap. Let's see. We got a 30 vol. You're selling the 48 vol, buying a 30 vol. I mean, what was the vol in you all? That calendar was so expensive.
The reason we do the 217 is it lays upside down. Anytime I can get something for 217, I do. We've got the 217 calendar. We're saying you all's not, or Johnson & Johnson's not going anywhere. This was an 83.67 vol. That's why
higher vol, more expensive.
Yeah, higher vol, more expensive.
Mm-hmm.
So, but we are not filled on Johnson & Johnson yet. But I mean, when I saw how cheap it was, I had to press the button.
217 put calendar, 57 cents.
I'll pay 60 cents for it. But it is wider market. So to your point, it's not as liquid. If you're looking at this, you've got 375 at 410 and this is 320 at 350. I'm not going to pay up $1 for this. Do you know what I mean?
I know. That's why we usually don't trade Johnson & Johnson.
I know it's not exactly the most liquid, but I was very excited when I saw that. Okay, Then Halliburton and Schwab, because we have about 12 minutes left. We actually don't have about 12 minutes left, but close.
Okay, so Halliburton. Can you look at the chart?
Halliburton will forever remind me of the trading floor.
So,
did you ever see the Jib Jab with Halliburton in it?
Oh yeah, long ago. But every time I hear Halliburton, I think of that the guy Timber had in the pit, in the Halliburton pit.
Oh yeah, if that guy had a job, we all had a job. Here's my job security.
Real job security. Real job security. All right. I mean.
There's nothing. I mean, honestly, you've got a 31 rank. It's a $31 product, but it's up so much. What are you going to do?
There's nothing. What are you going to do? What are you going to do in Halliburton? Honestly, that's just...
Okay, Jenny. So then we're going to go with Schwab. Now, you wanted to move Schwab up the list. You let me go in the order that I thought that I liked them. So no, Schwab is last. SCHW. Schwab. Charles Schwab.
There we go. 101.
Everything was $100. Everything. Most of our products were wrapped around 100.
I'm going to say reverse Jade Lizard.
You're going reverse Jade Lizard. You would sell a naked call on Charles Schwab.
Yeah, reverse Jade Lizard.
So you can't really, because you'd have to just bring it to the 105, and that's in the expected move, and you're using $1,700.
There we go. Reverse Jade Lizard. Use the 8 cents. But there's like massive pounding going on in my house. Bring it down to 110. Well, then what's our risk?
400.
29 rank. Let's just do I don't know. It's tough. I'm telling you, these earnings are perplexing.
I'm not a huge I'm not a huge fan of bank earnings or financial earnings. I really just am not, because I feel like I get very excited when I see the names because everybody knows the names and then there's nothing to do. Now,
if ideally we needed to stay in there tight range, just throw on the Hunter calendar. If this was slightly bearish,
that's kind of what I was thinking. There's ways to do it that are different than that reverse.
Like
47 cents. I'll pay 50 cents for it and call it a day. It's slightly bearish.
Double check your internet, Liz. Double check your internet.
Am I still on?
Yeah, no, you're on. You're on. Send it. Did you know there was an earthquake in Illinois last night?
I told you that. Are you kidding me?
Look what came in the mail.
So
I'm
yeah,
gonna get that pushed out. I'm getting that.
So hold on, we've got activity, and I don't know if it was last night. So have you ever seen an earthquake in Illinois before?
Yes, I felt it.
Yeah. Okay, so this is what happened today. These are only 2 earnings trades. We've got Netflix, Diagonal. We've got the Johnson. Oh, we're filled in the Johnson & Johnson 217, and we are trying to work.
Get filled. While I'm pushing everything out, get filled on that, so I can get that pushed out too.
Okay, and then we're trying to work. I will pay 50 cents.
Yeah. Okay, so
honestly, these are earnings. We put in 3 earnings trades. None of them could break the bank or take us out. None of them. Like, no matter what happens tomorrow, we will live to trade another day. And what Jenny's talking about is in these like uncertain times that we've had right now, if you do have a naked option in one direction or the other, it could take you out for, you make small win, and it could take you out for a lot.
Yeah, can you just do me a favor and go to the VIX? I just want to take a look at the VIX.
Sure.
So with SPOO's down 148 and VIX at 20, almost 21, like there are a lot better ways for me to spend my money than on like rolling the dice on some of these earnings trades.
Yeah. So that's that's why the calendars and diagonals aren't bad because they're levels of engagement where you can just kind of look at it, you're in it, but it's not going to be too crazy of a thing.
Mm-hmm. So I just want to show you this. These came in the mail. I don't know if you could.
I cannot see anything. Oh, so those are your costumes for Mexico
Beach Olympics.
Yes.
Yeah, for Beach Olympics. These are my outfits for my team.
You wanted a fire shirt? You got a fire shirt. And I can't be on your team. Can I have one?
You know what? When Beach Olympics is all over, I'm going to take one of those and mail it to TP.
Oh my God, that's so funny.
Yeah, and you'll get one too.
So the Beach Olympics, I'm hoping that the captains don't have to participate.
We're just the coaches. Just the coaches.
Yes, I hope to be the coach.
Love it. Yeah, you're a great motivator. You'll be great. You'll be great. All right, let's go to SPY, see what the low of the day is.
I'm going to go to E-mini S&Ps just because we are always quoting that anyway. Do you know what I mean? I think we're at the low 62. Hold on, let me get rid of that top bar. 68.22. We're right there.
Yeah, low of the day.
We are closing on the low of the day. And I don't know that anything else has come out. But you know what, Jenny? We were live from the SIBO, and we're going to be back there tomorrow. And we did a really good study today, which I loved, from Jacob about the timing of the zero DTEs. And here's what I find fascinating. Would you call this an up day? Would you? That's
a real brain buster, Liz.
Just asking for a friend. Would you consider this an up day?
No.
And as a matter of fact, I think it's a very large down day. Did you get out of your put spread for a very large win?
Yeah, yes, I got more than, I think I took 60% out of my put spread in SPX today, maybe 70%. I took a large percentage out of it. And it's a down day. Again, that's why we like these put spreads. All you need is a little pop to get out. And we're not saying like, oh, look at us, we got out of ours, because there are a lot of people who are in these SPX 0 days and might not be out of theirs. I mean, this morning where we're spoozed down 100, they might check Bob strikes. Let's check Bob strikes.
Well, okay, but I get it. But they're doing both sides. But what we were trying to say is that even, I know, because sometimes I think down days get a bad rap when we're just selling put spreads. Puts are neutral too. We're looking for a small pop, nothing crazy. I got out of mine for 50%. I wasn't as crazy aggressive as Jenny and her 70%, but I got out of mine for 50% today. And it is a down day. You're just looking for one pop, and we're following the mechanics that Jacob has sent us.
Yeah, I mean, you saw at 9 o'clock we were down 106, and then by the time our show started, we were down 75. But I want to look at Jack Tucker and his strikes to the downside, because I think he's still out of the way.
He's still out of the way, 68.20. So even if he's right there, I see 68.20, 68.15, and 68.20. So if you're looking at this, he's fine.
He's still out of the way. We've got 4 minutes.
Wait, hold on, I'm in spoos. I got to go to SPX because sometimes they're different.
Oh.
It's not okay.
Wait, go back to us. I can't believe
68.20 was the strike. So he's not okay today because spoos and SPX, as much as correlated as they are, they have a different
so right. It threw his but 68.20, 68.15, and then he did collect 5 something and go back to where we are.
So it's not.
I'm sure he's rolled down. Because
otherwise, we're $2 away from a short. But that's the one thing why I do like, and we went through the whole thing. No, Jack Tucker is a god. He's a legend in his own right? But I feel more comfortable with the puts. I know my risk and I know my exit. I need a pop instead of time.
Yeah, I hope he got out at some point. I hope he got out at some point. Yeah, did you go? If you go top down, let's see if we ever heard from anyone, because I do hope he got out at some point in time.
I don't know. Oh, Ajit's got his iron butterfly. He's trying to pin 6,800. Let's see if that's working for him.
And it's right around there. It is right around there.
Ajit, congratulations on your win. Hopefully, I mean, you've got about 2 minutes left. Yeah, so he's pinning 6,800 in SPX, and I like when people show this. And Jack's usually pretty transparent with everything.
Yeah, I just again, he'll do some management, roll down the calls, make some adjustments.
Yeah,
I don't know. It's tough. This 144, I didn't really see it coming when we were down 100 and then bounced back to only down 70.
I didn't. I thought for sure we'd be down 50 instead of down 100. If I had to guess when we were sitting on the trading floor, I would have said we were down 50 to 60 instead of 140. We doubled what we were down.
And what kind of percentage hit is Bitcoin taking?
Bitcoin's taking a huge percentage. I think it's down $6,000.
6%.
6%. And it's at 89. I mean, I know that 89 is a number it's got to hold at. I mean, it really does. And today was a big day for things. There was huge volume. Thank you very much to Frank the Great. Huge volume in natural gas. And $2.2 million spoos went across too. So it was big volume today.
Mm-hmm. Yeah. Kind of a weird day after this long weekend.
Well, I mean, Tim Knight said it the best when I was watching him I was listening to him before we came in. He's like, everybody was waiting for this long weekend to see how everything was going to shake out, because everybody knew what was happening yesterday on Monday, but the markets weren't open. You could watch the spoos. They were down 80 at one point.
Yeah. Last night. Right. When I went to bed, they were down quite a bit.
Yeah. Yeah. Mm-hmm.
So, Liz, we are out of time.
I know we've got 3 earnings on deck. We've got Charles Schwab, Johnson & Johnson, and Netflix, baby trades. But once again, to your defense, when you're looking at a VIX of over 20, there's so much more other premium to sell than to focusing on earnings.
Right. When we've got this high vol, there's a lot else. There's so much to do out there. I'm not going to take big risk on some of these earnings trades.
Yeah, for sure.
All right, there we go. Thank you, everyone, for watching Last Call. Stay tuned for overtime.
Yeah,
Liz, have a wonderful evening.
Those guys Oh, I'm hearing myself in stereo. Those guys are great. Stay tuned for overtime. And Jenny, I will see you on the trading floor tomorrow.
See you tomorrow at the SIBO. Bye, everybody.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that 1-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
Tasty Trade has crypto, and you can trade with zero commissions: Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. Only at Tasty Trade.
When the market moves, traders need to move faster. Tasty Trade Active Trader Tool offers full depth of market visibility, one-click order entry, and instant position management so traders can react in real time. While others charge for professional tools, Tasty Trade provides them for free. Opportunity can move fast. Seize it with Active Trader. Try it now on Tasty Trade.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tasty Trade and tastylive web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
Got big goals for 2026? Get the big deal. Earn a 4% cash match on all qualifying deposits, up to $10,000 total. Plus, unlock 30 days of commission-free trading. Trade with confidence using active trader mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. Earn a 4% cash match when you open and fund a new Tasty Trade account today. Earn a 4% cash match when you open and fund a new Tasty Trade account today.
We're using binders, no paper cuts. It's Tuesday, January 20th, 2026. This is Overtime. I'm your host, Chris Vecchio, New York. Ilya Spivak's in San Francisco. We're here to take you through the rest of this half hour as we wind down the trading day. You know what a trading day it was, where we come back from yet another market closure holiday period, this time for MLK, not for New Year's. And we're greeted with another round of interesting times sort of news.
Not unlike binders, it harkens to a time in the olden days.
A little too old for my liking, Ilya. Times before the good times, which is not good news for the stock market, where we see these divides between the United States and Europe deepen over the territorial acquisition of Greenland, which is being idiotically framed as a debate between globalists and nationalists, something that I'm going to opine about in a second here, Ilya. Likewise, with the
boy,
stock
is
market,
that take misguided. Whew.
As we're getting into a sell America kind of mindset again, reminds me of almost this time last year, although we didn't wait as long in 2026 to get to that tipping point as we did in 2025.
No, we're a good 6 weeks early.
April, a good 6 weeks early, right? And what we see here is that stocks are down, bonds are down, the dollar is punched in the face, and gold and silver are soaring, which is still the best trade on the board as far as I'm concerned. The S&P 500 down over 2% now to 68.34, slicing through the low that we had at the start of the year. Potentially,
what was that George W. Bush told his head of FEMA right before Hurricane Katrina? We're doing a hell of a job.
We're sure. IVR 26.8, vol up across the board. In the VIX and the VIX futures, you see it plain as day. It's a shift up across the curve, so it's not just about what's happening here in the short term. VIX in at 20.28. The VIX front month now, the G contract 2039. The next month contract, H March, in here at 2038. So up a point for each. Ilya, the news, of course, is not just about the stock market. We see bonds finally head and shoulders pattern breaking down. Maybe those 3 DTEs ring the bell that looked like they were dead in the water. Gold marches to 47.65 here on a new all-time high, 3.69% on the upside. Silver, another 6% day itself, up at 94.21 on our charts. Crude oil goes higher, up by about, well, it's a little bit better than that here on the screen itself. But natural gas, of course, with this gigantic weather shift forming over the next few days, up 25% in the front month. And the dollar smacked around here, Ilya. So before I moralize and get on my soapbox to address just very silly prognostications, talk to me. What do you think of today's market now that we've seen it slide into the close 90 minutes after you and I first discussed this on Futures Power Hour?
I think the markets are clearly voicing an opinion here. I mean, when the tariffs came out in early April and going into that announcement, the markets did this same thing. They basically said, look, we can benchmark lots of things, but if you're really serious about this, then frankly, we can't help you. We can't rationalize this. There's no giving of the benefit of doubt on this level of ridiculousness. And we had this Sell America thing happen where the markets were basically divesting of U.S. assets because they figured, you know what, we know that obviously this is the U.S., this is the global currency of commerce, this is the deepest financial market in the world. None of that changes here. Frankly, we can't be betting that it would change, because if it would, that's like betting on Armageddon, and in Armageddon, we're all dead. So there's no point to even try to benchmark that. But what you would be wise to benchmark would be very serious dislocation. And that's the signal we had then. That's the signal we have now. The question in my mind is, how quickly do we get the Greenland equivalent of a 90-day pause on tariffs that ultimately kicks the can down the road a few times and then magically forgets, not unlike walls to be built by Mexico. So the whole thing is, I think at this point, a Davos watch, interestingly enough, because all the principles are going to be there. And so giving the president the benefit of the doubt, basically saying, this is not unlike scaring the bejesus out of NATO to get them to meet their spending commitments. This is a negotiation. And within that negotiation, this is a throw the gun on the table tactic. Nobody's firing the gun. Nobody wants to fire the gun. Nobody's gonna fire the gun. This is a negotiation tactic that maybe has gone awry. And maybe what we're going to do here at Davos is get to whatever the 90-day pause equivalent looks like, whatever that is. Maybe it's rights to Greenland's exploration, let's call it, of rare earths, which may be why all of this is going on. Again, it's silly in the extreme because, of course, the stated reason is that we need to protect Greenland from Russia mostly and have a military presence there, which we already do. We have a base on Greenland. The treaty that we have in place to have that base allows us to expand it basically as much as we want. And Europe, in their fight with Russia, would only welcome that. So that's not the reason we're doing this. Maybe it's these rare earth deposits that ostensibly are in Greenland, or on Greenland rather. But That would be silly also because they're unprocessed, and our deficit is not of rare earths. Rare earths are not rare. They're rare to be in their refined, processed state, which this is not. So I suppose in the coming days, maybe we'll learn after everybody huddles together at Davos what this is really about and what the off-ramp is.
Yeah, we'll see what happens. Obviously, as this percolates in the background, if we could look to Diego Garcia once more as perhaps a litmus test. The Chagos Islands, last year, the Trump administration backed Great Britain handing over territorial control to the locals. Now Trump is saying that it's a bad idea and is reversing course on it. So if you agree to something with Trump and he changes his mind, how viable the counterparty is the U.S. right now is really the question that's at hand. If it's being done on the whims of a single person and rather done through legislative order or what have you. So in any event, Ilya, stocks aren't liking it today. Just fact from fiction here, though. A lot of this seems to be fear-based in the short term because of what ultimately we see as a pretty negligible impact to S&P 500 earnings. According to research out there, Goldman Sachs put out a report today, 0.1% hit to S&P 500 companies' earnings because of the new 10% tariffs on those that are standing in the way for a U.S. acquisition of Greenland. But Ilya, my issue isn't whether or not the U.S. should be out there acquiring territory or not. There are reasons, good and bad, to go after territory acquisition. It could be something like bringing a territory into your statehood. It could be something that a country is struggling and needs help. But we've seen over the years that territories have shifted hands. But these territorial hand changes through acts of aggression, we've been really trying to avoid that for the past 80 years. If you don't mind here, because yesterday on Twitter, I got into a little spat with Anthony Popliano, who put out what I still believe to be a very dumb tweet. He said, quote, "The reason that Greenland is so controversial is that it ultimately pits globalists against nationalists." We'll stop there. First, this is done because it's inventing a false binary. The idea that every Greenland-related issue clearly divides globalists and nationalists is analytically useless. Okay, states pursue interests through alliance, trade, institution, because those mechanisms are often the most effective way to advance national power. NATO's not globalism versus nationalism. It's nationalism executed multilaterally. So treating cooperation as self-sacrifice misunderstands how state power in the modern era actually works on a very deep fundamental level. He goes on to say
and the extent to which, by the way, those multilateral institutions were written by us, shaped by us, and are created for our benefit.
For our explicit benefit.
For our explicit benefit. It is definitely, when I saw what was put out there in the conversation you were having, the very first thought in my mind was, well, if you think these are the two choices and these are the only two choices, you just plainly have no idea what you're talking about. And we can stop the conversation there. But by all means, continue.
He goes on to say, you either believe America should do what's in the best interest of America, or you believe America should sacrifice its economy, national defense, and population at times for the greater good. Okay, so this is clearly a misdefinition of America's best interest. National interest is not a vibes-based slogan, right? It's a whole host of things. It's our technological advantage over so many other people. It's the size of our economy, the strength of our currency. It's our resilience in
How about the AI supply chain? A third of which is in Europe.
At two, but in the Arctic context, right? Cooperation with Denmark, NATO, and these other institutions, they strengthen our military posture, our intelligence reach, their deterrence against Russia and China. So calling this sacrificing America's best interest is just a misread of the situation. And then it's smuggling.
No, sacrificing NATO would be sacrificing America's best interest.
Of course it is.
All we get there.
But it's the reason why this is just so plainly silly is that it's smuggling in moral language to avoid actual analysis. It's playing on your heartstrings. It's forcing you not to think, because phrases like sacrifice the economy, national defense, and population for the greater good, these are rhetorical poison pills. No serious policymaker is arguing that the U.S. is weaker on an economic or defense standpoint because the 56,000 people that live in Greenland are preventing us from expanding our military operations there or even exploring economic opportunities there. The debate is to me, not globalism versus nationalism. It's about what type of power strategy maximizes our longer term interests. So in my view, I think bilateral leverage, alliance management, investment, basing rights, territorial control, these are tools to get what you want. These are not the identity of a nation or anything. And then I think it's just collapsing this into just ridiculous tribal identity. And I'm just so tired of tribalism myself. Labeling these positions as globalist versus nationalist replaces any meaningful cost-benefit analysis with this ridiculous team sport that politics has become. It's making bad policy more likely, not less. Greenland policy involves sovereign law, indigenous rights, as we've seen from so many people over there, basing agreements, logistics, climate impacts, great power competition. None of this is going to map onto Democrat-Republican culture war ideologies. Like, what are we doing here, folks? This is just so silly. So to say there's no simple answer, this contradicts the entire argument. When you go on to say that there is no simple answer to complex problems, you're doing the exact opposite here. You're saying this is a simple thing because it's just all the bad globalists standing in the way of the good, homeland nationalists. It's just, this is not a serious framework for understanding what's going on in the world. And if you ascribe to it, I've got an apartment in Kansas with ocean views of both the Atlantic and Pacific to sell you. Please contact me after.
And you can see Russia from it.
Absolutely.
The notion that sacrificing NATO or is somehow more in the national interest than not sacrificing NATO is very easily belied by the events of the past 3-4 weeks, where we used NATO infrastructure to capture the tankers that we wanted, the Russian shadow fleet tankers ferrying oil from Venezuela.
What happens with that?
That we literally just used. We just used that intelligence and just used those European bases that NATO allows us to move forces into the Persian Gulf to protect around whatever this Iran situation is evolving to be. They don't have a missile, they don't have a nuclear bomb, but they sure have a giant stockpile of fissile material, which surely all kinds of interesting actors would love to get their hands on. Let's go ahead and cede having those powers because that's in our national interest. This is not a partisan debate. This is a conversation about whether 2 + 2 = 4 or 2 + 2 = googly eyes. This is ridiculous.
As long as it equals googly eyes, the math on gold seems to work out, Ilya.
Yeah, that it does.
47.64. Yeah. The conversation with Pomp ended last night when he got upset that I called the person who was crafting these policies to be a lunatic. Listen, if you're going to carry water for the Trump administration, particularly for the president himself, like, you can't clutch your pearls over a little name calling. Like, that's the most insane thing. Just give me a break. Outrageously thin-skinned. Okay.
Especially since this is not even a partisan argument. This is not this. We were talking about this on Futures Power Hour. This is not about whether the president is not on record as having used these kinds of tactics effectively, for example, in pushing NATO to arm. It's a question of what does this one achieve? Because nobody can see it. And if it seems to, and when I say nobody can see it, that's not a throwaway statement. Look at the bond market, the stock market, and the dollar. The world's collective money can't see it. So if the collective wisdom of the market can't see it, either you're doing a bad job of explaining it, or it's not a good reason. So whatever this is, I don't get it. You don't get it. Markets don't get it. Not unlike the quote unquote reciprocal tariffs in April. And so again, for me, the question is not whether this is dumb. It is dumb. The markets are telling you it's dumb. The price action has shown you that that trillions upon trillions of dollars being transacted across asset classes think this is dumb. The question is not that. That's not a debate. The question is, what is the end game here, and how quickly do we get to that part of it? Because whatever this is makes no sense to anyone.
No, Ilya, the S&P Nasdaq both down more than 2% today means that we lost more than a Greenland's worth of market cap.
Yeah.
So we have that going for us here. I do see that
Markets
Netflix
have a tendency to overshoot, I suppose.
That's true. We do have Netflix earnings out. The numbers at the top line are good. Revenues $12.05 billion versus $11.97. Expected EPS beats by a penny, 56 cents versus 55. Paid memberships crossed 325 million during the quarter. Wow. But the problem is the Q1 outlook, where revenues are guided lower, 12.16 versus 12.19. EPS estimate 76 cents versus 81 cents estimated. Operating margin 32.1%. So it's a little bit worse than expected. I suppose Conformity Gate and the rewatching of Stranger Things obsessively by a certain cohort of the fandom didn't necessarily help bring Netflix across the finish line here.
Yes.
Down to $83. I know that they're still in the market to purchase Warner Brothers Discovery. I know they sweetened their offer earlier today to go all cash. I don't know if there's anything to do here in either of these stocks right now. The market just doesn't look healthy, and it's really the big stocks that don't look healthy. The Mag 7 is now sitting at its lowest level, going back to what we had here, early October, late November.
Yeah.
We were talking about this earlier on Futures Power Hour. What's the breakdown here in Mag 7 versus the domestic equities, the small caps, which weather the storm much, much, much better today? Russell only off 1%.
Yeah, I mean, we talked about this earlier on Futures Power Hour, this idea that the Russell is far less exposed for its earnings mix to international markets. And so maybe there is an element here that keeps it somewhat more resilient, because the ding on what this is from a rates perspective is showing up. It's not like Russell is up. It isn't. So if we look at KRE, for example, as a kind of baseline for they want lower rates, and this is a big input into the mix. I mean, we're down almost 1.5%. Mm-hmm. So it's not like the higher yields are lost on the small caps. It's just that they're much more insulated from finding earnings abroad than is the S&P. Only about 20% of Russell earnings, give or take, are derived outside of the U.S. Closer to 40+% is the average for the S&P 500. So maybe that's what this is. Let's see. I certainly am in no kind of a comfortable position to say, well, the Russell is going to be fine for sure. Let's go ahead and buy. Because the other side of this, the outrage from geopolitical forces that we were looking at last week, the situation in Iran and the ongoing issue there, that's given us a crude oil breakout that's holding. And I know famed crude oil bull Josh here on our side is surely happy about that. It held at its breakout point. There's about a month's time between when oil moves and CPI starts to reflect that. So with that in mind, we have a situation where we have a story about rates that maybe isn't quite as supportive. Even though KRE is down on it today, even though the Russell is down on it today, it's down small. Maybe that story is yet to continue and the hit here will extrapolate. I am not encouraged, though, when this turns, and I mean, after some amount of selling, we'll see how much, things will turn. Just a matter of how bad of a ding this has to be. But there is an argument here for Russell outperforming on the way back after whatever dust settles. But if this is anything like April, that could be sometime yet, and the Russell will eventually join the bearish party.
What does the market care more about? Is it pricing in additional tariffs, or is it pricing in something worse here today?
I don't think the market really cares about additional tariffs. The analysis I saw synthesized by The Economist over the weekend had the worst case scenario, whereby tariffs go up to 10 as threatened, and then because there is no resolution, because nobody is going to brook this ridiculousness, they go up to 25% in June, again as threatened. That shaves 0.06% from US GDP this year and 0.08% from Eurozone GDP. I don't think anybody cares. I think the larger issue is, does this turn into a tit for tat trade war? Does this turn into NATO becoming something that is no longer a workable alliance? Does this break the inherent alliance militarily and economically and the trust in that alliance? Most important, because NATO is not going to fall apart overnight. It couldn't. But does this fundamentally alter the trust level in that alliance? And does it then become functionally unworkable? And does that then meaningfully compromise U.S. national security? I think that's what the markets are concerned about here.
Ilya, we are running out of time here on Overtime. The rest of this week, the earnings calendar itself, we had Netflix out today. UAL actually had a pretty good set of numbers. Last I checked, they were up after hours, and they are about $5, back to 113 or so, effectively erasing today's losses. Tomorrow, Johnson & Johnson, Charles Schwab. Thursday, GE, Procter & Gamble, Abbott, Intel, Intuitive Surgical, Capital One, Freeport-McMoRan, CSX. So actually, Thursday looks quite exciting. Friday, SLB Limited, Schlumberger, Ericsson, First Citizens, Booz Allen Hamilton. So again, a handful of names. Those last three, Ericsson, First Citizens, those are nothing market caps. Thursday is probably the most exciting day here for earnings this week. The macro calendar tomorrow, I didn't see much of anything too exciting on it.
No,
I don't know if you saw something else.
It gets busier later. We're going to start to see U.S. PCE data Thursday, BOJ rate decision Thursday, and the PMIs Friday. But until then, it's kind of quiet.
We're going to get a final update for that GDP report as well for the third quarter this Thursday. It should be a good one, right? Economy is growing north of 4% in real terms in the third quarter. Fourth quarter GDP is likewise trending up 5.3% still, according to the Atlanta Fed. 2.71% for the New York Fed nowcast, with a top line estimate, the high bar, 5.05%. So, Ilya, these have been accelerating in recent weeks. You know, the world only ends once, right?
Right.
So if this is a sell-off because of whatever Trump is doing, it's reflexively you got to buy the dip, because if he puts it back in the bottle, then you're going to look like a fool for not playing 4D chess.
I mean, we sort of learned this last year, did we not?
Yeah, we'll have to see what he says in Davos. He seems very optimistic about Davos.
Of course he does.
Davos. Good to be a Davos man. Ilya, we'll be back tomorrow, same time, same place, right after for last call. For Ilya Sterling, I'm Chris Vecchio. See you soon. Stick around, though. Ilya's sticking around. He's here for Macro Money up next on Tasty Live.
See you there, everybody.
Got big trade ideas? Get the big deal at Tasty Trade. Make moves with confidence using smart tools and dynamic charts. And trade what you want, how you want. Earn a 4% cash match when you open and fund a new Tasty Trade account today.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tasty Trade and tastylive web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
Got big goals for 2026? Get the big deal. Earn a 4% cash match on all qualifying deposits, up to $10,000 total. Plus, unlock 30 days of commission-free trading. Trade with confidence using active trader mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. Earn a 4% cash match when you open and fund a new Tasty Trade account today.
Got trader's block? We've got the cure. Get data-driven trade ideas with Cherry Picks, our weekly newsletter that gives you insights into the market. Sign up at tastylive.com/newsletters.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. Only at Tasty Trade.
What a day these markets have given us. This is Macro Money. I'm Ilya Spivak, head of Global Macro here at Tasty Live. And what a day to be talking about macro. The world is seemingly roiling with just that kind of risk. And we're going to try to pick it all apart here and see what is happening in these markets. And most importantly, what is likely to be in front of us next as all of this plays out. We'll begin, of course, with a look at how these markets performed today and what that price action seems to suggest. And then we'll see what this all might look like going forward. It's certainly not the kind of week that one might have thought about looking at the economic calendar, which is relatively bare bones, but nevertheless, an explosive start here coming back from the Martin Luther King Jr. Day holiday in the U.S. S&P down 2%, NASDAQ down a little bit over 2%, yields up, in particular at the long end, 10-year up 1.6%, relatively flat at the front end, and that's understandable in context. We'll take a look at that momentarily. Crude oil up a bit, almost 0.6%. Gold, the standout, up 3.57%. Euro showing us some gains and telling us that the U.S. dollar is significantly diminished here. So perhaps the most important thing here is to take a look at just where we are on stock markets and see if we can't make sense of, first and foremost, just the positioning and the narrative. Now, of course, we came into this reopening, this post-holiday reopening, with the markets already in a mood. And that's, of course, because over the weekend, the tiff between U.S. President Donald Trump, Denmark, and the broader European Union seemed to get meaningfully worse. The president issued the threat that if we don't get to figuring out how the U.S. is going to purchase Greenland, a semi-autonomous region that Denmark owns, from Denmark, then there's going to be tariffs that start on February the 1st, an extra tariff of 10%. And then if there's not progress from there, then in June, that extra hit will amount to 25%. Now, on one hand, this is not the world's biggest deal from a strict tariff as impacting growth perspective. And that's from an analysis from a number of sources that were synthesized by The Economist magazine over the weekend here. And the sort of median guesstimate comes down to show that were this worst case scenario to occur, you would have a situation where you're shaving off about 0.06% from U.S. GDP this year as a consequence of the trade being disrupted by these extra tariffs, and 0.08% from European Union GDP. So it's not exactly the world's craziest hit. This then is something else. It's not about the economic implications of these extra tariffs. It seems more about the breaking of international norms, in particular, the threat to NATO. Of course, both the U.S. and Denmark are NATO members, and the commitment under Article 5 of NATO, whereby an attack on one member is considered an attack on all, wouldn't really make a whole lot of sense if one NATO member is attacking another. Now, that's not unprecedented. It's happened before. The U.S. and Europe have found themselves on opposite sides of crises, even shortly after NATO was created around the Suez Crisis in the 1950s. So it's not like this hasn't happened. Turkey and Greece have gotten into it on multiple occasions. So this is not the only time that we've seen the alliance threatened, but it is certainly the most serious in recent memory, and in that it involves the U.S., which is basically the muscle behind NATO, the more sort of serious it becomes. And the markets, of course, clearly are taking a similar page here as they pulled from the playbook when Liberation Day occurred last year, right around the panic close in late March, early April, because, of course, that was seen as an inexplicably damning policy for the United States, where were that to have been something that the U.S. would have followed through on as it was stated, it looked as though the U.S. was absolutely determined to keep living in a house after kicking out the house's foundation. Because, of course, to have disrupted commerce in the way that bilateral reciprocal tariffs looked like they could have at the time would have basically meant the destruction of the dollar recycling system that keeps interest rates relatively anchored in the United States, keeps our borrowing costs manageable, and keeps the government and the broader economy working, without which none of those things could happen. And then who knows what might occur. The US dollar and the US Treasury bond are bedrock pillars upon which the whole of global commerce stands. And what a trade policy like that would have meant was those things unraveling. And obviously, there is no playbook for that level of financial Armageddon. So, not surprisingly, once that very powerful signal came from the markets that, look, we've gone into sell America mode, you need to rethink this, not unnoticed by the markets, the administration went backwards. And there was a quickly 90-day pause on the tariffs, and then another, and then things were wound down to something different ultimately. Now, if you look at the price action today, you see something very similar. And this is where that decline in bonds makes a lot of sense. Now, going back here, we can see there's seemingly a risk premium that's entering the long end here. And so there's less so a conversation about interest rates here, interest rates there. That maybe is why we have such a modest move at the short end, because there's still rate cuts there. And of course, this kind of commotion only engenders more in that direction, maybe. But at the long end, where there is lots of uncertainty, lots of term premium to price in around situations like this, yields actually go higher, because this kind of commotion demands that markets be paid for additional time risk. That, of course, among other things, does the opposite of what the president wants on interest rates. It actually sends them higher, whereas, of course, the president is a big fan and a loud one of sending them lower. And if we look at the capacity for this to continue, we can see it here. We have a meaningful breakdown in the S&P. Tellingly, of course, it still had not made a higher high since late October, when the Fed told markets they were over-extrapolating rate cut expectations, and Fed Chair Powell basically chastised investors at the press conference following that FOMC meeting. We couldn't make a new high for that entire time. So all of November, all of December. Now, of course, we've been rejected from an attempt to do that was perhaps the most spirited in January. Not only that, but we've taken out the prior low. So it would appear as though the markets are trying to find their way to deeper losses, where this then becomes the next bogey. And after that, perhaps all the way back down here. The story in bonds, this is what sort of makes this a kind of sell America situation, is not much better. There was an attempt to break out last week on the top side, and clearly that's been overturned. And now it's looking like we're breaking down, not up. Again, we've taken out a major swing level here and established a lower low. So it's not unreasonable now to think about the September bottom as where this might be headed. And of course, to complete the sell America trifecta, here's the US dollar. Massive, massive euro rally today. In fact, the euro does better than all the other currencies for the most part, all the other major currencies, certainly. And that just seems to speak volumes about what the market's verdict on this is and who this is bad for. So when we look at this, we don't quite have the same convincing breakout as we do elsewhere. Again, with the bonds, there's a clean range break. With stocks, there's a clean break of a former low, and of course of the rising series of highs and lows starting back here from these lows in December, November or so. But for the dollar, it's a bit of a different story. We're still sort of clawing within a range in place basically since July, where the dollar has been, after an awful first 6 months of last year, basically stuck in consolidation mode. And the highs within this thing have been getting lower. So perhaps the dollar isn't quite ready to make a lasting run. I suppose we'll see what the president and his European counterparts come to in conversation at the World Economic Forum in Davos, where all of them now are. Maybe this is the place where everybody grabs them a scotch and figures this thing out. Gold, for its part, continues to surge. We have a new record high here. And because we're in uncharted territory, there's not really reference levels up here, but the natural sort of gravitational point psychologically might well be the 5,000 mark, just because it's a big round number with lots of zeros. But otherwise, the story in gold has been consistent. It's been about markets wanting a non-sovereign way to transfer value, in particular because the US and China are at odds, and the spheres of influence might become unstuck from each other and become increasingly siloed. Needless to say, what we're seeing here today just encourages that kind of thinking. And so, not surprisingly, a massive rally for gold. To sort of put the finishing touches on our analysis of the price action here, look at Bitcoin. It is down 6.25%, which of course tells us that if this was going to be some sort of anti-dollar, anti-fiat conversation, and Bitcoin were thought to be a viable alternative, things would look different. Gold clearly is seen that way and does look different. Bitcoin, of course, is instead doing its amplified risk sentiment thing, where it's got about a 3 times move of what the S&P has done, a little bit more. And that just looks like a risk on, risk off sort of a thing, where stocks are down, so Bitcoin is down more as a more speculative, more volatile type of instrument, pulling in the same direction. Now, where this goes from here is, of course, the most fascinating part of the story. And it really seems to go back to the disparity that the markets have been outlining and have been agonizing about for some time on monetary policy expectations. Less so because those policy expectations reflect this or that thing economically. More so because they reflect the market's abiding desire for a safety blanket to wrap themselves in the event of precisely this kind of left field volatility that we are seeing here today, and that may well be in the cards here for some time yet. We can certainly walk this one back. We've walked others back before. The tariffs are just one example. But we certainly have shown here a capacity for pulling volatility out of a hat where it wasn't necessarily there. This is not an economic release that went awry. The U.S. economy, by all accounts, seems to be doing quite well. Inflation seems to be going in the direction that the Fed wants it. That is to say, it is cooling. And the service sector side is where the cooling seems to be most acute. The tariffs from inflation on the goods side, at least as far as consumers are concerned, seem to be starting to plateau, as the Fed foretold. Although we do have some PPI data warning of issues maybe starting to creep up in the pipeline, but they haven't made it up to consumers yet. So far, so good, at least. And for the most part, things seem to be on relatively strong footing. And so what's most interesting, of course, in that context is that the markets have been rapidly demanding rate cuts. They've walked them back a little bit, but still the consensus forecast is for 2 cuts as overwhelmingly likely this year. This is what we've got baked in here into Fed funds futures, 45 basis points for this year. That's very strong odds of 2 cuts at 25 basis points apiece. So for a total of 50, we're under priced for it just a little, but only a little, only 5 basis points off. And of course, that is in contrast to what the Fed has told us, which is only 1 cut this year and another next year. So while both the markets and the Fed have 50 basis points through end 2027, give or take, the Fed is thinking in more spaced out terms, and the markets are thinking much more immediately. And that's ostensibly because of exactly what we're seeing here today. This is the Economic Policy Uncertainty Index. It tracks levels of policy uncertainty by analyzing news articles for the most part. And you can see this data is very old and very well worn. This is a historical series here going back to 1985. So clearly, there's a whole lot of examples here of this data and how it sort of paints the narrative. We can see here is the dot-com crisis. Here is the global financial crisis and the Eurozone debt crisis. Here is COVID. Here is now. And we can see that while certainly during the dot-com crisis, there was a meaningful concern about economic policy uncertainty and what was going to get done. Around the 08-09 mortgage crisis, the Great Recession, the financial crisis, the Eurozone debt crisis, all of which are kind of back-to-back here, not quite as bad as the dot-com crisis. Central banks have a little bit more credibility here, but obviously concern about what might be done. And COVID takes us to a whole new high here, of course, because we start using non-conventional policy measures at a clip that we hadn't seen in sort of the modern post 1970s fiat dollar era, like shutting down most of the global economy, say. But the situation now is essentially adjacent to COVID level uncertainty. And we can see the fuzz around the 30-day average here is very dramatic. That is to say, there's tons and tons of volatility here. And so it isn't so much that the markets are afraid of this or that thing, or the economy is doing this or that untoward turn economically. It's that there is a desire from the markets to have cheap money as a hedge in the event that one of these types of things, like we're witnessing right here, comes out of nowhere. People wipe out because their bets go wrong for no reason other than a strange U-turn in U.S. policy, and people end up losing money. They would much rather have lower interest rates to be able to borrow back and go again in that environment. And here's a specific trade policy uncertainty index. We can see here last year that there was this ugly spike. This was the last time we were in Sell America mode in April, so early into the second quarter. It has, of course, since come down because the tariff conversation has cooled, but the amount of volatility around these averages, this is a 7-day moving average and a 30-day moving average, or the amount of volatility around this still is very, very significant. Compare that to even the COVID year, where policy volatility is tightly wound around the trend averages. And so as we look at all of this, then we see that the volatility, even as a perception, is already having a negative impact. We see global trade volumes actually fell last year. Not only that, but in year-on-year terms, they fell by the most significant clip since the 08-09 crisis. This is worse for global trade volumes than COVID, in other words, with the global shutdowns. And of course, if we start to peel apart NATO, and the roadblocks to global commerce aren't just mainly along the US-China artery, which is of course critical, but it is also along the US-Europe artery, well, then we've severed the connective tissue between the US and both of the other two major nodes of the global economy and of global GDP. More than half of global GDP is just the Eurozone, China, and the US. With the US roughly around a quarter, and China and Europe just under a fifth apiece of global GDP. And so we're looking at already this uncertainty driving down commerce and creating roadblocks in key supply chains. If there were a geopolitically motivated rupture in relations with Europe, that situation would only get worse. And of course, that is a tremendous risk to something like the AI sector, which has been almost singularly the engine for equity market outperformance, because as we can see, this supply chain is tremendously integrated across borders. While 38% of it is in the US, understandably, because most of the leading models are here, the supply chain is deep. The chip lithography, for example, that's necessary, that's in Europe. That's in the Netherlands. And of course, that relationship would suffer, though that access would suffer were NATO to be stressed like this. Needless to say, a huge chunk is in Asia as well, of which China, of course, is a major component, but so are Taiwan, Japan, Korea. And so this sort of thing is a direct risk to the very things that have kept this market relatively aloft this whole time. So the question now, of course, is perhaps less about this or that economic development and more about what this will mean for the conversation at Davos, because it seems like that is the forum where something like the current situation might actually see some kind of movement in a direction. But nevertheless, we do have a bit of economic news on this calendar for the week. It isn't much. We've got the backfill of U.S. PCE data. That's the Fed's favored inflation gauge, but that's not going to be the recent numbers. We, of course, have CPI up to December now. This will be the PCE report up through November. We can see the expectations here are for a little bit of a downtick on inflation, but it's really an open question as to whether that matters to anyone, because, of course, the data is already stale. Moreover, there are bigger fish to fry here with everything else that is going on. And then from a positioning perspective, there's not too much to change. We have this gold exposure that's going to come up on contract rollover next week. So that's something to think about. But for now, I'm still sitting in the February contract, and that seems to be working. I haven't jettisoned my US dollar longs because, as we mentioned, it seems to be less inclined to go down than our stocks and bonds. I've flipped over my long end of the curve position. And of course, last week, as we talked about, I took this hedge in the belly of the curve. This is IEF that is a tracker of 7 to 10 year U.S. Treasuries. And I got a put vertical on here last week, looking for maybe fewer rate cuts sooner, more rate cuts later kind of an idea. Now, of course, I've flipped over TLT into a put vertical as well after this breakdown. I'm still long oil. I'm still short risk via the Qs and SPY, so both NASDAQ and the S&P 500. Those put verticals remain. And I'm still on the call vertical side of Bitcoin in IBIT, but if it breaks much lower from here, that might have to get overturned in the opposite direction. See how that goes here in the coming days. This is Macro Money for today. As ever, we are here after overtime. That's a show that I co-host with Chris Vecchio, looking at the Wall Street close and where things might go there from. I'm writing for the news and insights portion of tastylive.com and commenting at Ilya Spivak on former Twitter and on Blue Sky. If you're watching this on YouTube, like and subscribe. Macro Money is back tomorrow. In the meantime, happy trading.